Okay, having said this, we actually moved on already. So another of those panels that I really looking forward to do. I've invited everyone personally to see and make it happen. And together with Manish, I'm heading PE in Chirag's team, and we do a lot of the. We thought it would be relevant to not just have another VC discussion and another thing how I invest. So what for me was important to showcase here, and I think we have the right people with us in on this panel. There are different ways of getting money for different kind of stages of the company. So this is why we call it the Create Capital debate. We want to look into, we see most startups know, and not everybody is ready for VC. Many should at least stay with business angel and stay there and not doing anything else, because it gives you a different kind of pressure if you're doing with VC. But there are other opportunities, right? So if you have an existing business and you partner up with a private equity company, you can actually build a huge insurance company out of it. There are ways, and we will have Basel talking about it, I guess, where you can find alternative financing schemes in a different way. So this is the panel about. I welcome the moderator, Ingo, a close friend to me and business partner for many, many years on stage. Ingo, you're here, Ingo. And then you get the rest of the team on board. Thank you very much for joining us.
Okay, good morning, everyone. If you don't mind, if people want to come a bit closer as well, if you want to sit in the first two rows, we wouldn't mind. First of all, thanks, Lars, for the invitation and putting this panel together. We're really excited. So I would say we really have brought together the leading minds of investing in the MENA region. So I'm very happy. Manish, do you want to come over, please? Manish is, we'll do a proper introduction. Manish is leading all the alternative investments at QIC. Basel, I've seen you there. Basel, founder of Key Capital. And where's Omar? Omar from Shuruk, leading fintech investor in the region. And also Yusuf, founder of Joa Capital. Perfect. Okay, great. By way of introduction, I'm with Apis Partners. Apis is a private equity firm focused on fintech, mostly emerging markets. And I'm looking after our early stage Insurtech investments. And I think maybe just passing the micro, making Basel, if you want to make an intro about yourself, and then we go the round.
My name is Basil Mafta. I'm the managing partner and founder of Key Capital. It's the region's first secondaries focused VC fund. I've been in VC for the last 10 years here in the region, and career-wise started in California with the Greenhouse Fund, which is a CVC as well for the Reuters Corporation. So long track record doing VC, but also very concerned about what's going on.
Thanks for having me. I'm Manish Mittal. I run the alternative investment program for Epicure Investment Management, which is the wholly owned asset management subsidiary of QIC. We invest across largely illiquid asset classes, so private equity, private credit, growth, VC, real estate, largely investing in funds, as well as co-investing alongside our GPs.
Good morning. My name is Yusuf Al-Yusfi. I'm CEO managing partner at Joa Capital, which is an alternative investment firm out of Riyadh. We run a early stage venture fund named S3 Ventures. We're sector agnostic. However, we are bullish about Insurtech, fintech, and health tech, focusing on Saudi Arabia, but also investing in the wider MENA region.
Hi everyone, good morning. I'm Umar Zabit. I'm a partner at Shuruk. We're a multidimensional investment firm. We invest cross stages from pre-seed to Series A on venture, and then we also do growth equity and private credit across MENA. And personally, I'm an operator turned investor. So very much excited to be on the panel and talk about the blossoming Insurtech space in the region.
Excellent. Before we dive into the first question, maybe a few remarks on what's happening on the global Insurtech landscape, because we've seen a massive downturn the last couple of years. We've seen many investors leaving the field. The tourists are gone. Cap tables have been reset to a large extent. Sellers are now coming up with more realistic price expectations. But also in Q1, we now saw a dramatic increase in Insurtech funding globally, going up over 90%. And we also see big M&A coming back, right? Munich Re acquired Next Insurance for 2.8 billion. And also notably, as we see the role of insurers and reinsurers in the funding space, right? More than half of all the deals in last year, insurers and reinsurers and their CVC vehicles have been involved. Okay, sorry, that shouldn't happen. That's very remarkable. So if we dive into the MENA region, so that the big question is, yeah, what kind of capital is available? What's the right capital to fund Insurtech businesses? And maybe Basil, let's start with you with your thoughts. You've been around for a little while.
Yeah. There's quite a number of things happening, and there are overlaid trends, if you like. So on the global front, obviously, there's a cycle in VC that's going on after the 21, 22, maybe even 23 kind of valuation craze around fintech and insurtech and a number of sectors. We call it the post-COVID kind of boom in VC. You alluded to it. I think many people are aware that there's a bit of a correction and a bit of a kind of coming home, if you like, around what is the true value of these companies, how fast are they growing, what valuation should they be at. That's a normal cycle. It happens every period or so as more money comes into the tech sector around different things. And by the way, we're setting ourselves up for AI, so that will be the next one as valuations there go crazy, as they are right now, and then there'll be a correction for that. But layered on top of it is a change in behavior around what's happening in VC in general. How do you fund technology companies? How much equity do you need? Does AI enable companies to build faster for cheaper price? At what stage do you really need to get to profitability? And there has been a bifurcation, if you like, in the community. There are those who still believe in the hockey stick model, high growth, invest heavily upfront to capture market share, etc. Let's call that old VC or traditional VC, if you like. And there's a number of other thoughts that are evolving into using debt, using a more private equity type of model, rolling up M&A, rolling up assets, etc. The problem with talking about it in general is that it manifests itself differently in each market. So if you think about the Middle East, just to take what's relevant to us here in this conference, there's a really good case to be made that no one, in certain sectors, no one startup will be able to scale large enough to be able to achieve the returns expected, and that rolling up some of these assets together, or M&A, if you like, makes a lot of sense. But the complexity of that with regulations, etc., becomes another challenge. So I leave it at that to say there's quite a lot of introspection happening in VC. There's a lot of people thinking about what's right, what's wrong, what's next, what should happen. And there's a lot of new strategies, I guess, coming out as people try to think of how the model can evolve.
No, excellent. Maybe, Youssef, you have been investing in some Insurtech businesses, amongst others. You also bring the lens from Saudi Arabia. So what's your experience and your view on what type of capitals make sense?
So even though we do invest in Insurtech, we don't think VC is always the best solution. When we talk to entrepreneurs, let's talk about debt versus equity versus VC, private equity, corporate partnerships. There are many ways to launch an Insurtech fund, especially in an environment like Saudi Arabia. Until recently, when the regulator was part of the central bank, and that meant that everything had to be scrutinized with an extra careful lens. Everything was was difficult to do. I mean, companies were more conservative because, the market was very competitive. So in Saudi Arabia, and I think in the wider region, there are many, many examples of tech companies or insurtech companies and also financial services companies that were, spun out of family offices, or, they were funded by their first customer. I can cite a very successful example, very well known. It's the most successful insurtech in the region. Its name is Rasan Technology. It owns the brand Ta'mini, which is the leading insurance aggregator in the region. I had the fortune of advising that company about 7, 8 years ago when they were starting out, and they were funded by their first partner. They partnered up with a traditional broker who believed in the technology, believed in the team, and gave them their first check. It was more like a debt check than an equity check because they took the equity up front. They said, whatever funding needed, we'll fund you. And then they had a revenue sharing model. And that was massively successful. We saw a lot of other aggregators across the region fail to raise additional rounds, mainly because the sales cycle and the regulatory cycle are simply too long for even VCs to tolerate. You need an insider in the insurance industry to understand what it takes to succeed and to understand the risks involved, and also to be able to assess the competency of the team that's launching a new concept. And that's why I think VC is one of many tools that entrepreneurs should consider in this sector.
Yeah, excellent. Well, we didn't prepare the next question. I mean, are you prepared to talk about VADA? You also an investor in VADA, which I
Yes.
Which I
So,
learned
so
about.
WADA is addressing a big gap in the Saudi and I think the wider GCC market. I think in every Islamic country, Islamic majority country, Sharia compliant structures for life insurance have been lacking until very recently. So now that there's a framework for people to feel comfortable buying life insurance and doing saving plans with life insurance embedded, and with governments pushing and adjusting policies to incentivize people to save more, we believe this industry is about to grow rapidly and to catch up with the global averages in terms of percentage of people who buy life insurance. Right now, I don't have the figures off the top of my head, but it's almost 1/10 the global market share, or let's say percentage of customers, or percentage of industry size, the ratio of the industry size over the GDP. So you look at all the figures, it's a tiny, tiny industry. And there are new developments on the regulatory front and on the Sharia compliance front. So we're very bullish about the potential of life insurance. Plus, the WADA team has been excellent at executing in its home market in Pakistan. And they understand the Saudi market quite well. They've built the right partnerships and hired the right team in Saudi. So that's what informed our conviction and to back WADA.
Okay, excellent. Maybe Omar, you're pure play VC here in the region, very well known, deep expertise. What's your view?
So on Insurtech overall, historically, we've not invested in a pure play Insurtech firm. We've looked at numerous of them. And one of the internal sort of obstacle we usually run across is the overall TAM size for various business models that we've seen, right? Coincidentally, what we've ended up investing in are companies which are serving insurance companies, or are maybe health tech but are overly reliant on insurance companies, or maybe sort of automobile marketplaces who have a link to insurance as well, right? One of our companies, Scientecture, they're in the business of revenue cycle management and doing medical coding, and they help providers improve their claim rates with insurance companies. So they actually operate on the other side. And now they're actually selling into insurance companies to help them process those claims a lot more faster and efficiently to improve their own cost structures as well. So I think these type of infra plays is something that we're really excited about across sectors. We like picks and shovels businesses, which may be in the insurance space, which may be in the health tech space or fintech space. And we sort of want to continue to back them across the region. And that for us is a lot more defensible and an interesting proposition as long as you enter at the right sort of price. As far as Forward looking, like I think we're going to talk about it separately. I am personally very excited about full stack AI insurance companies. And I think in this region and even globally, there should be companies who should build there. There's a big question mark on distribution, but outside of distribution, there's a lot of things to be done on the cost structure, on automation, on even back office processes as well. I think that is an interesting space, forward-looking, that we're keen to understand more and find relevant teams across UAE, Saudi, Qatar. But overall, we've tended to shy away from pure play Insurtech companies in the region.
Well, thanks. I mean, but so you're saying total addressable market maybe is too small for funding a pure play Insurtech?
For us, the kind of models that we saw. So historically, we saw aggregators. I think we were a very small investor in Sukal Mal back in the days, right? And this was when we were doing SPV structures 8 years ago. And they also executed, and there are a few aggregators across the markets which are now big. Then the few companies we saw were not really interesting for us. Like even on the embedded insurance companies that we saw, they were not able to prove to us their access to incumbents and distribution channels, or even on the banking side or telco side. Right? So embedded players do not need to work with insurance companies. So they need to be in various different channels as well. So those particular companies we were not supremely keen on investing in. And by the way, I'm not saying that there aren't large companies, insurance companies in the region. Like we're here thanks to one of them, right? So that's not the point. The point is purely on the startup space, early stage. Do we find interesting business models and teams which we believe can create sizable companies from the region? That is yet to be proven, and I hope that we are wrong on that.
Very excellent. I think speaking about capital sources, I think as we discussed earlier or heard earlier, I mean, CVCs play a big role in terms of funding startups. Manish, what's your experience, and what are the things that you're looking at?
Sure. So I'll caveat this first by saying I think we're still in sort of the early stages of really, I'd say defining and implementing a comprehensive CVC strategy. But we've started. We have made a couple of investments, and I would say the key themes around what we've invested and why we've decided to, I think, were one is finding a team that we think is one has the experience in executing and is capable and knows their space and is capable of executing on the strategy, and then the second would be geography that we're interested in. So one investment we made was a company, Amenly, in Egypt, a company Basil is quite familiar with. This is an insurance aggregation play. The team had a very experienced team, already had experience successfully growing a startup, really thoughtful about how they were approaching insurance aggregation in Egypt. We thought they really had the skills and the tools to be successful. And then they were executing this in a country that has been very interesting to us, Egypt, which, again, just look at the size of the population. The level of insurance penetration is extremely low. The loss rates were very attractive. So really had very compelling dynamics in a market that we're interested in. So we found a company that we thought was going to really execute on the strategy well, and we would sort of have a front row seat in really getting a better sense of that geography and how we could be a part of that ecosystem going forward. Another would be what Hussein's talked about, and you guys, many of you would have heard yesterday, they received their MGA license in Saudi, one of the first companies in Saudi to receive an MGA license. MGAs are a concept that we really like. We know them well. We've owned MGAs. This is a team that has already successfully executed in Pakistan, so they know what they're doing, and they're really putting a lot of focus on growing their business in Saudi. Obviously, life insurance very underpenetrated. Being one of the first to get the MGA, we think they can they're hitting the ground running with an early advantage. And again, Saudi is a market that we're very excited about. Earlier, Chirag had mentioned we're planning to open a branch office there. So this is clearly a market we've been watching for a while. And again, I think being a part of their journey helps us just understand that geography very well. So again, it's about finding teams that we think can execute a strategy, and then in geographies that are interesting to us.
Yeah, no, great. Yusuf, from a Saudi Arabian perspective, I think there are a number of banks rushing into doing strategic investments. So what do you see there on the insurance side?
On the insurance side, we're not seeing the same traction we're seeing in banking. So you have many of the banks in Saudi setting up their own early stage investment vehicles, some venture building initiatives. Some of it is driven by the companies themselves. Some of them are almost like CSR initiatives to, show that, the value to the community. Sometimes it's hard to differentiate which one is which, but in general, as independent investors, we always are very selective about the engagements with these large corporate initiatives. Some are very serious, some are not. Certain investments they're serious about, and certain investments they're not really profit seeking or return seeking. It's more of a strategic R&D type investment. So I would say there are banks that have set up successful teams, and we admire them a lot, but not all of them, I would say, are executing the way that we want them to. Insurance companies, we notice them doing it almost under the radar, not to be noticed. I happen to be on the vice chairman of MedGulf for 7 years until a few days ago when I did not renew my term. But the company in MedGulf, we would make investments, but we would not announce them. Ta'awaniya, for example, has made an investment through an independent manager, but doesn't want its name to be announced in certain deals. The largest Bupa Ventures, we don't see them a lot in deals, but we know they're making investments, small tickets here and there. So I guess it hasn't really been as high profile as the banking involvement in the venture ecosystem. And I think one of the reasons is because they haven't really seen enough success stories to encourage them, even globally. I mean, we're talking about this is the great debate, or the great capital debate. I think one component that is not mentioned in the title is human capital. There's extreme scarcity of insurance professionals in the entire region, and especially in Saudi Arabia, with a regulator wanting to nationalize all the C-level positions, make sure everyone is well trained. Having every company has an actual leadership development program. So the focus of these insurance companies is to breed the next generation of leaders. And the focus of leaders in these industries is to rise up the ladder, because there are so many opportunities within the traditional insurance sector. So that makes it very difficult to attract talent from the insurance sector to actually take the risk and build new concepts and new businesses. And that really affects the attractiveness of the sector to people like Umar, who says, we haven't found enough attractive companies or attractive business models. And that's, I think, a function of the scarcity of talent that can't really execute on the opportunities that everyone is seeing.
I think that's an amazing point. I think that's something we've seen in other markets as well. It takes talent to build an ecosystem, but I think we also need to see some exits, right? I think that's also, if you have seen exits, and then you have maybe founders who can seed new companies. And so speaking about exits in the regions, or in the region here, so we haven't seen a lot. What is the major hurdle? I don't know, Basil, do you want to maybe kick that off?
Yeah, so that's like sitting in every LPGP discussion that's been going on for the last few months. There is a sentiment definitely that there aren't enough exits, right? And the numbers support that, except if you start to look through slightly different lenses, right? So if you look at the secondary market, which is where we operate, there's been over $600 million of exits that have happened over the last 3 years inside rounds, right? So you hear about, Sella raising X, Y, or Z amount. What's really happened inside of that is some of it's primary capital and some of it is secondary capital, right? Which means people are able to get some exits. And obviously, and it's no doubt that my firm believes, or I believe, that this is going to go on for some time and become an important part. But it still doesn't take away from the fact that the ultimate liquidity, which is IPO or M&A, has been very, very slow, right? There's about, I don't know, over the last 10 years, something like 10 IPOs. And if you add that all up together, it doesn't add to the total amount of capital that has gone into the sector yet. And so it creates this sense of feeling that investors have been providing capital, but not receiving capital back. And so there are definitely some hurdles and challenges there. Now, what I find interesting, though, is the Middle East is always full of irony. So the biggest IPO globally last year happened in the Middle East with Talabat spinning out of Delivery Hero. One of the few ever Insurtech IPOs happened last year in Saudi Arabia. So, you know, the irony is that we are not, let's say, the most liquid market around the world, for sure. But absolutely, there's been activity, positive activity in terms of providing liquidity to investors. How do you solve it? A lot still has to happen structurally. We have to accept the fact that companies will stay private longer. Private equity will need to come into play and own it. Corporate owners like QIC and others will most likely end up being one of the M&A paths for some of these assets that they scale, as we heard earlier with, you know, the Oman business. I mean, I think you'll see more and more of these family offices, large family offices and corporates buying technology assets as they become profitable and provide a nice dividend, etc. But it's going to remain messy. It's going to remain, you know, a tough market, and there will continuously be a battle between the startups, if you like, and their investors in terms of who's the right owner or the rightful owner of a business.
Yeah. No, but I mean, what is great, I mean, you mentioned there has been an amazing IPO here, which has done very, very well. Yeah, maybe, I don't know, Manish, do you want to say 2 or 3 words about success stories we have seen here, but also globally?
Yeah, so I think Rassan's obviously been incredibly successful. Stock price today is double what it was when it listed. I don't think there's any Insurtech globally that's been that successful. Obviously, you had in 2020, 2021, you had a few Insurtechs list at what were obviously at that time incredible valuations. Those had come back down to earth, and what you saw, most of those models were really focused on sort of disintermediating the middleman, the broker, right? And whether it was Lemonade or Root or Hippo. So these are businesses that I think they were just hemorrhaging cash. They were loss ratios that were unsustainable. And I think a lot of people started questioning the whole possibility of being able to actually disintermediate brokers. I think, you know, they said, well, this can't be done. This is a traditional way insurance is done, and this is how it's going to be, and it's not going to work. And then, you know, that was sort of the early thinking of you know, the first few quarters after these companies listed. But then, you know, you fast forward a couple of years later, actually some of them are working, right? So you're seeing Root has now become a profitable business with strong combined ratios, growing very fast. Stock prices rebounded dramatically. Lemonade also getting very close to profitability now, continue to reduce their loss ratios. So I think that model is now showing that it can work if done the right way. But I think, you know, so you're starting to see these companies that look like they maybe didn't have a working business model show that now they do have it. And so I think that paves the path for potentially a lot of interesting exits in the coming few years. I mean, you've got a couple of companies that are now of size that probably can list. Boltec, obviously out of Singapore, sort of democratizing embedded insurance. You've got one of our GPs is invested, has been a longtime backer of Kin Insurance, which uses technology to do property insurance in high risk zones. So that company is doing very well, now profitable as well, probably will be listing within the next year or two. So you do have, what's interesting is I think in Q1 this year, you had, as Ingo mentioned, you had a huge spike in Insurtech funding. You had $1.3 billion of Insurtech funding. I think the interesting thing with that number, though, is that this was the lowest early stage Insurtech funding we'd seen in 5 years. So most of that money really went to growth companies, later stage businesses. And so I think you're starting to see these winners emerge. And I think you will see a lot of companies in the space probably IPO within the next in the next year or two.
Yeah, well, excellent. Maybe Yusuf, do you want to? You've been following the Rasan story closely. A lot of insights. Any comment you want to make on?
One of the mysteries that maybe Manish or anyone in the audience can help me answer is how come we don't see a lot of M&A exits globally in Insurtech? I see far fewer insurance companies buying PE or VC-backed companies than I do see them in banking or telecom or any other industry. And a potential explanation, and maybe others can offer other explanation, is I think in insurance the incumbents hold enormous leverage, and they have a huge advantage that is a very difficult gap to fill by a startup or even a PE-backed small company that scales up. But that's also affecting the inflow of capital into this industry and the innovation in the industry. So I don't know if Manish agrees, but how come I don't see any M&A team for any insurance company anywhere in the world?
Yeah, I agree with you, and I think you alluded to what I think is probably one of the key reasons is insurance companies have usually most of them have the large ones have obviously been around a long time. They have a business model that has not really changed dramatically over the many decades. And so they've got this entire infrastructure that's in place to do a specific thing a specific way. And so integrating a new business, a tech business, into that very big, slow machine, I think is just such a challenge that it's not been done enough. Hopefully we'll see that change.
Yeah, and I think from conversations we have with insurance companies, of course, I mean, many have burnt their fingers, and I think there is interest. I think the interest is increasing, but they very often they look for really profitable, super profitable companies. So they're not really, many of them are not really interested in also helping or more on the growth side, where we're still EBITDA, they're still whatever below break even. So I think that's definitely one topic. Insurance companies being super risk averse compared to banking. But I think we're getting to the end shortly. So I think we have a time for maybe a final question around predictions. Everyone loves talking about predictions about the glass ball. Where do we think? What are the interesting spaces? Where do we think capital will flow into over the next 3 years or so? I don't know who wants to. Basil, do you want to take it first, or?
I'll take a first stab just to set it off, and then I'm sure I'll get corrected nicely by my colleagues here. First of all, I think like I said at the beginning, I think there's going to be a lot of different new models, and I think Yusuf mentioned it quite well. Not every startup, and this is my advice always to entrepreneurs, needs to raise VC money. In fact, it would be good if you can avoid it, because the promise that you're making or the relationship you need to have is one which has a certain curvature, if you like, or has a certain return profile. Places like Insurtech, there are better ways, in my mind, to fund your business. And I think you alluded to the idea of partnerships or customer supplier funding, debt, etc. So if I had to predict what's going to happen in this part of the world over the next couple of years, I think entrepreneurs will get more creative and seek other forms of capital, whether that's as simple as private credit, venture debt, you call it, or whatever format, whether it's through partnerships with corporates and strategics, and many of them will avoid VC. And I actually think that's healthy, right? Because I think that creates, that alternative creates tension around what is the real return and what are the, what are the kind of profiles of companies that should be VC backed.
Excellent. Yusuf, do you want to?
Yusuf wants to correct me, so I mean,
Yeah, I think I agree with that. Obviously impossible to say where capital is going to come in. I do think you'll probably see more capital coming into companies that are disintermediating middleman, because I think we're starting to see that work. Obviously, AI, that's the easy answer. I think within AI, it'll be where you're seeing things work is really AI solving the kind of more boring, repetitive processes underlying in insurance businesses, rather than figuring out a better underwriting model or figuring out how to acquire customers. I think that will still largely remain with humans for some time. So yeah, those are some areas I think capital would go into.
2 words: trade war. So I think we're very fortunate to be in a neutral zone with the largest trading blocks nervous about what's going to happen, who they're going to be able to sell to, where they're going to be able to do business. I think the Chinese companies will start investing more heavily into our region. Their innovation model is completely different than the Western model. You see a lot of incumbents leaving the Insurtech revolution. And we're already seeing them trying to do 2 things: collaborate with incumbents in the region. So they're more active in reaching out to insurance companies and insurtechs. Second trend is activist investing. So I wouldn't be surprised if certain Chinese companies, especially in the AI realm, just acquire companies in multiple sectors, including insurance, to just transform them, just because they've been managed in very traditional ways. And the Saudi stock market has close to 30 different companies. Most of them are not worth that much because they're too small and subscale. So it provides an ample opportunity to actually transform the market. And the fact that they have a smaller footprint to do business in the world means GCC now is more on their radar. So I expect a more observable Chinese influence over many sectors, but very important. I mean, insurance to the Chinese market is very important, has proven to be a very innovative sector. So China influence, I think, is going to grow.
Oh, excellent. Very insightful and quite spicy. Omar, I mean, you mentioned already in your opening statement what things could be interesting. Anything to add?
So broadly, like as the panelists said, I think the space will be a lot more interesting outside of venture, and I think I do agree with that. Broadly speaking, one avenue I see where venture can still be a play are pure tech companies which are serving insurance providers or stakeholders of insurance companies, right? It could be health providers, it could be automobile companies. So I think either through a embedded finance company or allowing for better claim processing, I think those pure technology or enterprise AI or enterprise technology companies could still be interesting. But I think most of the exciting work will happen up the curve, not really in an early stage venture, at least in the foreseeable future. I'm actually quite excited. I wouldn't say excited. I'm actually intrigued to see how the Chinese sort of infiltration into the region across sectors will look like. They've already started on consumer, but we'll see what else they do.
Yeah, definitely a very exciting time, both from a technology perspective as well as geopolitical perspective. So I think we're done unless there's any burning question from someone in the audience.
A quick comment. Just he said excited, intrigued about Chinese entrance. I don't think any of us on the stage will benefit from observing the patterns of them entering into countries. VCs they typically don't really benefit from that trend, but it's an observable trend.
Okay, quite controversial maybe, but I don't know if there's nobody raising. There's Rabi, of course. That's perfect.
Thank you for a very exciting panel. Just very quickly and something apropos, comparing the insurance sector to, let's say, the telco sector you mentioned, corporate VC. We've been managing with Zen Group, their corporate VC, since 2015. We hope things will accelerate in the insurance sector also. Maybe some comments on that, maybe Manish. Thank you.
Sorry, the question was on what?
So telcos in the region have been doing their corporate VCs about 15 years ago. We've been working with Zain since 2015.
Right.
Tirad has one, Du is working on one, Mobile is working on one, SEC has a fund. How about some acceleration from the computer side to build larger corporate VCs?
Are you referring to outsourcing our corporate VC to possibly a VC fund? Yeah. Well, I think, look, as I said, I think we're still in the early stages of kind of defining our CV3. But I think partnering with the outside partners, with those who spend their entire time, guys like you spend their entire time understanding the VC ecosystem, is going to be imperative to us being able to be successful in this. So we do hope to grow this. This is important for us. And I think partnering with the right players is going to play a big part.
Oh, here's another question. Last, we have time for one more question.
Thanks everyone for this insight information. It's just a very, very quick question, and I might be wrong in my conclusion. But I take your point regarding there is a lack of resources in the Middle East of coming up with generating ideas and so on. Sometimes it happens. But key question to you as VCs, why is it all the time that most of the fintech idea or insurtech idea implemented in the Middle East is copycat from UK or Europe or America? And whenever that even the 1 in 100 resource that come up with a good idea and present it to you guys, you're just waiting for this idea to be validated in the West world, and it's working. And then yes, when it's working, yeah, you can implement in the Middle East. Why is it you're not waiting for an idea to come from Middle East and it sprouts, the vice versa way of traffic? Why is it? Venture capital at the end of the day, you're taking risks.
So maybe, Ali, I believe this is time for the next panel. Next year we discuss this, and because we have discussed it several times, I would leave it like this, because this will open up another panel. Thank you very much, gentlemen. It was a great pleasure to have you with us. We have one photo together, all the prominents. So let's have one photo, please. Thank you so much. And while our Cray Capital guys are moving from the stage, I just want to answer quickly on what Ali asked, to not be rude. It's a topic that we have discussed in the last 4 years in this conference. Why do we have that many copycats? And this is really what you said in the beginning of the question. We're missing the right talent to ask the right question, because copycat will never work. So I don't believe it's the question to them, because they need the right founder to find it. I think they have the right answer. They don't backing anybody because it's a copycat. So we don't have everybody copycat. So yesterday, you've seen, and Lara was with me on stage. I was on stage. We announced VADA. You look into our mainly the companies we invested, a couple of others that we invested. So we see these founders that are able to see a business model and actually move this business model to the right context here in the countries. And we see it vice versa, especially on the fintech side. We have things here that work in the region that I have not seen outside. So we actually have a lot of going on. But yeah, it's the majority of our ecosystem in the wider region is still not there. Yeah, but we are getting better. Okay, I know. Let's have a roundtable on this. So next year we do it in the panel. Thank you so much, guys. Yeah, I love this discussion. Thank you. So coming to the next, again, I would invite him as a close friend, a personal friend. We've been doing business for a while as well. Yeah, I thought my team will move, but now they move. Federico, please join me on stage. Now you're there. You have been long years in insurance, longer than me actually. And we share a little bit of gray hairs together, so this is good. 25 years. So no, put it on.
Been 25 years in the insurance industry,
That's much longer than me. So
always in the corporate side.
yeah, we want to hear. This is why I invited you, because I wanted to actually see together with you the learnings that you had on you built companies and you sold companies to insurance and you stayed as on a C-level insurance and you're going back to Insurtech. I hope in the next 10, 15 minutes we learn about this. So welcome, Federico, to the stage. Thank you.
Thank you, Lars and QIC for hosting me, and very pleased to be here. Good morning, everyone. My name is Federico Spagnoli. I'm the founder and CEO of Gankar. I'm going to share a bit more about what Gankar is, but before, I wanted to share a personal story, okay? And I have a couple of witnesses here in the audience who can keep me honest if I'm not stating the truth. As I said, I spent almost 25 years in the corporate world. I wasn't planning to become a founder. I was planning to stay in the comfort of the corporate world, but something happened. If I had to ask you, imagine your dream shop, what would you think? I mean a real shop, not opening a bar in Dominican Republic or, Well, in my case, since I'm originally from Argentina, and I spent, many years in the insurance industry, one of my dream shops will be to run Latin America for a large insurance corporation. Or, I spent most of my career in the consumer insurance space. So another interesting job for me will be to run consumer insurance for international insurance. Well, in October last year, I was having both roles at the same time. So I was honestly living the dream, as they say. But things happened, or as they said, excuse my French, shit happens. All of a sudden, I lost that opportunity. And as I explained in the title, I was not planning to become a founder. However, I did have a number of really, interesting ideas that if I had a chance, I wanted to test. So the following day, after I knew about this news, I started Gankar, and I wanted to share with you my lessons learned in the past almost 6 months since I started this company. So first, what was my inspiration? Having spent so many years in the industry, I'm obviously very aware of the pain points, all the different challenges that we face as an industry. And I was inspired by the Gankar mountain. I don't know if you are familiar with Gankar. It's the highest mountain yet to be conquered by the man. It's located in Bhutan. It's considered a sacred mountain. And for me, it was a good analogy with the insurance industry, right? If we compare relative to banking, or as we were discussing in the prior panel, you don't see many insurtech displacing the incumbents, right? In most markets, including the US, Europe, how many insurtechs are taking material market share from the incumbents? So honestly, for me, I still feel the industry is still untransformed. There is a huge protection gap, and those the big opportunity for a lot of us. Try to buy homeowners insurance in the US. It's really a pain. The products remain literally the same, even though there is some initial, impact from digital or data. And finally, most of in particular in emerging markets, the penetration of insurance remain quite low. So what can we do to accelerate the penetration seamlessly using embedded insurance? So those were kind of, if you will, my drivers to think about. And that is why I founded Gankar. That is the name of our platform. I'm gonna first explain the immediate next step. If you are thinking about starting a company, at least this is what worked for me. Coming from the corporate world, as you know, we are exposed to rigid planning, control systems. So it's all very well organized. There is a lot of methodology. And what I realized when I moved to the entrepreneurial space is that there is also a playbook. So if you want to raise funds, there are certain milestones. There is a formula, if you will, that if you follow that formula, everything comes together. At least that has been my personal experience. So first, make sure you have a very strong idea, that there is what is referred as a product market fit. So there is a commercial viability. And what I did initially in my first months, starting this company, is to really talk to many people to understand whether they will be potential clients or partners in this journey. Second of all, make sure that you build a team that is built for purpose, right? So making sure that you have complementary skills, especially in critical roles. So when I was talking to a VC that was planning to invest, they said you need to make sure you get a world-class CTO. So that is what I did. I went after a number of candidates and I secured a very strong CTO. So those are very important considerations. Then, as you know, there are a number of ways how you can start a business. Bootstrapping is one, so self-funded. But for me, it was not in a way too honest, because it's easy to start, relatively easy to start with your own money, but how do you know it's the right idea if you are not validating this also with prospect investors? So in the first months that I started with the idea, I was able to secure the funding for our pre-seed round. That was because we validated the idea, the investors believe in the vision and the idea, and also because we started to secure a very strong team. Last but not least, we didn't want to wait too long to start getting out of the building, right? Talking to potential clients. So in the first months, I met with a number of potential prospects. Even though we were not ready, I just wanted to get some initial interest. And funny enough, even though I was not trying to really sell yet, some of them, they started to say, when are you launching? I want to be your first client. So what are we building at Gankar? So let's talk now from vision to execution. So you can see some of the key points that or steps that I took to climb the summit. Now, our vision for the business model is literally to become the Shopify of insurance. So we want to enable, if I want to accomplish at least my vision of how we can be part of the acceleration of democratizing access to insurance, what I realized is similar to what Shopify does for e-commerce in terms of giving you access to a website or digital presence if you are a merchant, to logistics, distribution, shipping if you are a manufacturer, a number of payment gateways, logistics, etc. That is what I wanted to become as Gankar, an enabler. So if you need reinsurance, I can help you with that. If you need fronting, I can help you with that. If you need licensing to intermediate insurance, I can help you with that. I'm going to explain in a second how we do it. But in terms of we're a tech company. We're not an insurance company. We are not pretending to ever take risk. We're pure tech and data company. And to certain extent, logistics. And we serve both part of the platform, the supply and the demand. The supply being the insurers, reinsurers, and the demand, the distribution partners. Now, we like to use the analogy of the iPhone, just to summarize how we bring our solutions to market. In which way? As you know, in an iPhone, you have a number of solutions bundled into the phone. I don't know if you know, but when you think about hardware, there are more than 2,000 vendors in an iPhone. In our case, we are not pretending to manufacture everything that is within our platform. What we guarantee a seamless experience, an end-to-end solution. If you want to get into embedded insurance, as I said, I can develop the product for you, design the program for you, integrate and launch the program for you, optimize and run the program for you, and everything else. Or I can do just one of these few things. And to do that, obviously, we are building an ecosystem of providers and strategic partners that are helping us to deliver that. Again, our model is very capital light, so we can't do everything on our own. So it's very easy for us to deploy these solutions across the globe because we don't need to manufacture or hire an army of people to do this. So you can see some of the names. Sherpa Plus is our seamless API and integration product configuration platform. We can integrate and configure both live and non-live products anywhere in the world. Sherpa Lens is our proprietary technology. It's basically LLM models, machine learning to help you to segment your customer base, have very clear analysis of your clusters, and then we help you to optimize the program by clusters. And finally, Sherpa Engage is what we use to optimize the lifetime value of the customers. We bring solutions that, or tactics, it's a toolkit, it's a series of solutions to develop a closer relationship with the client. What are the early results? So you are having firsthand our initial outcomes, and it's very important early on in your journey that you are validating with the market. So we're very pleased to say that with less than 6 months since we started, we closed our first 2 clients, a fintech in Argentina, a life insurers in the US that is selling insurance in Latin America. And we have 8 proposals in the middle of the negotiation. We have signed NDAs with 13 other companies. And we have a long list of prospects that we qualified and we are contacting to offer our services. By the way, this includes life insurance companies, P&C insurers, reinsurers, digital native platforms, etc. So we're very pleased with the early results. And then to close, if you ask me what are your lessons, coming from the corporate world has been a big change because I guess the time that you take to make decisions, how things are moving in the corporate world, almost feel like a slow motion relative to when you are running your own company, right? With your team and if you don't accomplish your milestones, you're not gonna get the next round of funding, etc. So we really get into what I call applied and don't just learn. We learn by just doing. The impact of your personal network is huge. When you work in a large corporate, you really rely on the network that is part of the corporation. But here is where you saw some of the names, the Swiss Re's, the Everest and company are coming from the personal network, and they are giving us credibility to have a presence in the market, even though we are relatively new. Everything that we do, even though the North doesn't change, we think that is a hypothesis to be validated. So we are always ready to recalibrate and fine-tune our value proposition so we can be very successful commercially. So we are always thinking about our plan B, if you will. And finally, and to close, as I said at the beginning, my main lesson, if you ask me one, is get out of the building fast. Don't wait too long to start, talking to clients, getting into some potential deals and negotiations. So hopefully this was helpful for you. Thank you very much, and looking forward to partner as part of our GANCAR ecosystem. Thank you very much.
Thank you so much. Thank you so much for being here. Let's make a photo. Okay. And I just wanted to iterate on two things. So the speakers you see here, we don't fly them in. We don't pay business class. We don't pay hotels. They come because obviously part of them know me, and the others trust that the conference is interesting. So it's an effort for them to come over. And he lives in America, right? So it's a longer thing to do. But I wanted to quickly iterate. Therefore, I have shop friends here with us as well. I think the one thing that makes it different to build a company, if you have a couple of crow hairs and have been in the corporate world, is the one thing that you have is the network. And this is how he kickstart his journey. And I've seen a couple of other founders in insurance to kickstart their ventures. And I believe it's almost the only thing that is different. Anything else, what he said about plan B strategy, finding clients, the same thing. But you start faster, you get faster in getting the first VC in or the investor in, and as such, the probabilities of your venture is a little bit higher than if you without gray hairs. Yeah, and that's the only thing. So I hope it helped you a little bit understanding and seeing. We have seen yesterday the CEO of Oreo FinTech. He has done a similar journey. So I'm looking forward to more conversations. Moving on, I told you I have all panelists are panelists that are my personal favorite. So I know commercial insurance is not for everyone, but it is a massive thing in insurance, right? More than half of the premiums of a very big and relevant insurance company coming from commercial insurance. What is commercial insurance? Well, it's actually dealing between companies, ensuring that are not retail for private individuals, but for companies, not necessarily SMEs. This is a really old-fashioned industry, a lot of backdoor, a lot of Excels. So when I went in the last 2 years around and was looking, what are the options that we have, it was really challenging to find interesting cases. And that has been one that has by Google and Deloitte, yeah, the Hiscox case. But I believe in today's world, we have moved on far along. So I've invited a couple of people that I believe they are on the forefront of how commercial insurance should like. And I know Nadim, our moderator, personally as well. So I briefed him, and I hope he gets us to what we want to hear, the future of commercial insurance. Please welcome with me the commercial insurance AI panel, Nadim and the rest. Please come on stage.
Okay. Good morning, everybody. My name is Nadim Gulzar. I'm a partner at KPMG and a long-time advisor on the insurance industry and digital and AI-led transformation. I'm honored to moderate today's panel on AI, both generative and agentic, and how that is reshaping how the commercial value chain is working. Now, the thing with AI is, as I'm sure you're all now becoming aware, it's no longer an innovation trend. It's actually become a boardroom priority. Globally, we're seeing real traction, particularly in P&C, on AI adoption in underwriting, policy management, and increasingly claims. So today, what we'll do is we'll draw some global insights and some practical experience to explore three key themes. Firstly, what are the use cases that are real and scalable? Secondly, what are some of the real key pain points that commercial insurers are facing and how they're being solved? And thirdly, how agentic AI is shifting the bar for automation in insurance. So in order to help me bring that subject to life, I've got four very distinguished members of my panel here. And so what I'd like to do is to start by introducing them. So gentlemen, if you would like to, and I will start to my left, just tell us a little about who you are, your current role, and how you're engaging with AI insurance. So Ben, would you like to start?
Yeah, thank you very much, Nadim. Good morning, everybody. My name's Ben Howell. I'm leading Federato's move into EMEA as the company expands outside of the northern United States. My engagement with AI thus far, in fact, Federato's engagement with AI is in optimizing portfolio management, but increasingly it's looking towards agentic tools to orchestrate workflows, bring new products to market quickly, and develop applications that are useful to commercial insurers.
Thank you. Saurabh.
Hi, thank you, Nadeem. Thank you for setting the context so well. Hi, I'm Saurabh Ghosh. I am coming from the from core underwriting background. In my current role in QIC, I lead the property and commercial risk department. Me and my team handle the entire Qatar region. So I really look forward to hearing from the experts over here on the various ways in which AI can bring in more process efficiency in our day-to-day way of managing business. And that's also part of my current role of taking the department in the to the digital journey. So I look forward to hear from all the panel members over here as well. Thanks.
Miro?
My name is Miroslav Gritin. I'm coming from the consulting background, mostly spent 8 years at McKinsey. I kind of understood probably what businesses need, more or less, I think so at least. Now I'm running a couple projects that are around AI. One of them is the Quantum One, another is Agentic Lab. As you can imagine, Agentic Lab is all about agentic, and I will be happy to share some examples what agentic AI can already do and cannot yet do in the business.
Hi,
Max.
everyone. Max Richter here, based in London. I have 27 years experience in the insurance industry. Started as a software engineer by trade, but really specialized within insurance. I spent over 20 years leading different parts of Accenture's global insurance business. Last 4, effectively driving all the AI transformation work that Accenture did around the world. And in that role, I effectively engaged with the software ecosystem, and a company that particularly impressed me was Mia Platform, which is the company that I'm now global growth leader and a Mia CEO for. And Mia is a AI-enabled automation platform for insurance. I'm really looking forward to a discussion today.
Gentlemen, thank you. So let's set the scene. And Max, if we could start with you. Let's open with the big picture, if we may, please. AI in insurance has clearly come of age. But in your view, what are boards actually, where are they actually seeing value today? What's getting traction, and what's still hype?
Yeah, this is a really good question. Thank you for that. And I do agree with you that AI has come of age within the insurance industry. And I spent the last 4 years working with boards and C-suites of the top 30 insurance providers around the world. And the question is not, should we invest in AI, but how much, how fast, and in which areas? Now, where are they actually seeing the value and the traction today? Despite all the investment that the industry has done within technology and digitization over the last few decades, the reality is that very large parts of the insurance industry are still pen and paper. The difference is that it's not physical pen and paper, but it's digital pen and paper. The most widely used application within the industry today is Microsoft Office. It's emails, it's Words, it's PDF, it's Excel, it's PowerPoint, and it's manual processes. So where are the boards seeing value today? It's taking these manual digital pen and paper processes and turning them into AI-enabled workflows that get executed automatically, and turning unstructured data into structured to drive these workflows.
Thank you. And in your experience, how are boards actually framing those business cases, especially around productivity, cost, and and turnaround times?
Yeah, this is a very interesting one, and I see different angles on this, and clients come into different buckets. There's 4 key drivers that go into the business case. The first one is productivity, and this is the main one. So boards are looking at productivity, as the key enabler for the business cases funding AI investments. And when we talk about productivity, it's the ability to, do more with the same resources. But when we talk about productivity, it's also about being able to grow into a business that is bigger than it is today, but with the same level of staff. So that's one angle. Expense reduction is different, right? So expense reduction is you're taking that productivity and you're actually reducing your operating expense. And we see that more in the support process, in underwriting operations and claims operations, etc. The productivity angle typically comes in the higher levels, in the underwriting assistance, etc. Then we have servicing and kind of better service for brokers, better service for customers. So effectively being able to come back quicker, to eliminate backlogs, faster response times. And then finally, you've got being able to capture more information to drive more insights and better decision making. By and large, the key components of the business cases today tend to be productivity and expense reduction, with a hope towards the better decision making.
Okay, that's interesting. And so now that you've kind of given us about the rationale behind the business case, from your experience, what are the AI use cases that are scaling first, and why?
So first, at the macro level, we talk about commercial insurance today. Commercial insurance is on the forefront of the application of AI within the insurance industry. So P&C commercial goes first, and then life and health follow. Underwriting policy administration go first, and then claims and finance processes follow. And carriers tend to take a relatively sequential view of that process. And they're starting at the very start of it, which is basically new business submissions, taking in submissions from brokers and turning that into from unstructured data and structured data, and starting to automate the early parts of that process, which is effectively logging the submissions, capturing the data, carrying out some of the, let's say, regulatory and compliance related steps, sanctions checking for completeness, making sure that it's within the broker agreements, what's being submitted, and then moving towards rating and binds. But you're really kind of starting at the front end of that, and underwriting is where it leads in the way.
That's very interesting. Thank you. Ben, if I could just pull in some of your experience here for a moment. So from the work that you've been doing, clearly when Max talks about it at a global level, do you see any difference here at a regional or at a MENA level at all? And what are the areas that you're finding that insurers are focusing in on here within the investment case within this region?
Yeah, actually, it follows quite a lot of what Max has said. The first thing is I'd say that the trends in commercial insurance, P&C insurance in MENA are the same as the global trends. What I'm seeing in London in terms of what insurers are trying to tackle and use AI for is the same as what I'm seeing in the Middle East and North Africa. And I think, the first thing that they're trying to do is get to grips with underwriting. Principally, that starts, and Max is tugging on a thread that you started there, with solving the ingestion problem. How do I get the data into the system so I can use it in a structured way from a variety of sources? And it might be via API, it might be via email integration. It's all got to be aggregated into your platform so you can use it. And what follows from that then is the risk assessment, the actual art of underwriting. Underwriting or carrier firms still want underwriters to underwrite, but they can't do everything, they can't read everything, and they can't assess everything. So AI is greatly helping in the area of risk assessment. I think that those involved in underwriting in this region would agree with me that compliance and regulation is developing, perhaps getting more onerous. So in terms of understanding the regulation and then producing regulatory reporting and so on, that's again where AI, with its reasoning across the data, can really help. Lastly, I'll touch on distribution. One of our products actually at Federato will investigate the interaction data that a carrier has with brokers. So AI can start telling you who you're actually doing your best business with, where you should seek further business, where you should attempt to remediate relationships by analyzing interaction data, which again is something that people don't really take much acknowledgement of.
And that's very interesting. So do you think we're mostly in a pilot phase, or are we moving to an end-to-end automation phase where we start and seeing that emerge?
Yeah, I don't think we're in a pilot phase. I think AI, certainly in London and in Europe and increasingly in the Middle East, is now a part of life. It's being used and it's having effect. So we're not in a pilot phase. If you want to put AI across the whole insurance value chain, you're going to do that with partnerships. No one yet is delivering an end-to-end service. But I think what we're beginning to see emerge is the era of big apps or big applications. And that's agentic AI. So what it's saying is, I've got an AI application. I can now start to do clever prompts to build out workflows and start to range further across the insurance value chain from one original app. And so we're going to see it build in that way, potentially, as opposed to more products being developed. It's just getting better with the AI.
Where do you think it makes more sense to apply Gen AI versus agentic AI?
Yeah, kind of touched on it already. Generative, I mean, the underpinning technology, large language models and machine learning is the same for both. Generative AI is going to help with data submission and triage, reading the risk and then providing insights into that risk for the underwriter to help them write more efficiently. Agentic AI is going to help build out workflows for new classes of business and also bring new products to market more quickly.
That's interesting. So, Saurabh, from your position inside QIC and sitting across underwriting workflow, can you give us an idea of what you found to be the most urgent or pressing problems that you think that AI could, be it generative or agentic AI, could realistically solve?
Yeah. Hi, Nadim. Thank you for asking this question. In fact, I will take a cue from what Max and Ben said in this session so far. So some of the solutions they
closer to
they proposed are in fact the building block of the challenges that we face. Being part of the underwriting operations on a daily basis, one of the key challenges that we face is something called task management. So when we so right from the starting point of the underwriting value chain, receiving a proposal till the end when the policy gets delivered, there are a lot of steps that goes into it, the entire process. And very often we find that some of these are quite rudimentary. That means it can be possibly outsourced to an AI agent, like sending an auto response, acknowledging the email, sending the standard proposal form, standard queries, so that the underwriters themselves, as Ben said, can focus more on the core underwriting decision making rather than focusing on those rudimentary tasks. So this is something that AI can definitely bring in a lot of scale, and it can bring in a lot of productivity and efficiency improvements in the entire value chain. So apart from task management, the second biggest challenge that I feel is very important for an underwriter is underwriters are not like case managers. They are looking at the entire portfolio. We are here to manage the entire portfolio. So as a portfolio managers, how do we review our portfolio in a smart dashboard such that we are able to concentrate on the areas which are area of concern, the LOBs which are likely to bring in more losses, the LOBs which are more profitable to us? How do I dissect my data? How do I and bring in those smart analytic reports that helps me plan my future risk-taking appetite? And that's also very important to plan my reinsurance appetite as well. So frankly speaking, AI has a very important tool to do as far as smart analytics is concerned, or smart data dashboards are concerned, which helps in a portfolio manager's role. And the third important thing where I think AI can have a lot of contribution today in as far as our business is concerned is kind of an extended arm for the underwriting decision making. So reading those So we typically get multiple slips or multiple risk reports in one single proposal. So AI can possibly help in summarizing them, reading them, putting them up in our quote management system, and trying to build up a summary which helps the underwriter to look at it at a cursory glance and able to come to a decision of whether to accept the risk or not. So something where we can cut down on the manual data entry job and focus more on something which is more intellectually important for the organization and focus on how to build a more profitable book. So these are the three areas where I feel AI does have a big role to play, because these are things which are already available and something that Max and Ben has already spoken about. So I really look forward to if those solutions can bring in a lot of scale. That's very important. This solution needs to be scalable, and they need to bring in efficiencies, productivity improvement, and obviously commercially viable. So these are the areas which I feel AI can definitely do a lot of challenges.
Thank you. So if I were just to summarize, my takeaway on that, well, there were three key things, right? First, around task management.
Right.
The second was around portfolio management. And the third was around quote management. So
Right.
those are the three areas of big challenge.
Right.
If you'd agree with those, if I would just turn to the Maro and say, look, Maro, look, I know that you've been very active in deploying agentic and generative AI systems with both underwriters and sales agents and across the commercial value chain. Can you perhaps walk us through some examples of how you've actually done this practically to solve some of those problems that Saurav was talking about?
Yeah, absolutely. And I would just start with one important thing. So when we talk about agentic AI, what is important to keep in mind? Agentic means that you are not just creating a tool, you almost create a new employee in the company. It is very important distinction. When we work with anything that has agentic inside, and I will now explain it, we have in mind that at some point of time, even almost from the beginning, but at some point of time, this tool will become your thought partner. And we are trying to get to the stage already now. Now, coming back to the practical implications. So the first thing we have done already, wanted to share, it's close to the portfolio management you're talking about, more from the sales perspective, but still. Yeah, so we were working with the insurance company, quite big one, around $5 billion GWP, with the department working on the P&C insurance. They had a large number of, and they still have a large number of the multi-type agents. When you have the multi-type agents, it's very difficult to actually manage them. And you compete all the time with other carriers for the share of wallet, right? And more importantly, for the agents, it is also a difficult game because you do not have the immediate access to all the data you need. You need to go through the IT team, through the analyst, do all this, tedious stuff just to understand what is happening with your portfolio. This is a big problem. What we created is the platform, agentic AI platform, that acts as the personal assistant or the personal analyst. At some point, even as a manager. So what this platform can do? This is, it starts as a dashboard, kind of a dashboard, but then it provides you the possibility to actually talk to a company, to receive the information on your portfolio, to understand the profitability, understand the profile of those making losses, understand everything you need to just understand your portfolio. Plus, when I speak about the portfolio management, this tool also enables these people to receive the feedback from the models that already exist inside the company but are not used. So for example, that company had a next best offer, right? Next best offer model that tells you based on the profile of this particular client, you need to sell this and that, right? And now with the agentic AI, you receive the feedback from this model, not in weeks, but like in 5 seconds, okay, like 30 seconds, depending on the models that you use. And this is a big changer.
Okay. So I have just one question, Miro, to you. How granular can this data get? So can I look it at a say location level, at a LOB level, at a more granular level? So is that possible to go?
We are doing it on the very granular level, on the quotation level. So you not only know the policy, you know all the quotations that happened before it. Yes, it's also a question of data quality. We spent quite some time making sure that data is in good quality. I know it might not be the same for all the companies, but once you are there, once you have all the information, the systems, and this is the beauty of the agentic systems, they are not working just with aggregates. They go as deep as the particular quotation, particular line.
And Myra, when you were doing some of these implementation, what surprised you most during rollout?
I think the interesting thing that we noticed was how positive people were when we first introduced these tools to them. Because before it, we started with like just 10 people, being our very small initial pilot group, more like the customer development. And we shown the tool to them, they started working, and after the first week, we received the feedback that, so we finally feel that company needs us. Because now we are not waiting for days to receive the answers. Now we have all the data handy, and so it just became very convenient. This was the first. The second, what was interesting, is that we anticipated that the tool would be more like the Wikipedia for these people. But it turned out that the tool is the business translator. Because sometimes people do not really understand what type of data they're searching for. And just communicating with the tools, I understand, okay, actually, I need to look at this particular number, not another number. And the third one, which is interesting, so these people did not really distinguish this particular carrier with other carriers, because like it's just a commission. What makes a difference? It's just a commission on the particular deal. Now they see, yeah, okay, this is the only carrier in the country that cares about me this much, and we already see an increase in the share of wallet for these people.
And finally, I suppose the key question I have here is, what's the core value that agentic AI in this case delivers that traditional automation can't?
That's my favorite question, generally, because I think what is the main difference is that agents, AI agents, are really, as I said, your thought partners. Your dashboard is not your thought partner. Your dashboard is just a dashboard. Yeah, as bold as it is.
Yeah. So let's just kind of draw some of those themes together. Let's start with Ben and Max. Based on what Surah and Miro have shared, what would you challenge, reinforce, or build upon, especially around implementation barriers, or where you may think that AI works better in theory than in practice? So, Max, would you like to start?
Yeah, I can go first.
Yeah.
This is a really key question, right? And this is about the difference between a pilot that stays as a pilot and stays within a line of business and being able to deploy at enterprise scale, right? And that is the difference between something with a massive ROI and something where the business case just doesn't work, right? Now, we are moving from what we call deterministic systems into probabilistic technology. The systems that we've been used to implementing for the last 20, 30 years rely on very specific rules. If this, then it will do that, right? It's very, very clear, and it will work as intended. AI doesn't work like that. AI is probabilistic, and AI will never be 100%. But the complexity of the tasks that it's taking on is an order of magnitude higher. And the level of value that I can provide is correspondingly higher. Now, we have, as humans, with a very high tolerance and threshold for human mistake, right? We recognize that humans are not perfect and they will make mistakes. We don't have the same level of tolerance on systems. So if an AI system makes a mistake, we're much more harsh on that. So the key is, how do you get AI systems to be as robust and accurate and reliable as needed to enterprise scale level, right? And the engineering required to do that is very, very complicated, which is why you see many AI projects staying at the pilot stage. And I think people underestimate that a lot of the time. You can't take a foundation model just out of the box and just get it to scale at enterprise level for a use case, because it's not trained and tuned enough to the intricacies of the insurance business, which is why you need really, precisely engineered systems that are tailored for the insurance industry. And then how do you then get that to scale, right? You need that level of quality.
Ben.
Yeah, I can follow right on from that. I mean, the first thing there, of course, is you're influencing the build buy debate, actually. Do you want to build this yourself, or would you go and buy it from a provider that does one thing, which is produce really good AI-enabled products? They then have to come and implement it in your company. And I'm speaking to the underwriters in the audience now. There is a perception that AI will replace underwriting jobs. You've talked about the increasing complexity of the tasks that it can deal with. Personally, I think that the best underwriting is done by the AI-enabled underwriter, and that AI is not a threat, but an enabler. I think that AI and the underwriter exist on a sliding scale. If you're doing high volume, low complexity risks, you want more AI involved. If you're doing low volume, high complexity specialty underwriting, AI is going to underpin your process, but the decisions are made by the underwriter. So it's about how we use it and how we make a success of partnering underwriters and the AI, which is one thing. The other thing, and just as a final point, Nadeem, is surprise. People use our AI in ways we didn't think that they would or it could. And we're going to see more of that with AI. Once you've got a really good agentic model in place and you prompt it correctly, it can do many things, often that the producer or the provider of it didn't anticipate.
Interesting. Look, thank you. We've heard some very interesting, very powerful examples of how AI is beginning to transform the value chain within commercial insurance. Let's just bring in the audience here at this point. Are there any specific questions that anybody would like to ask? Okay, straight away. Great.
Hi, good morning. My name is Akhil. I'm a property and commercial risk underwriter from QIC. It was good to hear the discussion on the AI on commercial risk, and thank you, Nadeem, for discussing AI. Is not a threat for underwriter. It was glad to hear that. So I have a question to the panel. What is the one AI use case that you would advise to a mid-ranged insurance carrier in GCC to prioritize first?
Excellent question
Very
for
good
this
question, actually.
panel. All right, who would like to start with that first? Do you want to go, Ben?
would answer.
Yeah, okay. I mean, I think thank you for the question. Look, I think the first thing you need to tackle, and we touched on it, is data ingestion and structuring, okay? Everyone has a problem with data they need to solve. Often it's that it's in many places and it's in many forms. And if AI is going to reason across your data to the best effect, then you need to have organized that data. So you need to use machine learning and large language models to ingest that data and make sense of it. Everything then, underwriting, claims, pricing, distribution, follows from that point. So yeah, data ingestion and structuring.
Has anybody else in the panel got anything else they want to add to Ben? Yeah, Miro.
Yeah, I can add actually exactly the same direction as you go, but just one step further. For AI to understand your business, it is important to understand your previous decisions. So it is not only about data. If it is possible to anyhow collect the way of thinking that you have when you make the decisions, even like the emails, it is very important.
Okay. It appears we're running short of time now, so I'm going to move on from questions.
There's
Look,
one over there.
Oh, sorry. Okay.
Last question.
Thank you very much. This was very good. I thought all of you were extremely articulate. My question is to Max. You broke it down that it has to be expense reduction, productivity improvement, and then decision making from how to think about cost benefit analysis from an AI system. But my question is, how do you measure this, especially in the scenario of there also being change management, that people have to use it, start using it, and then there will be potential benefits. So when you're explaining this to a customer or looking to get adoption, how are you sort of structuring this? How are you thinking about how to structure the cost benefit analysis? Thank you.
That's a very good question. Thank you. I think it really depends on the use case, and some of them are very easy to measure and some of them are very hard. So when we start talking about productivity angle, the typical use case is new business submissions, underwriting. You've got 10 underwriters in your team, and today they can produce 100 quotes a year, round numbers, right? So by being able to help them remove the administration work from their desk, get rid of submissions that they're never going to want to write because they're not within risk appetite, and effectively serving those submissions to them within a few minutes so they have the opportunity to respond, so they don't time out. They can go from 100 quotes a year to 130, 140, right? So this is a really easy metric to be able to measure. Similarly, when you're doing expense, right? Expense reduction, and you're completely automating a sub-process, let's say the checking of a submission against compliance and TOBA and completeness checks, etc. You know, you will typically have specific teams within a line of business that perform that process manually today. When you're fully automating that, you can effectively remove that expense. Really hard ones, right? If you want to gather more sophisticated data to improve your risk selection model and your pricing model, how do you calculate how that flows into your P&L and your combined ratio over a period of time? Because there's lots of moving parts. How do you isolate the impact of this additional information and insight in your models? And how do you measure that over an underwriting year? Very difficult.
Amazing, thank you. I think Ben's
Thank you.
got one
Look,
comment.
I know that you would have more answers on this, but we really have to do the next step. Thank you so much, gentlemen, for being with us. I hope it was an inspiration for you. I know it's a complicated topic, but for underwriters in commercial, amazing. So thank you very much for being with us. One more photo and a 1-minute video. Thank you, gentlemen. And that was the morning program. Thank you so much for being with us here. We will now a little bit over time, but good discussions have exactly this. We make 20 minutes break. We need this break to prepare for the things afterwards. And I think we have an amazing thing together with Google to show you how AI can work for putting out a nice video, but we need to test this. So this is what we do right now. In 20 minutes, I come on stage, I open up this one, and then we have on the other side of this room, the innovation stage, another program as well. So see you in 20 minutes. There are refreshments on this side. You will hear my voice to come back. Thank you so much. And everybody asking questions might be gifted something, okay? Okay.
It's round and low, no matter of time to pass what's this passion breath, so let it now you're here. All tears, it the systems that excite us. We can take it those brand new highs. Smart and miles ahead, brand new looking hires one bed. Gone for the days of trading gold to what up in tech. It's a joy to behold. Today we take the time out, give your clients a way better deal. Take that show you cost a lot, compliance that is stamped inside. The fastest way. It's Finnovate. It's Finnovate. It's words and roll, payments round and roll. A matter of time to pass what's this past but so let now you're here. The marketeers, the systems that excite us. We can take those brand new highs. Smart miles ahead, brand new fucking high to invest. Gone from the days of trading gold to what fintech. Let's try to behold. Today we take the time out, give your clients a way better deal. Take that show you cost a lot, compliance that is standard aside.
Qatar has transformed in just a quarter century. Investing in knowledge shapes a brighter future for all. Qatar has transformed in just a quarter century. World-class infrastructure connects Qatar to the world. Qatar has transformed in just a quarter century. World-class infrastructure connects Qatar to the world. Investing in knowledge shapes a brighter future for all. Qatar's thriving Qatar has transformed in just a quarter century. Qatar has transformed in just a quarter century. World-class infrastructure connects Qatar to the world. Investing in knowledge shapes a brighter future for all.
Yeah.
Qatar has transformed.
IFRS
First program point on the other stage. Okay, everybody. We tried to solve a small technical thing. We did not solve it, so we just be flexible and move this to the next agenda. We have 5 more minutes here. Why is that? Because we have on the other floor where yesterday had the FinPix conference, we have today the innovation conference. So I'll quickly go over, open up the innovation floor on this side with an amazing panel. Well, first talking about our Insurtech corridor between Miami, Latin America and Middle East. And then we have the CIO panel, we have the digital architecture panel and a couple of other things. And once open up, I will be back in 5 minutes. So people here, you have 5 more minutes. People going over to the innovation stage, it's now, please come over. We open up right away. Thank you.
Smart miles ahead, brand new plug-in hire to embed. Gone from the days of trading gold to work fintech. Let's try to behold. Crunch the data, we take the time well. Give your clients a way better deal. Take that show you cost a lot. Compliance that is standing aside. The fastest way. It's Finnovate. It's Finnovate.
Hello, hello. Okay, so welcome back to the program between the morning and the afternoon, so the lunchtime program. I see many people here chatting, really interesting. So I think new deals are done, so this is important. But nevertheless, we have a lot of interesting content coming up now. So please come over, get seated. Yeah, I think don't be shy. You can be in a front row seat as well if you want, or second line. Yeah, but don't sit in the end. Don't sit at the end, please. I know you. You have to come forward, please. Yeah, please. Really, come forward. Yeah, let's have a good impression on this here. So, having said this, so people know us, and I think I had it yesterday in my keynote. In the last 3 years, we have been running Insurtech competition, first in hackathon, then competitions. We decided last year that after 3 years running competitions, let us try something else. And then we put into place the Mean Insurtech Accelerator. And what we do different with the Accelerator is really the setup. It is not for someone with a PowerPoint. The Accelerator is for growth stage companies, meaning only companies that have a product and a reinsurance partner are allowed to enter this. And what we do with the Accelerator, we are helping the companies together with the strength of QSC, balance sheet, but also papers in all relevant markets and the Lloyd's syndicate that we're having, plus the other insurance partners that we're having in MENA Insurtech to get their products into the region. Because our region is really boring, I have to say. I'm obviously coming from a different region, but in terms of products, we're terribly boring. And there's a couple of reasons, but I don't mind the reasons. Fact is, we need to have more products. And that's what we're trying to solve with the Mean Insurtech Accelerator. And we started this work under the shadows, yeah, or behind the shadows, or undercover. We started working with MRC last year, and with MRC Jamie last year with us on stage as well. It was the kickoff of trying to get a couple of more micro insurance products to the region. I believe they bring a lot of sense. And there are parametric insurance as well. So we see later on a discussion on parametric insurance. So today, for the next 25 minutes, I want our 4 companies that are remaining in the Insurtech Accelerator to get on stage and tell you a little bit of what they do. We started with 5. We only have 4 now. Why is that? Well, 1 company was sold. So actually, validation to find the right companies to get in. Yeah, not good for us because we invested time that not now is really selling off. But let's see what is ever coming out. So for all of you that are Insurtech, so I don't accept companies that just have the PowerPoint. I want you to have a product, insurance product. I want you to have a reinsurance. And then I'm more than happy to talk with you to see what we can do in the next 12 months to get your products into the market. Having said this, I'm more than happy to share again stage after last year, the stage with Jamie. Welcome, and let us hear where you are with MRC.
Thank you, Lars. Hello, everyone. Thank you. I'm Jamie Crystal, CEO and co-founder of MIC Global. MIC stands for Micro Insurance Company, maybe not so creative, but our company does embedded insurance. But I think what's most relevant today here in the GCC region and sitting here in Doha, Qatar, is there are 8.5 million people in this region that come here to work. They create incredible value for the inside the region. They build buildings, they work in financial services, they help clean the roads every day, and they have one thing in common, that they have no safety net. And there's a major need in the world for this solution. We do income protection. If someone is working, everything is okay. That means they can put food on the table for their family, they can pay for their housing, they can pay for their other expenses. But what happens when they lose their job? They fall to the bottom. It becomes a challenge for their family. And today there's very little solution in the marketplace for this. If you're a big corporation, if you're a wealthy person, lots of insurance. I spent most of my career working for big corporations, and looking in the world we live in, we need to provide a safety net for people. And so we created a company that specializes in income protection. What we're working on, and I came to this conference here in Doha last year, sat down with Lars and his team, and the ambassador to Qatar from India said, we need help. We need a program to protect our workers. Thank you. Thank you. From India. And the need is, if something happens to them, today they're working in the region to send money to their family, remittances. And if they're not working, for them and their family, there's no money for food. I'm just going to go through a couple of quick slides for you here today. Our company, we are a purpose-built to deliver embedded insurance, and I'm going to go very quickly through these. Why does someone use embedded insurance? Some companies just to make money. That's okay. That's their prerogative. If you're a mobile phone company or a bank, you want to make money selling insurance to your customers, that's all right. But the power of microinsurance is the first two boxes. If they can use it to differentiate their products or services, also to help them attract or retain customers. This is the issue that I'm talking about, income protection. It is a basic human need. So our vision is to create a product which we're working on today with QIC to launch. We're waiting for regulatory approval right now, and we'll be able to provide a solution for migrant and expat workers here in the region, both blue collar and white collar, the workers as well as the professional workers, to provide that safety net. It was very interesting. When I was speaking yesterday, I'm looking over because the interpreter sitting in the booth, he came up to me after I spoke, and he said, Jamie, I'm very interested in what you're doing. I've been here for 20 years, and this is what me and my friends talk about. What happens if I get sick or injured? What happens if I lose my job? I'm going to have to find employment, and I don't have the money to support my family. So we think this is a very important solution that we can bring into the market. And we're doing this today already in 12 countries, including the United States. Some interesting statistics for you. In the United States, 46% of people do not have $2,000 in cash. So they have the same problem. When you're working, life is okay. But if you lose your work, how do you feed your family? How do you pay for your rent? How do you pay for your house, your auto payments, your mobile phone payments? So we think this is a very necessary product, and I think it's a key part for the insurance industry. We talk about expanding the market. We talk about closing the insurance protection gap. There's more than just auto insurance or property insurance. There's amazing products like accidental death and dismemberment insurance, but no one wakes up in the morning and says, today I want to buy AD&D coverage. It's kind of a basic problem we have as an industry. We don't think about how to market and sell our products. So I love the concept of income protection. We call our product My Income. MI stands for microinsurance, and it's a very basic product that says it's parametric in nature. If you lose your job, if you're injured and you can no longer work, there's certainty. You get, if you buy 1,000 of coverage, you get $1,000. So it's a very good product to be able to offer here in the region, because it provides certainty of outcome, and that will be discussed a little bit later in our presentation. Our company today is 4 years old. We're not a startup, we're fully operational. We've launched our products in 12 countries, and we're very excited about our partnership with QIC to bring these products to Qatar, as well as for the entire GCC region. Thank you very much for your time. We're looking forward to having more discussions.
Thank you, Jamie. And I think the last phrase was the important phrase, and I think it explains what kind of companies we have in, right? The company that has products, reinsurance in several markets, not here yet, and we try to do it Qatar, UAE, Oman, Kuwait, and obviously we will open up the branch in Saudi. So thank you very much, Jamie. So next is less obvious for us, I would say, but I nevertheless pushed Jagat Transit through because I believe it's an interesting business case. Again, a person behind, and if you see Jafar right now on stage, that lives and breathes insurance. And similar to what we've heard from Federico, I like people that have a little bit of experience because it helps in getting business done, because insurance is a terrible, complicated business. So if you talk to people that understand, it's easier than to people that don't understand. So welcome, please, on stage, Jafar from Jagat Transit with his suitcase. We intend to bring a new line of business to the region together with them. This is what we want to do. So 5 minutes, Jafar, please welcome.
Thank you. Right now, I could be carrying $1 million in this bag. Maybe some secret documents, and maybe shipment of some precious stone. But you know what? I can't open the bag. If I try forcing the bag, or if I get dropped, this bag is going to scream at under 10 decibel. Smoke is going to be emitted. And there's ink inside the bag that will stain all the goods. That's Jaguar Transit. It's a smart, secure, IoT-enabled solutions for companies that transport cash, gold, confidential data. Every package is geo-locked, time-tracked, and tamper-proof, linked to an insurance policy. What makes it even more powerful is we embed insurance to each and every movement. And every claim is backed by hard data. So you have the audit trail, you have your location, attempt access, the whole works. Right? So it's moving insurance from an estimate into a measurable, insurable parameter. Yeah. With that in mind, and with this in hand, what do? We actually tried to solve an industry problem. The industry of companies that transport cash and gold valuables have been having a huge problem with the rising costs of security, right? Rising costs of insurance, margins being reduced. So with Jaguar Transit, we actually solved the problem to a large extent by reducing the cost by 40% of these companies. Why is it that I sound so confident? Because we have completed over 40,000 trips in Malaysia, and now we have completed our pilot in the US. We have just entered the pilot in Mexico. So that comes to the most important point. Why MENA? Well, MENA, there's $20 billion worth of cash, gold, jewelry that gets transported in this region annually, right? With the increasing geopolitical tension and the increasing adoption of digital transformation, there is an all-time high requirement for an insured, secure logistics solution. And therefore, we are looking for a great strategic partner, an investor, to scale this opportunity. That's my team. Reese Smith's Innovation, Jaguar Transit, and we are Lloyd's cover holder with reinsurance backing and the entire tech in-house. And thanks to QIC, we got this opportunity today to share this with you. And thank you very much for all your time. Look forward to building something powerful with you.
Thank you very much, Jaffa. So I did what Lars does, connecting, networking. I hope you have seen why they are with us, and obviously there's still a way to go. We are not live, but I believe there's an amazing future for us to be had. Next story is Digital Petroleum, winner of last year's Insurtech competition. I think it was last year our biggest bet, and he knows this. It's not anymore. You said we're opening up a branch in Saudi. So actually, this is a company run by Saudi and a Tunisian guy, but in Saudi with having a product, commercial insurance again. So I believe this is where we are missing in the most of our products. So let's hear what Digital Petroleum has to do and what to say. Welcome.
Thank you, Lars. Thank you again. Good afternoon. My name is Fakhruddin Rabit. I came from Saudi Arabia to present this product that we are developing together with QIC. So industrial insurance, it's you can say it's a new topic in the region. Okay, we'll make sure that the picture is clear for you. With the effort happening in QIC, we are deploying this new product. So what's industrial insurance and what's the problem? Today in our region, only 30% of factories, let's say industrial plant, they are using business interruption insurance. So what we have done last years, we were asking why. What's the reason behind this? Why are they afraid to do this? And why they don't need this? Okay, so and then we did a survey. We went for more than around 1,000 factories in the region, and we were asking them, what's the reason behind all of this? And then we start building the idea and then the product. So one of the major reasons is high incident cost. Industrial incident is completely different than car incident. Okay, if one factory explodes or one factory shut down, that's a lot of downtime. That's a lot of cost. Okay, so even the insurer, from insurance standpoint, it's a lot of cost for him. So it's a lot of insurance to be there. On the other hand, the end user is complaining that the normal insurance cost is too high. Let's give an example. In Saudi Arabia, it's about 5% from the total revenue. That's huge. Okay. Now we went in bit details, and we want to understand why. This is just an example. One incident happened in US. Okay, this is an oil refinery, and it cost, after dispute, years of dispute between an insurance company and the end user, it cost $1 billion for the insurance company. It's huge. That's a lot of effect. So how we can fix this? Okay, first layer and first thing. So we found out it is the way how the risk assessment is done is very complicated, and there is no real-time risk assessment. And this is one of the major points that the end users keep complaining about it. So whenever there is a dispute between an insurance company and the end user, the first thing the end user will mention, I don't agree on the risk assessment and on the way how you are doing this. Okay, so we said, okay, let's bring both insurer and end user to the win-win zone, where everyone will try to make everyone happy, and everyone will see the benefits. So in the end user side, we'll make sure that you will reduce more energy, you will have the right analytics, your factory will be digitized, and the insurance side will make sure you have the right data, live, real time, to make the right risk assessment, and more accuracy will be there. So this is our solution, is Deep Predict. So it's not anymore a reactive risk assessment where you can be done one time per year. No, it's real time. Every second you have your risk score in any industrial plant that is part of this solution. And it gives prediction based on the data that we have from that plant. So we have just to install our sensors and get all that data. We create the AI model on that plant based on the data we have there. And then everything will be clear for the insurer and for the end user. This is a picture of our solution. And then the customer himself, who's the end user, he will see a lot of improvement, and he will get digitized first. He'll see a lot of improvement in his energy efficiency, regardless there is insurance or not. So he's already happy to see that. This is one of the products that we came. In the other side, in the insurance side, so we have a real-time insurance. So we can give a clear risk assessment, very accurate, comparing to what's the traditional risk assessment. In the meantime, like this, the insurance can offer a low insurance cost, which will make the end user, yani, how to say, more suitable price for him. So what we want to do and what we are doing right now, so we can offer this three product along with QIC, through QIC, business interruption insurance, okay, environmental insurance, because we get all energy and carbon data, equipment breakdown insurance about the machine, because we can do all prediction on this machines. It's a huge market, so we in the region we are targeting $30 billion for the next years, and yes, let's go back. So in Saudi Arabia, for example, we are targeting 4,000 factory. We are already qualified over there, and it's going to be a requirement now to have insurance if you have a factory. We have been awarded multiple times last year, as Mars mentioned, from QIC. And that's me presenting last year a complete different product. So before we have this product done now, thank you. Appreciate your attention, and you can feel free to ask me after the presentation. Thanks. Thank you again.
Thank you so much. And you actually see the slides upgrading. I remember the first pack that you sent me, guys, 2 years ago. I was like, wow, but there was something, and I'm an entrepreneur, so you feel it sometimes. So
now I feel it.
You moved, not only slide, but the business was, you moved, right? So thank you
Let's
so much
move
for being with
together.
us.
Thank you.
So we have one more pitch to go, autonomy. And Jan is actually a person that could be one of those inspiring entrepreneurs, because he started many things and succeeded in many things. He failed in a couple of others. And also autonomy, his company, has a trajectory of pivots around, but it is really interesting. So maybe if you get this business done with Jan, then maybe you have him next year with us as inspiring entrepreneur. It is also interesting, and this is why I wanted to have Jan with autonomy as last. It's the leap to our next panel. In the next panel, we'll talk about parametric insurance, which for me is a really exciting, not new, but it's really exciting, because what is parametric insurance? You agree on a fee and you agree on a payout on a trigger. So not this strangely thing that, yeah, I pay an insurance fee and then I don't know what I'm getting at the end of it. Parametric is totally different. There's a trigger, there's a fee, and you pay, and you get a payout. It's a perfect thing. So after Jan, we will have this panel also with our NASA, and then we'll give the leeway to this. Welcome on stage, Jan.
All right, thanks a lot. All right, thanks to Lars, the MENA Insurtech team, anyone in Doha and the region. So we're very glad to be presenting. So our product is very relevant to the region. This is a cargo marine product, and we're bringing a parametric delay insurance. And really, we are aiming at offering emerging risk solutions to the region and globally. So let's look at the big numbers. The trade export market, global trade is about 25 trillion worth of assets every year. And from about 12 to 15 months ago, we used to have 6 days of delay on average by maritime freight. Now it's 8 to 9 days. And this is about 500 million of containers stuck at sea every year. So it's a big problem of business interruptions and losses. Right, the big problems that we are facing are very obvious. You hear it in the news all the time, right? Geopolitics, trade war is like front and center. Climate risk, any type of custom rules, regulation, pandemic. And then on the infrastructure side as well, the localized risk, collision, equipment failures, port blockage, cyber risk, and so forth. This is a long list, and you guys know what's happening This is causing a lot of headaches and a lot of losses every year. So how do you manage those risks? You use marine and cargo insurance. It turned out that the traditional cargo insurance is only focused on physical loss and damage, and it excludes delays, which is very surprising. That's been the case for nearly 400 years now. It's a legacy exclusion, and that represents about $50 billion USD of losses every year. So it's a protection gap that we're really trying to bridge here. So that's where autonomy comes in. So I created a company 4 years ago with a mission statement to bring the first ever delay insurance for cargo logistics, right? So that's never been done before. I created a company now with a team of 10. We've been in market for many years. We are a Lloyd's cover holder. We are a USMGA, and now we're working in several regions, as you can see, Americas, North America, South America. And in the GCC, we signed an MOU with QIC, MENA, Insurtech. Very glad to be essentially entering that market. The commodities trade, export is huge. The import of food and bevs, pharmaceuticals, electronics, by maritime, by air, it's a huge market here. We want to help customers insure against delay. So great opportunity for us, and glad to be here. So what is the product? So the product is called Parametric Cargo Delay Insurance. Again, first time ever. It's very simple, right? So we only care about the transit time delay, the cargo transportation delay. We don't need that that is any cause that would be actually impacting the delays. We don't need it to be like an external factor such as an earthquake or climate risk or anything like that. Really what we care about is the fact that we track and trace automatically when we detect the delay of 6 days by ocean or 3 hours by air, then we activate the claims and the customer can be paid within 7 days, right? And we've been paying claims, right? In a matter of a few days, as quickly as 3 days. And customers are extremely excited. And on the other side, we also have loss ratio under 20%. 20%. So this is still outperforming most cargo program, right? The key factors in industries, right? So I talked about commodities trades, right, on the bottom left, but really there's a lot of sectors that we're helping right now. Our customers are in life science, pharmaceuticals, perishable exports in South America and also Asia. The aerospace, aviation, automotive, electronics, everything that's time critical, that's where we can help customers. So quickly, we help in several exposures: freight costs, commodity price value, and contractual exposures. But it can be anything under the sun because this is parametric. And really, that just wanted to exemplify the fact that we are unique, right? We don't have competitors, but we also partner with a number of actors in the space on the cargo side, underwriting, and also parametric. We have a team of experts in logistics, insurance, finance, capital management, operations, and really, kind of starting to get some partnership in the region. We want insurance experts, logistics experts, export, specialists to join us in our journey. Very glad that we are starting this partnership now. And I wanted to kind of double click on the fact that we have very aggressive technology, emerging techs. We use AI machine learning for quoting and underwriting. We also have a blockchain layered infrastructure to operate claims 20 to 25x faster than the industry. And we also have a whole API layer and environment to connect with partners. So with QIC and the MENA Insurtech, we want to bring, obviously, our conversation about underwriting capacity and paper. But really what we want to do is creating a distribution partnership and also a lot of strategic collaboration in terms of ecosystem, new product, and bringing value to your customers. Thanks a lot for your time. And don't hesitate to come to me for anything logistics, delay, cargo, and if we can help you and your customers.
Thank you, Jan. And we will see him in 2 minutes. So those have been 4 companies out of the MENA Insurtech Accelerator. So I think you see and get a feeling on what we're trying to do. It also helps us as QIC to push through in a couple of areas where we need to. And as we are really strong on digital insurance already, I thought commercial insurance was interesting. So we straight come to the next panel. You will see part of the companies here. So I welcome on stage parametric panel. Assad, our moderator, CEO of Marshi in Qatar. So please welcome, and you will introduce your panelists. Just want to say there's one person that we are missing here. He didn't get the visa, so unfortunately, this is sometimes what happening. But we have what we have. Thank you.
All right, so good afternoon, everyone. So again, welcome to the session. Today we're going to be discussing parametric insurance, and basically also we're trying to cover also an interesting topic, which is the micro insurance part of the business. I believe it's making basically a new type of insurance that it hasn't been kind of known in the past. We kind of want to like to welcome our panelists. First, we'll start with Jan Bargors from Autonomy. You've just kind of met him. Nasser Al-Muhannadi from QIC. Mike Eckstein, MIC Global. And Basil Mimi from Mantas. All right, so let's kind of start it off. So maybe I'll just start off with a kind of a basic question to maybe everyone. Let's start with Jan first. So how does parametric insurance differ from traditional kind of insurance, specifically on claims and payouts and the triggers?
Yeah, so people should be familiar with our product right now, but just to summarize, so the way we structure parametric in our case is really focusing on a few things. So predictability of the amount, right? A preset limit that's been received by the customers very fast. Also a very transparent trigger. There's no adjudication, there's no claims really, because when we detect a delay, then the customer is eligible for claims payment. And really that we don't have this after the fact subrogation or litigation about trying to find out how much loss was actually done, because this is preset in the policy. So make it very transparent, fast, and reliable.
That's excellent. So, and maybe to you, Mike, like from a micro insurance perspective, I mean, how does then this becomes a unique trigger for micro insurance?
Well, thank you very much for being here. So just very quickly, MIC Global is a embedded microinsurance company, and we focus on short-term loss of income globally. So anything that prevents a loss of income in the short term on a day-to-day basis, multiple triggers, it could be weather, it could be losing your job. Our product covers you for that. And so what's interesting is currently the market is sort of talking about parametric and microinsurance as two things. It's actually one thing. Parametric is the mechanism, it's the automation, it's the technology. And microinsurance is the product that is required for parametric to make parametric really work. And the big ticket there is low premiums, cost-effective premiums, invisible insurance that can embed into transactional journeys, platforms, banking platforms, and so forth.
Right. And Basil, I mean, I know you've got a different area of expertise, right? So it's cyber, as I understand. So how does that kind of differ from the rest of the panelists as well?
So just like my fellow panelists here said, it's about the trigger that you define it. So similar to rainfall, wind speed, or freight delay, in cyber, we focus specifically on the cloud outage. So we have predefined events, and if there is an outage with the public cloud data centers, then the policies are automatically triggered. We do the root cause analysis, and we do a quick payout. That way it's fast and fair and data-driven for everyone.
Great. So Nasser, I think from a QIC perspective, I understand when we had our discussion earlier on this particular kind of product, I mean, you had seen something around to do with the takaful insurance, right? So how does it basically kind of align with the parametric front?
First of all, Assalamu alaikum, and thank you guys for being on this panel, and thank you everyone for being here. First, I would say like parametric insurance by basis, by design, I found it to be falling within the framework of takaful insurance. Basically, you cover three basic aspects of takaful insurance within the framework of parametric insurance, whereas uncertainty, which is the conventional insurance process, you have uncertainty within the product, whereas parametric insurance, you know what's going to trigger your payout, and you know what your payout is going to be. So this uncertainty of the insurance product is no longer there. So in my opinion, it fits within the framework of takaful insurance more than the conventional insurance. Also, the other part of the takaful insurance is the speculative risk taking, which is also not admissible within the takaful framework. So I think because of the parametric insurance payout design, the risk is not substituted or not exchanged, rather it's shared, which is basic understanding of takaful insurance. So I think that parametric insurance and takaful fall in line more than conventional insurance, and tweaking it in a way that it fits the takaful insurance aspect.
It's great insights. So, I mean, moving on to basically the, I'd say the theme of this summit, which is, I think it's more of the AI part of it, right? So I think, you know, the technology, AI plays a critical role in the solution from a parametric perspective. So how does it actually kind of help expand, you know, parametric insurance, micro insurance to the kind of wider consumer side? So maybe Jan can start off.
Yeah, yeah, we get to talk about AI, right? Now, but so we do use AI, you know, in two ways specifically. So the number one is algorithmic underwriting, and the second one is for freight scheduling. So our underwriting is actually purely done on statistical and multivariate approach on a decade worth of freight data, right? So freight terminals, aviation risk, maritime risk, it's all data driven. And we have a whole machine learning training and calibration of parameters in order to spit out you know, very dynamic pricing for the customers, but also targeting loss ratio in very outperforming manner, right? The second one is very much into the agentic, so AI agents, where we essentially leverage a lot of those facilitation in order to predict and also complement and augment data that exists from our data providers, because nothing is perfect. Freight, transportation, maritime is very messy, right? And air cargo as well. And we need to actually augment the data to the benefit of the customers and also to have the most accurate triggered, right? So this whole agentic AI is where we're actually spending a lot of time in order to improve the quality of the data and the customer experience.
That becomes more of kind of a live feed into the system that allows you to basically do that.
Correct.
That's
exactly.
Interesting to know. And I mean, I don't know, on the kind of cyber insurance part, is that something that you kind of also witness, Basil?
Okay, so at the first side of business that we give the insurance in case there's an outage with the cloud. We also offer the risk guard services in case the issue. Now we're trying to use AI where we're building a predictive analytics model, leveraging all the data we're collecting from all our clients to give them heads up before an issue would happen. So la samahallah, you know, your resources usage, the availability of a certain virtual machine on a certain server. That way we can you know, be more smart, alert, and we can be more predictive and prevent the issues before happening. So that's the first piece. Then we're trying to see, from my understanding and you know how we started, early on we started with data centers, which I like to think of as cats, very high maintenance, requires a lot of attention. Then we moved into the cloud, which I like to think of as cows. You can always line up cows and more cows. Then we moved into more sophisticated architectures with containers for scalability, millions of users being available at the website and shopping at the same time. And today with AI, we moved into more serverless deployments, where based on the usage, you're deploying a virtual machine or an instance every few seconds, then you're killing it 3 minutes later, which forces everyone across value chain to keep innovating because of the shorter life cycle of these data centers. And I think AI will play a huge role where we're just, creating add-ons to these policies that we do the binding for.
Right. I mean, Mike, is it similar, for example, from a macro insurance perspective, or do you apply a different kind of methodology in this case?
Yeah, look, I mean, AI is enhancing the whole process, right? And it's the whole thing about parametric and micro insurance is speed, access, simplicity, raw simplicity. The beauty in this, in micro parametric insurance is the raw simplicity. If X, then Y. So you're paying a premium and you are guaranteed to get an outcome of, let's call it $100, right? And so there is absolutely no. It makes the product absolutely tangible. And so, so that's this side, and then you've got AI coming in now, and there's the predictability from a data perspective. I mean, there could be a trigger event, like a weather trigger event, that could have massive payouts. So that predictability is where AI can play a massive role to understand what the potential future can look like. I mean, and that's for insurance in general. And so that's the one part, and of course then things like automation, contracts, wording, and all these things that needs to be done, and it's done right now by humans. It cuts out the cost and the time that is being spent to get that done. So the more efficient it is, the more profitable it is for us as a company, of course. And of course, it drives the pricing potentially a little bit down in some respects as well. So I mean, it's massively interesting. AI sits across the whole journey right now. So
exactly. So it's end-to-end kind of.
It's end-to-end, yeah.
Yeah, right. Great. So, I mean, is there any kind of maybe hybrid models or kind of blend sort of parametric solutions that are associated with conventional insurance at the moment? I mean, how does that work at the moment, for example?
Yeah.
Sorry.
Well, I think the best example right now in traditional insurance is flight delay. So flight delay is effectively a parametric insurance product, right? I mean, and I used to work for Chubb and helped to build the digital business in Chubb with Chubb Studio. And our first product that we rolled out was with DBS Bank in Singapore, and we embedded flight delay into the journey. And what is essential to understand is, on the one side, it creates an exceptional customer journey for the customer, because they don't have to claim. Right, so there's no claim process for the customer. They get the payment when a trigger event happens, right? And so flight delay is a great example. Flight's delayed for 2 hours. You don't claim. You get a notification and said flight's delayed, and here's your voucher to go to the lounge, or here's your $200 to spend in the airport, right? Yeah. It's an exceptional customer journey. So the biggest win for banking, telcos, platforms is that you can utilize parametric insurance as an acquisition tool, as a customer enhancement tool, as a loyalty tool. And that is what we see playing out right now. Like we are global, and we are live with our product in the Americas and LATAM, and now in the GCC and so forth. And it's the acquisition aspect. I mean, what does it cost to acquire a customer? What does it cost to enhance the customer experience? Versus a parametric tool a product that can cost $2 per month. It's embedded into the service, it's embedded into the subscription service or the card fees, and flight delay as an example.
Yeah.
Pays out immediately when the flight's delayed. So it's real.
Great. And Basil, you had a comment as well?
Yeah. In the case of cyber insurance is not new. They've been around for decades, and usually you buy a traditional policy that has certain limits and investigations. Our products do not replace it. It just complements it. So it's either sold as a standalone or an add-on to the existing traditional policy. So the parametric product is just added to the typical, cyber or CRP technology, product. So in our case, it complements it. You shouldn't buy, just parametric product without having the original one, if it makes sense. So it's just part of the risk management and the risk planning for the company to do it.
Great. And maybe Nasser, from an QIC or insurer perspective, like how do you see the kind of I'd say the hybrid model applicable to QIC?
Yeah, I agree with our colleagues here that it is in some cases a advantage to an existing a conventional product, but at the same time, I think with the development that are going on in AI and predictive technologies for future, and even other products that would not be thought about in a convention in a parametric insurance product way. I think with further development and further improvement in the systems that are available now with this AI era, I think parametric insurance in the future will be able to be applied to different products, not just add-on products, but conventional products, even motor insurance product. I see that this is very a big possibility. And speaking on the region we're from, I think it will help bridge this gap or this protection gap, because we find that some people, due to going back to the takaful concept of how I feel like this product really fits in that parameter, and I think that will definitely decrease the protection gap and increase insurance penetration within the country.
Great. So maybe talking about the future. So I still recall yesterday's opening speech from Lars, where he said, where we are now, you cannot actually predict what's going to happen in the future, right? So things are changing quite fast. So where do you see the future of, let's say, the parametric type of coverages within your industries, micro insurance, for example, cyber insurer as well in particular? So
Yeah, so I'm obviously very bullish. I believe in this product very much. So I wanted to jump back in on your question prior to it, because you work for Marsh. We're already in business with Marsh in North America, and they actually view it as an add-on within. We call it Cargo plus delay. So we very much align with what you guys doing and whatever was said before. Yeah, in terms of like the future of insurance. I think the big statement is like parametric insurance is not going to be replacing indemnity-based or conventional insurance. It's still a niche market. It's specialized. It's an add-on and so forth. In our case, we kind of position ourselves as a risk management solution for supply chain, right? So delay insurance is one disruption, and then trade credit, financing, credit worthiness, FX is the kind of product we'll be implementing. And as long as we can actually ensure the integrity of the cargo and the financial liability that goes with it, right? So for instance, what we're starting to surface in our specific case is other risk factors attached to cargo in transit when in the warehouse, such as humidity, temperature, potential fire risk, water damage, theft, and so forth, as long as they can be monitored through IoT sensors, ELDs, computer vision, and all that stuff. And our DNA is to bring parametric using this data, right? So not trying to just lump in an old product within our ecosystem, but continuing innovating, using data, bringing value to the customers, more speed, more transparency, and more trust, right? This is very much like the strategy and the home run for us.
Mike?
Well, we are very much focused on, like I said, loss of income, right? I mean, there is a massive gap globally in day 0 to day 90 for anyone, whether you're a blue collar worker or a white collar worker. If something happens to you, even if you have the backup funds, not having to use that funds, but you're having a product that sort of looks after you for the very short term, even if it's less than what the actual risk costs, then I mean, there's a huge market for that, and we are focused on that. We do loss of income, short term, and it's real and it's live and it's very beneficial. The beauty about the product also, through its raw simplicity, you don't have to educate people. If someone can understand that if they pay $1 a month and they can get $100 when an event happens, and they can get it almost instantly, that's enough.
Exactly.
You don't have to educate them, right?
Yeah.
In the future, what's interesting for us right now, if you think about things like stablecoin, crypto stablecoin, stuff like that, you have, depegging happening when a transaction occurs, right? Depegging happening, and there's a difference or a fluctuation between what you transferred and what is get on the other side. The product or the parametric product can cover for that. It could cover for any sort of drop in service at that point in time. So that's massive per transaction, 5 cents, 2 cents, 1 cent, and you are covered for that. For the platforms, it drives huge amount of stability, security, trust. Me using that platform, knowing that when I do the transfer, I am looked after if depegging happens or if service falls, right? So that's a very interesting area for us, and we are pushing towards that. We see that as a loss of income in a sense as well. You're losing $20 in the transaction, and so anything that sort of defines loss of income in the short term is what we look after.
Would you think digital assets becomes also one of those areas of focus in the future, or is it not something that it is in scope of parametric? The digital assets.
Digital assets, of course.
Yeah.
Of course. Again, I mean, there's so many use cases that you can look after. Very quickly, we have a product live in India that's looking after merchants, large payment platform in India. Their merchant base is diluting because of excess rainfall. So people are not going to the stores buying their vegetables. They cannot transact because of excess rainfall. So they lose the day's wage. We have a product that is parametric double trigger. So if millimeters of rain hits a certain level and the transaction volume in that exact area drops, the product pays out and it covers the day's wage for that merchant, right? And it drives incredible amount of loyalty, but also saves a lot of money of having to reacquire that merchant, right? So there's so many opportunities, but like I said, for us right now, we are totally focused on loss of income and doing that really well. And then, who knows what the future can bring, right?
Cyber insurance. I think it's the kind of the most prominent risk that we see at the moment. So how does it look for the future as well?
So for Mantas, we're proud to be the first parametric cyber insurance provider for the MENA region. So there's two things to look at here. First is actually depending on the cloud. Most businesses today rely on cloud. With over 50% of businesses in this region use the cloud critically, whether it's an e-commerce, a digital bank, a travel website, an airline. I mean, we order everything today from butchery to groceries. Everything gets delivered to home. Even the barbers now come to home. So we rely so much on cloud. So that's one piece where everybody wants to have that protection, whether it's the management, they want to protect their P&L, pay for salaries, marketing, inventory management, etc. And then there is the geopolitics and the risk of cyber attacks, the increased attacks that we have seen. I mean, previously we used to rank as far as Middle East, we used to rank 6th in the world as far as cyber attacks. Today, unfortunately, we're 2nd on the list after the US. So this forces everyone, to get the best products out there. We're here to help the businesses. We're not just an MGA, selling cyber insurance. We also offer insurance advisory services, risk guard, from building the cyber strategy development to having this actual cyber hygiene to buy that product. So we do see a huge future for having, the full cyber even being parametric, and that's where we're dismantling and redefining cyber insurance as Mantas.
Great. And from your side, in this case, from an insurer perspective, how do you think the insurers will cope in the future to kind of meet up with all those future developments that might happen on the parametric side?
Yeah, definitely. I think that the future, in terms of, in my opinion, in terms of parametric insurance, could be a massive game changer, especially within Takaful. I think because of its design and its clarity, and the ambiguity of the conventional insurance, I think is a challenge with some people, especially within the region. And it's a barrier for them, and it reduces our insurance penetration. So I think that will be a big game changer. And I think also a combination, a hybrid product of conventional and parametric insurance is a massive also game changer in the future.
Great. So I think we've got an exciting future coming up. More to do with the the different types of insurances, whether if it's parametric, I mean on micro insurance or even traditional insurance. So again, very interesting topic. I'd love to continue, but we've got time constraints. So again, I hope everybody found it useful. Thank you to the panelists. Thank you everyone. Appreciate it. Thanks a lot.
Thanks a lot. Thank you very much.
Thank
Thank you so much. Can I join you on a photo? And I'm sorry, Mani, that we didn't have you on slide. I'm sorry. I'm sorry for that. We didn't manage. Okay, thank you very much. I think this was a really insightful panel. We also seen how progressive NASA is thinking on parametric insurance and QOC. Thank you very much. The next one that we are moving on now is a topic really dear to our heart. We obviously have a strong Indian insurance community in the region. Many Indian colleagues with us as well, lovely people. So what we try to do together with the Indian Insurtech Association and Insurtech is really exchange notes, exchange ideas, exchange speakers and ideas. So what we thought, we bring a couple of really interesting people from the Indian subcontinent to us, hear a little bit of their strategy to go there. And I'm really proud that we have also Amrish from our Epicute here, talking a little bit about we as QOC potentially could do in the Indian market. So please come on stage. Thank you.
Hello. Hello, everyone. Quick intro about myself, Subhajit Mandal, co-founder of Cyber Sierra. We provide a cybersecurity compliance platform for enterprises. I also wear another hat, which is co-founder of India Insurtech Association. Lars and Meena Insurtech has been big supporters of us, and we have been collaborating over the past 3 years. And that's why the conversation around Meena and the India Bridge is something that's very close to our heart. With that, I will hand over for introductions. Ratish, why don't you start first?
Yeah, thank you, Swajit. I am Ratish, founder of Watcher Health. Watcher is a AI-enabled engagement platform for insurance companies. We run with 2 specific ROIs. One, working on retention of your clients, both retail and corporate, using a lot of AI tools around gamification and hyper customization. And the second bit is on acquiring new clients, potential policyholders, how to engage them, use behavioral science, qualify the lead for the physical agents, and get them onboarded. So these are the 2 things that we do in UAE, India, and a little bit in Southeast Asia. We are today managing more than 30 million lives, and we are valued at more than $40 million right now, and we have completed 2 rounds of funding. Looking forward for a lot of partners here to collaborate. So thank you, guys. Thank you so much.
Hi, good afternoon, everyone. I'm Resh here, VP Strategic Investments and Initiatives at Qatar Insurance Company. I lead the strategic investments for QIC, both in the insurance as well as investments landscape. Delighted to be here as a part of this panel and looking forward for a constructive discussion here and learning more from our esteemed panel members. Thank you.
Hi, everyone. I'm Piyush Jain. I'm the co-founder and CEO of CarePal Group. We are one of India's largest healthcare financing platforms where we combine three different business models. Number one is a donation crowdfunding platform under Impact Guru, where we have helped 50,000 patients raise about 200 million US dollars in donations through 4 million donors and 8 million transactions. So every minute, 4 people donate on Impact Guru in India. We secondly have a health insurance broking company, CarePal Secure, which cross-sells health insurance at a very affordable cost to the donors and the patients of the crowdfunding platform. And finally, we have a lending marketplace under CarePal Money, where we provide 0% interest loans to patients who require hospitalization for critical or non-critical illnesses. Very excited to be here, and thank you to Lars and QIC for this opportunity.
Hello. I've got a great panel here because there are two businesses that are well established in India and growing in the region. One is actually has quite a bit of customers in the region, so we'll come to that, Ratish. Piyush, you are establishing in the region, so we will be sharing a lot of that journey. But I'll start with you, Amrish. From a high-level perspective as an investor, right? What are some of the exciting investment opportunities that you see when you look at the Indian Insurtech sector and why?
Yeah, I think before we begin, it's it's quite critical to highlight some of the key features of the Indian insurance landscape in general. If India continues to grow on its current growth trajectory, you're probably talking about a market which will be the 6th largest globally in terms of the insurance reach. So obviously, it's again aided by a lot of macroeconomic factors. You have a very favorable demographics, urbanization level, which is unparalleled to any other emerging economy, a growing middle class population. So all of these macroeconomic tailwinds are aiding the growth in the market. So obviously you have very obvious opportunities in terms of the penetration levels. So if you talk about the non-life penetration levels, we are about close to 2.3% as a percentage of GDP. Your global average is around 4%. So again, a lot of opportunities there. In the non-life, the opportunities is even greater because we're talking about a meager penetration of about 1%. Your global average is close to 4%. We have markets, developed markets like US, which are at 9%. When we talk about China, China is about 4% of GDP. So immense opportunity there. Very clear, everyone here is quite aware of that opportunity. We have a very favorable regulatory backdrop also supporting. So India, when it comes to investment and opportunities within insurance, it pretty much ticks a lot of these boxes. More, I would say, in my personal opinion, more non-life than life, because that's where there's a lot of headroom for growth. I think the opportunity, which is not very obvious, is to do more with offering these solutions embedded into a technological framework. It could be, offering these investment or rather insurance solutions through your e-commerce channels, through your digital wallets, through your lending applications. I think that's the real, non-obvious investment potential, I would reckon.
And as QIC, okay, QIC's perspective as a MENA insurer, where will you definitely not look at, right? Like the non-obvious ones, but from a perspective that, no, this is something we will stay away because this does not fit into whatever strategy you have.
Well, I think where there is a lot of legacy issues, or where there are players which are burdened by their, legacy architecture, is something that we would look to avoid at the moment.
So tech, future-looking growth, that's where you will look at.
Yeah, I think the sector is clearly being disrupted. I mean, if you don't need to look at too many examples. You can look at the West. It's been clearly disrupted. When you look at India, you can see that you have a lot of players which have successfully disrupted and now have a long track, and it's happening in the region as well. So I think the most obvious one is to be a leader there and try to identify opportunities in that space.
With that, I'll move to Piyush. Um, for the health insurance segment that you have very successfully taken your existing business, which had nothing to do with health insurance, but grown into that, what are the most promising opportunities for the MENA companies, right? And as you are growing here, you are looking at that. For the MENA companies to enter this space in collaboration with the Indian Insurtechs. So MENA companies looking to go into Indian Insurtech in that health space that you are currently growing in.
So let me set some background context on India health insurance first. Out of the 1.5 billion population that India has, the poorest 500 million people get a government-based social security, Ayushman Bharat. But out of the remaining 1 billion people, can you imagine that 700 million people have zero health insurance in India? And the balance 300 million, the average insurance cover is less than 6,000 US dollars for a country whose GDP per capita is $3,000. That's why they say in India, there's the entire middle class, which is missing in action when it comes to health insurance. Now, why is this a great opportunity for anybody in India or even the Middle East insurance companies or insurtech companies to be looking at this opportunity? Because the Indian insurance regulator has announced an initiative to ensure insurance for all by 2047. So in the next 22 years, they want to ensure the vast majority of the 700 million people, which is a humongous opportunity. Secondly, India is investing a lot in Ayushman Bharat Digital Mission, which is creating innovative healthcare infrastructure, the way India did it with Aadhaar, which is the identity system in India, or UPI, a digital payment system in India. There is a lot that's being created by the regulator to ensure all the health records get digitized and everybody has a ABA health ID, all of which will be very useful information for underwriting. So when I think about the huge opportunities at hand, specifically for the Middle East insurance companies, number one, there's a huge Indian population in all of GCC, over 9 million people. And the vast majority of them do not have any health insurance back in India. A lot of them will be, when they will be completing their working age, they have to go back. And so there's a great opportunity to cross-sell and build partnerships to provide health protection, not just in the Middle East, but also in India. Secondly, given the great healthcare affordability and the very low cost for cancer, transplants, rare diseases, insurance companies can again work with the local hospital ecosystems in India and provide great quality of care also at an affordable price point. And I think beyond that, there's a lot of innovation happening on the distribution side. Resh was speaking about some of them, using the huge digital penetration, payments penetration, to provide very low cost, affordable solutions, particularly on the non-life side. And Impact Guru is also trying to do something there. So those would be the three areas that I feel MENA and SureTech companies can really start to capitalize, because there are some very immediate synergies that they can find quickly.
The population of folks from India staying here and going back in 18, 20 years' time, that is definitely an interesting area. Now, we have heard from an investment point of view, we have heard from somebody who has been serving a huge group of people on non-insurance and then getting insurance. Ratish, what I would love to hear from you is from a health tech point of view. So MENA carriers, if they are looking at the Indian insurtech landscape, but they are looking at the health side, as a tech company, which you are, where do carriers should be looking to partner up with tech companies?
Yeah. So while Piyush has touched on the size, the process, I'll touch base a little bit on the technical part. So I'm sure the companies in MENA want to grow and probably be a world player one day. And the most important thing at that time would be to manage scale and size. Now, for them, India is a very good market to experiment size and scale. The reason being two things: that India is very startup friendly. You will see a lot of companies accepting products with fewer discussions. And these are going to be paid pilots also. So although on the flip side, India is very cost sensitive, but what I see is that India is ready to pay for pilots. So you don't have to actually do a free pilot or something. So a lot of Indian companies do adopt new technology, and here you can experiment with size and scale. Secondly, when you become you want to become a world player, you need to understand biodiversity, and what best than India, because you know every 100 kilometers the language change, the food preference change, etc. So again, that can be a very good tool in case you're working on behavioral science or a lot of AI related these things. So a lot of biodiversity is there present. Lastly, a lot of companies in India would partner with you. So there are so many startups, so many small companies. I've met so many good startups from India here who are ready to partner with you in case you want to experiment. So your cost to market gets reduced. You partner with a nice company, you take your technology there, you set up something, you understand the market, and once you have done that successfully in Indian market, then nobody will question you on size and scale. So you can stress test your product very well in India. So yeah, that's what I think on technical side.
So we heard various areas where MENA carriers, risk providers, capital providers, capacity providers can look at India as a test bed, as a way to work with the growing market that India has to offer. Let's switch the other way around. Indian Insurtech companies looking at MENA. Again, I'll start with you, Amresh. Um, what are the key criteria that you use to evaluate if you were to make a strategic investment into an Indian company in the insurance space? And there are the cultural and operational aspects. How do you look at them so that you want to make sure they are addressed before you make the investment?
Yeah, sure. So when we are looking for a outbound investment into India, or for that matter, any other emerging market, I think the single most critical criteria that we evaluate a particular business or opportunity is on its scalability. How scalable the business is. And then obviously, one could say that, any business in India is scalable, right? Because the sheer size of the market. But we have a slightly tweaked criteria for scalability. When we talk about scalability, we look at how the opportunity or the business opportunity is able to grow its market, or rather what value proposition they bring on the table, which is either in the form of being a disruptor or being an innovator, trying to get share from the incumbent or the traditional channels. So I think scalability is very critical for us. So when we look at a business, we look at how scalable it is. We also look how, like I said, technological framework is quite critical. We want to see how they are how much is the business embedded in the technology, and how critical it is for them to access that the large technological the user base that you have, the large technological user base you have in India. So I think those two aspects will be very critical when we look at things.
Scale. That's one word to take away from looking at how you would look at investments from India into MENA. Let me go to Piyush again in that same order. Piyush, you are starting to expand in this region and you're looking at multiple markets, right? So as founder of CarePal, what aspirations you hold for the MENA region, right? And keep in mind, how should other insurtechs or health tech companies as part of the Indian insurtech ecosystem, what is that message you would share as part of that experience that you're firming up?
So we've been very lucky to get the opportunity to build an entire playbook on healthcare financing in India over the last 10 years. And we've already now decided to expand to Middle East and Africa, starting with UAE as our first market. We are awaiting licenses there from the government to start crowdfunding. But fundamentally, the opportunity in various GCC countries, if I talk about healthcare financing, is that while insurance is mandatory in many of these markets, in some of these countries, particularly UAE and Saudi Arabia, people can be underinsured for very serious illnesses. And many of these expats, particularly Indians, don't even have health insurance back home in India. So we want to work with the local hospital ecosystem and fund these cases in the local markets. and also work exactly with these customers like in India to increase their insurance coverage amount to be able to cover for very, very serious illnesses. So we are very advanced in terms of our conversations, our partnerships, as well as our investments to make that happen. And coming to the second part of your question on how Indian insurtechs can really partner, I think number one is in India, capital, right? I think there is huge opportunity, as Amresh mentioned, but you want these opportunities to be scalable, profitable, which does require capital because India is fiercely competitive. Second thing is innovation. Right now, innovation can come from big corporates. It can come from small companies. It can come from leaders. So there's so much disruption happening, particularly in InsurTech in India, where people are now talking about replacing telesales agents with AI agents. Policy Bazaar is making huge investments there. So there is huge scope to increase the technology adoption and AI adoption to replace a lot of the legacy costs in insurance, in broking, particularly on the non-life side, which could provide a much better experience and also much higher retention. And what Ratish is doing with Watch Your Health, which is really retention, because insurance is something you don't use a lot, but you do require that service. How do you engage customers, right? So I think the retention of the customers, a lot of the MENA insurance companies, the MENA insurtechs, there's a lot the Indians can learn from this entire ecosystem and implement back home. So those would be the three key things I think we can take away from this region.
I love your second point around legacy costs can be removed. We have heard this in multiple panels before. The PNC panel where Saurav was mentioning same thing. So that's resonating a lot. Similar question for you, Ratish, but a little different because you are ahead in the curve in terms of implementing here. You have implemented with a few folks in the region. Do share about that. But as part of that and that experience having successfully implemented, what advice would you have for insurtech companies looking to expand where the areas are the fastest route to value realization? Because for startups, time is the biggest currency. So which areas would you say Indian insurtech look here because this is where you can capture value and grow quickly?
So yeah, so you know that in India there's a huge capability on technology. So India is bursting on that end, but India is very price sensitive, and you don't get a lot of cushion on experimenting that base. Whereas MENA, I see that is more distribution driven, more broker driven, and those products which are fantastic in India on broker engagement, CRMs around for brokers, their engagement can work really better here. India is more retail driven. Health insurance is not compulsory in India, and you are always dependent on your corporate discretion. So smaller corporates do not cover employees to that matter. But here it's compulsory, so you can actually get a great deal of value for your product here, similar to what motor is in India. So people who have built a lot of technology around that should definitely come over here, and that's my advice to all those companies. You will get value for your product here. The second being embedded insurance. So India is still a little bit behind on that embedded insurance. So we typically have our legacy tools still working. The bigger concern is penetration. So that's where we are still trying to build a lot of engagement tools, and that's how we as Watch Health made our presence in the market by giving that value addition. But I see in MENA embedded insurance is something that people are talking about. I mean, this conference I heard it a lot of times, and I really thank this conference because there are some few ideas that I discussed with some of the partners, which can work on micro insurance or some embedded insurance. So I think future is that what I call as invisible insurance. You get insurance when you join a gym. It's priced in your gym fees. Travel, even today you have to tick a travel insurance, right? I think that day will go and your tickets will have that premium for the insurance. So I'll see a lot of invisible insurance coming these days. I also see communities, companies pooling funds and doing that. So I think future is exciting, and AI is going to make uh, our operation cost. Uh, I mean, I don't know whether you can rationalize it or not, but I see that it will make it far more better than what it is right now, and you get a real insights on the next step. So that's what my recommendation is to those companies India who's coming to MENA. So work on these two things: embedded insurance and good those broker related products to MENA as soon as possible.
Very specific advice. Thank you so much. I know I'm being signaled that time is limited. Is there, I have time for any questions from the floor. Anybody looking at Indian market? Anybody looking for Indian market to come to MENA? Any questions? If not, I'm going to then ask that same question to both Amrish and Piyush. Again, different perspective. I'll go to Piyush first because you are expanding. He was very clear. If you are providing tech for group businesses, broker tech, come here. If you're looking embedded, come here, right? Let me repeat the question. If you're as a startup looking, which are the areas where you can find value the fastest? Where should you focus on?
I mean, my vantage point is heavily on health, so it may not be a holistic perspective. And our approach has always been to talk to the ecosystem to find out their biggest problems. And the way we were able to diagnose and find out about the opportunity is speak to 10, 15 hospital owners about what their biggest challenges are. And what we learned was that they want to develop very advanced tertiary quaternary care for cancer for transplants. But there is a big demand supply gap given the insurance cover that people have, as well as a general culture of immediately exiting the country when you have a serious problem. And this is where we decided to collaborate and create a joint venture to be able to solve this problem. So I see big opportunities in healthcare across the region because in different regions, the level of coverage is different. In some countries, it's mandatory. In some countries, it's not. But we see building from where the problems are, which the ecosystem is also very clearly signaling to us. And it's only through partnership through which we are expanding. Otherwise, we would not have the confidence to do so.
So get a local partner,
So
guys.
actually, that gives me an idea. Wellness linked products also would do wonders here in MENA. So I think that is the third takeaway.
Wellness
So,
linked
yeah,
products.
wellness
Amrish,
linked
ending with you.
Sorry. I think Piyush said it well, I think the key more generic sort of advice would be to look at the ecosystem because, the demographics, the social fabric of the society here is way different to what you experience back in India, right? The sheer number of expat population, they have different requirements and needs for insurance. So, I think the biggest piece of advice would be how you tailor your solutions to the ecosystem here. That's very critical. And then lastly, I would say, partnering with the right partners, having the necessary regulatory and, connect with the authorities. I think those are the key pieces of points to keep in mind.
Thank you so much, folks. So we heard scale, look at India to as a test market to scale, and Indian Insurtech coming here, group insurance business embedded, find the right partner. And we constantly, I think you're hearing AI as productivity, something we also see at a cybersecurity space, where teams can have 10x productivity gains just with that AI embedded as part of your human teams. With that, thank you so much to our panel.
Thank you so much. Would you mind a photo with me? And as I said, it's not just an honor to have them here, but we had, I think, 40 people coming from India through Indian Insurtech Association. So it's really an important partner of us. Out of those 40, not everybody came because of the conflict, but at least I think we have paid our honor and want to do more. So we are coming, I believe, to the a really important panel. They keep coming, right? With a dear friend, not from the outside, but from the inside, Ruba, now moderating our panel around bank assurance. This is her job, yeah. But we also want to go embedded insurance in new frontiers with amazing set of speakers around the globe. So I think we have invited a couple of our partners. We have Chubb with us. We have Oro FinTech with us. We have our strategic partner, with Sharif, Commercial Bank with us. And I also invited Tama from the VC side because he did investments in embedded. So I'm looking forward to this panel. Ruba, please come up and bring your people with you. Thank you.
Okay, good afternoon, everyone. Thank you very much for being here with us. It is my pleasure to moderate a panel today about rethinking distribution, where I'm having very much expertise in bank assurance, in Insurtech, in eco-digital systems, and I'm so happy to start the panel. Hopefully it will be fast within the time. We'll try our best not to make it we'll make it excited, not much of boring. If you have any questions at the end of the panel, it will be our pleasure to answer all your queries. So, hello, good afternoon. My name is Ruba Hassan. I'm the CEO of Mason Insurance Services, and we are a joint venture between QIC Group and the Commercial Bank. And I have here our panelists. I have actually Mr. Israel. So I have Israel Ryan, who is the Senior Vice President, Head of Accident and Health Europe, Middle East, and Africa, CHAP. I have Mr. Sharif. Sharif is the Head of Assets and Insurance Business, the Commercial Bank. I have Mr. Tamer. Tamer is the co-founder, General Partner, Venture Souk. And I have Mr. Suresh. Suresh is the Head of Partnership, Oridu FinTech. Thank you for joining me today, and looking forward to know about your inputs and your expertise during this panel. Now, at QIC, we are very much, we work really hard to come up with a new products that fit the different needs of our customers through different channels, bank assurance, ecosystem, digital platforms. And we will be actually launching some of these innovative products. And here I'm having our panelists to speak more about these new products, including microinsurance, some of the new products in the market, and how the distribution channel, how the rethinking and redefining the distribution will make a difference. So, Mr. Israel, how has insurance distribution evolved over the past few years? And what is the driving the most change right now?
Thank you for having me, Ruba. It's a pleasure being here today. So I would say that to answer that question, we need to go to our daily lives, right? We all are consumers. We all are interacting with technology. And I believe that insurance is just following a trend that it is way beyond what it is insurance. We all have different digital platforms in our phones. I think that the smartphones have changed everything. And we are, in insurance, we are not different. So the consumers are expecting similar experiences. So if I have a customized content in my Spotify account or in my Netflix account, why not having the same experience when we are talking about insurance? If I'm purchasing anything, any good in Amazon, and I'm having my delivery within the day or the day after, why insurance shouldn't be as quick as my experience with Amazon? And obviously, then we need to make a distinction between what I call push products and pull products, because there are insurance products that people are looking for, auto, home, etc., while there are others where, let's face it, you don't wake up in the morning thinking I need an accidental death policy. So this has to be explained. Now, the eruption of the technology is really allowing insurance companies to catch up with that gap, because we can create, for example, content video for increasing consumer awareness. One of the challenges for insurance companies is consumer awareness when we are talking about products and insurance needs. And let's face it, again, consumers are changing. We don't read that much, especially new generations. They want to see short videos where everything is explained very crisp, and we have a responsibility to make sure that that is happening also in our world. The other component is the use of the data. And that is very, very important. And this is really a game changer for us, because this touches every single piece of the value chain, from underwriting to claims, customer onboarding, service, etc. And the data is allowing us to really tailor the insurance offers. In the old days, we were selling products that were pretty much predefined, and we are moving towards customizing experiences. So by using and leveraging data and using transactional data, we are able to place insurance offers in the moment where the customer needs it, and it is perfectly understood. So it's almost what I call a why not type of offer, right? And the last thing I would say that has changed a lot is regulation. In the old days, most of insurance practices were not monitored and were difficult to justify to a regulator. Today, when you have an audit, with digital channels, you are able to show the regulator every single customer touch point, including recordings, and you can present proof of what they are expecting to happen, that it is actually happening. So all in all, I believe that for traditional companies like us, where we have invested heavily in our digital assets and building platforms like Tap Studio, also the Insurtechs that are coming to disrupt are actually not a threat, but a help and support for us, because we partner with them to really accelerate this. Because Lars yesterday said something that it is really, really interesting, and for me is the truth. The evolution of this is super fast. So there is no company that can sustain that speed alone.
Thank you, Israel. Sharif, as the head of bank assurance retail in the commercial bank, and I know like you're doing this for so long. From your opinion, did you think the bank assurance is still the major distribution, the main distribution channel in the digital first world? Thank you.
Thank you. Thank you, Ruba. First of all, I would like to thank QIC, our partners, and Masoon for giving me the opportunity to participate in this panel. So it's a good question. I can assure you that, again, bank assurance is the growth engine for banks today and in the future as well, but only for banks that will invest in digital transformation. And that has to happen predominantly, my view on that, due to three main drivers. One is meeting our customer expectation of an enhanced journey. Two, rising competition from fintechs. Three, again, we're a company, our focus on the bottom line is very important. And we all agree that we can do a lot through digital transformation at fraction of the cost. I would speak about our experience in commercial banks. So we've realized long time ago that investing in digital transformation and adopting new technologies, again, is inevitable. And it will not only allow us to offer enhanced digital experiences end to end, but will take us to the next level where we can offer hyper personalized products meeting our customer needs. And again, through investing in AI, machine learning, analytical, MISs, that will allow us to understand the customer behavior, to anticipate their needs, and again, come at the right moment with the right offer to the client. And this is transformational. And a very quick example I'm very proud of, we've gone through with our partners in QIC and Masoon, a very simple travel insurance product that has been on the shelf for years. And we could maybe sell a couple of hundred policies a year through other traditional channels. When we started the digital journey, today through live data streaming, once the customer transacts with his card in any travel-related merchant, a message is sent to the customer prompting them to log online and buy the insurance policy. But that's growth where we transfer 200 policies a year to tens of thousands of policies. Same we've done on motor insurance. But again, growth, yes, it is, but under one condition for traditional banks to invest more in technology, because again, it's a very dynamic world. Thank you.
Agree. Thank you. Thank you, Sharif. Tamer. So Tamer, you're the general partner, co-founder of Venture Souk. Now, again, from your opinion, Tamer, how can insurers operate within broader ecosystems while maintaining the product relevant and customers' expectations?
Yeah, I think that, so we're a fintech investor and we invest into early disruptive companies in different arenas of fintech, including Insurtech. And I think we see it, the world in fundamentally two ways. You have companies that are kind of like digitizing traditional insurance or improving traditional insurance. And then you have companies that are introducing new concepts that are fundamentally new to insurance. I think what's interesting from our standpoint is the number of times that we look at companies. So we raise money from institutional investors and we invest into small businesses. The number of times that we think to ourselves, God, I wish there was an insurance policy that we could take out against this and this and this and this and this. You start thinking the possibilities of insurance as kind of like as a security blanket against certain risk that you take as a business are sort of endless. And if you start looking at it that way, then you start seeing, okay, insurance could be everywhere in ways that it doesn't exist now. And especially when underwriting, credit evaluation, with the introduction of AI, you could start pricing this thing more effectively. Then we could, as businesses, we could isolate the type of risk that we want to take and then work really closely with insurance to be able to do that. So that's one way that we think about insurance. To your question as like, can insurance live in other ecosystems? I think the answer is like, it must. It absolutely must. I think we've been spending decades trying to make insurance digitally friendly, user-friendly, create UX, user journeys that are going to make insurance more palatable to the individual user, when actually what we should be thinking is what natural ecosystems do users gravitate towards? Like, ride hailing, they touch many times a day, and content, Netflix, they touch many times a day. So where do people actually live? And let's figure out how to push insurance through those natural channels. So you must, yeah.
Agree. Thank you. Thank you, Tamer. Suresh, you're from Ooredoo Fintech, and where we see a lot of transactions happening, definitely with a lot of digitalizations. Now, which non-traditional channel you think that they're most excited about?
Of course, Ruba, I'm going to say it's telecom. Right. Not because I'm working for a telecom, but actually telecom would be a very good channel. Why I'm saying that is you can't partner, or an insurance company cannot partner with everyone, right? Yes, you can have embedded insurance, but partnerships needs to be very strategic and it needs to go through a set of process. So when you look at a partner who can cover a wide spectrum, and that's also on a digitally, is telecoms. because telecoms are structured in such a way that anyone who is earning $100 a month is also their customer. And at the same time, anyone who is earning $100,000 a month is also a customer. So their model is structured in such a way that they have to serve all these segments equally. Right? It cannot be, signals cannot be low for someone else, and then signals cannot be high for someone else elsewhere, right? So it needs to cover the entire spectrum of the society. Also, the telecoms, you don't have many telecoms in the countries, maximum 2, 3, or 4. Right, so this also gives you ease. If you make a good strategic partnership with the right telecom operator, then your reach is more. So considering these factors, I think telecom would be a good suit, and there had been a lot of success stories around telecoms providing insurance as well.
Exactly, Suresh. Thank you. Now I want to ask questions about embedded insurance. And just to ensure that, like we all know what's embedded insurance. Embedded insurance, actually, it's a type of insurance solutions that can be bundled with any other solutions. For example, let's say I'm paying for Uridu, my bill, so I can add Bill Protect to my bill, and then I'm having an insurance along with my product. There is also other type of micro insurance. While I'm doing my remittance, for example, I add also a micro insurance, tiny insurance product. So while I'm doing the remittance, that's what we are calling embedded insurance. Now, as a company leading these type of insurances, Israel Ryan, so where you can you please share with us an example where you find that these embedded solutions, embedded insurance works really well, so we can practice also this here in Qatar? Thank you.
Yeah, sure, absolutely. So we have, as we speak, over 200 digital partners across the globe. And this is coming from different verticals, from banks to super apps, airlines, you name it, utilities, telcos, etc., etc. And what we tend to do is to co-create the insurance need by identifying the customer pain, because there is always a pain. And our responsibility as insurers is really to fill a gap that it could come with that. So we were talking about the data and using the transaction to understand what is the customer in the journey, and then place right there the offer. And I will give you a couple of examples. One is in Southeast Asia with a super app where, when is the equivalent to Uber, it's called Grab. So you are ordering the Uber, it tells you that you are going to have the car within the next 10 minutes, and then arrives late, or start calculating, and you see that the 10 minutes become 15, right? So obviously that company can do nothing around improving the traffic in that given city, but what it can do is to increase the customer experience by covering that ride. So if the car doesn't arrive on time, you will receive straight away in your wallet a compensation for it, right? And then you can reutilize that money for future rides. So it's a kind of virtuous cycle. Another one would be, something that we launched in France and the UK with a company called Pay by Phone. This is a parking app where you have to use to park the car in the street or in a private parking. And they were concerned about delinquency areas. So people were not parking cars in certain areas because they were afraid of the content on the car when they were parking it. So what we are doing with the data again and analyzing delinquency reports is to ensure whatever you have in the trunk up to a certain limit. So the offer is really placed in the moment where you are sliding to pay for the parking, and only for a fraction of the total cost, you get your trunk insured. So again, the customer thinks, well, this is way beyond parking my car. This company is really taking care of me, and is giving me the peace of mind to leave my car parked here. Those are just two examples. I could spend the whole day.
Thank you, Israel.
If I can,
sure.
If I can riff on that.
Please.
The point about being embedded is that entire experience with that ride hailing company should be native to that ride hailing company. I mean, in our view, it's like inside of Uber. Okay, yeah, sure. You want to take away ease of parking concern or ease of missing your flight, and here, click for all of this stuff. Now, actually, Uber is only making money on the ride itself. It has a back-end insurer who's providing all of these incremental services. The customer never sees that third-party service ever exists. And from an embedded standpoint, that should be the way that this stuff is sold. The idea, I think that a lot of insurers, and I guess that's for value preservation, there's a lot of reasons behind that. Think it's important to me that the customer sees my brand. From our standpoint, it's almost an unnatural phenomenon that the insurer that the customer would have a super close relationship with the insurance.
Absolutely, Tamer. Absolutely. Thank you very much. Sharif, bank assurance, we know it's always the major distribution channel for the insurance product. If there is something you would like to change for tomorrow in regards to distribution channels, what can be?
So basically, I think if we'll change, we have to look at the future. So in my point of view, a shift to hyper-personalization through digital channels is the only way forward. But in bank assurance, specifically in our situation, the only way to achieve that, we need both the bank and the insurance partner, both to invest heavily in technology and in parallel. So this is the way forward. And again, we as banks, we sit on an enormous amount of data, be it behavioral, transactional. And I think if we properly use this data, it will not only benefit the bank, which we're currently benefiting from in our core products. I think it's a huge opportunity for insurance companies who do not have this data on their. So indirectly, they can benefit. For example, they can upgrade their product proposition and maybe offer, which is not available in Qatar, which is usage-based products and clubbed with, for example, dynamic pricing. Imagine the example of the travel insurance. Still, we're looking at, I think in this world, it's post-fact. So whenever the customer transacts embedded, he's already there. So maybe through this data and behavior, we can take it one step further and again, anticipate what the customer will want before even the customer realizing. And imagine the power of coming at that point, not at the point of need, anticipating his need and offering them a customized, personalized product. Like, for example, travel insurance, frequent travelers can have a 1-year product. Whoever is traveling with a family can have group and priced according to the needs. And I think partnering and making use of the data is a big thing. And this is the future. And otherwise, traditional banks and bank assurance partnerships will not have a chance. And I can assure you from a commercial bank perspective, if we're not the only, we are pioneers in investing in technology, digital transformation. Currently, it's not a secret. We're doing a lot of work around AI and machine learning, which again, not only us, but all our partnership ecosystem will benefit from that. Thank you, Robert.
Thank you, Sharif. Tamer, how do you think the APIs and Insurtech platform are empowering the new distributions model?
I think that consistent with what we've been talking about with embedded, the API, the SDK, the way that the insurer integrates directly with the business is essentially that is the channel that needs to happen. That needs to be seamless. I think that the risk that as technology changes, what we're learning is that the risks, if insurance is a way to mitigate risk, what technology does is not just serve as an easier access point for customers, but it creates these fundamentally new risks that no one ever thought was there before. Like right now in AI, right? You have minimal risk. You have a big risk that a business is going to overbuy or overbuild its cloud storage capacity. Like people haven't really thought about that, but Ooredoo Telecom or any telecom could go and buy 10x more cloud capacity than it needs for AI because it doesn't really get. So that could be a risk that could be insured. You could cover against that. There's also a risk that AI is going to create a robot that's going to eat your children. Like that's a new risk that people hadn't really thought about. And now you have a new. And so the way that customers perceive risk can now, using those same tools, can be priced, the protection against that, no matter how kind of weird or insecure or ill-founded those risks are. Technology allows us to now sort of protect against those risks in real time. And if you're integrated into a system that is very advanced in recognizing risk and pricing that, whatever your own insecurities are, then you could now feed that directly into platforms directly. So, it's essential that that channel, the SDK or the API channel, remains open in a very rapidly evolving world.
Thank you, Tamer. Suresh, with our last question, embedded insurance is gaining progress, but what do you think, and how do you define real success in this time?
Yeah, Ruba. Look, I think the first time I got an insurance was when I had to get a Schengen visa long back, right? And generally, I'm not that savvy to go and get insurance for anything, right? So this is the general thinking of everyone, right? And what I see in recent times, there's opportunity created for insurance companies in terms of risk, and there's new things, new insurance types coming in. And the best thing I see is the cost of the insurance. With technology, the cost of the insurance is getting reduced, right? And with that particular reduction, plugged with the distribution channels that provides easy access for the insurance, is becoming a very attractive segment. So if you ask me, yes, it has a lot of growth potential. Now, you know that we partnered QLM to do insurance, right? Mainly we have a large number of low-end workers using our platform for remittances. So we did the remittance insurance, and we gave free of charge. Thanks to QLM, we gave first 3 months free of charge insurance, right? The conversion. Any guess what was the conversion? How many remittances got converted into insurance? 10%? Less than 10%? It was just 1% of the customers converted. Only 1%. Free health insurance, only 1% converted. And after we charging it, it become 0.5%. So that 0.5% seriously thought it's a good product and started buying it. This is a complete new segment for you. Complete new segment. With our volumes, 0.5% is a big number for you, which you won't be achieving with your distribution channels, right? So there were the opportunities. There is a complete untapped market which can make benefit for both the ends by providing it.
Thank you, Suresh. So what we can actually summarize from our panel today, we can definitely, rethinking about the distribution, how important distributing our products is really the key point of success. Not only that, come up with new products, embedded products, new solutions, something that meet the needs of our clients. Study the market, Qatar market, GCC market, Middle East market, regional market, come up with something new, because we all agree today in the speed of AI, definitely we have to be as fast as AI and come up with a lot of new solutions, and Insurtech, bank insurance, and eco and digital ecosystems. So thank you very much for your great insight. We have definitely, I personally learned a lot. Thank you for the people who joined us today, even with their busy schedule. And we're looking forward definitely to work all together. Thank you very much. Thank you, everyone.
Thank you so much. Robert, do you take a photo? Thank you so much for this really interesting panel. Insights and strategy and energy. So what we will do now is, I think you hear people eating, so I think it's time to eat. Hear me out, please hear me out. We will try to restart at 2:25. We're moving one panel from the other stage to this stage, so we need to squeeze everything in. So we have something like 25 minutes break. You do some photos in between, so don't worry. Have something to eat, get energy. We will be back with an AI-generated video from Google, and we will be back with a life hack. You can't miss the life hack. That's what I said in this morning. You want to see how people are getting into your accounts, you will see it. So be back at 2:25, seeing the life hack. Thank you so much. Enjoy the food.
It's Renovate. It's Renovate. Words and roll, it's round and roll. A matter of time to pass what's this better. Breath so let now you're here. The marketeers, creative systems that excite us. We take hits, those brand new highs. Smart and miles ahead, brand new plug-in higher to embed. Gone from days of trading gold to what up in tech. It's try to behold. Crunch the data, we take the dumb out. Give your clients a way better deal. Take that show you cost a lot. Compliance that is down in the tide. Fastest way. FNOV. It's Renovate. It's Renovate. Words and roll, it's round and roll. A matter of time to pass what's this better. Breath so let now you're here. The marketeers, creative systems that excite us. We take hits, those brand new highs. Smart from miles ahead, brand new plug-in hire to invest. Gone from the days of trading gold to what a fintech that's try to behold. Crunch the data, we take the dumb out. Give your clients a way better deal. Like they show you cost a lot, compliance that is standards high. The fastest way. FNOV. What's gonna change? Oh, I say, wait, but this is great. Legacy. It's Finnovate. It's Finnovate. It's worse and low. It's round and low. A matter of time to pass what's this breath so little now you're here. Tears, created systems that excite us. We can take it, those brand new highs. Smart from miles ahead, brand new plug-in hire to invest. Gone from the days of trading gold to what a fintech that's try to behold. Crunch the data, we take the dumb out. Give your clients a way better deal. Like they show you cost a lot, compliance that is standards high. The fastest way. FNOV. It's It's Finnovate. It's Finnovate. It's lows and low. It's round and low. A matter of time to pass what's it's past but so late now you're here. Tears, creating systems that excite us. We'll take it to those brand new highs. Smart from miles ahead, brand new fucking high to embed. Gone from the days of trading gold to a world of fintech. Let's try to behold. The data, we'll take the tone now. Give your clients a way better deal. Like that show you cost a lot. Compliance, that is time and time. Fastest way. Finnovate. It's Finnovate. It's Finnovate. It's lows and low. It's round and low. A matter of time to pass what's it's past but so late now you're here. Marketeers, creating systems that excite us. We'll take it to those brand new highs. Smart from miles ahead, brand new fucking high to embed. Gone from the days of trading gold to a world of fintech. Let's try to behold. The data, we'll take the tone now. Give your clients a way better deal. Like that show you cost a lot. Compliance, that is time and time. Fastest way. Finnovate. It's Finnovate. It's Finnovate. Lovers and low, payments round the world. A matter of time to pass what's this password. But so now you're here. The market tears. Created systems that excite us. Insurtech hits those brand new highs. Smart from miles ahead, brand new plug-in high to embed. Gone from the days of trading gold to a world of fintech that's a joy to behold. Crunch the data, we take the tone out, give your clients a way better deal. Take that show you cost a lot, compliance that is time to the tide. The fastest way. Finnovate. It's Finnovate. It's Finnovate. It's the lovers and low, payments round the world. A matter of time to pass what's this password. But so now you're here. The market tears. Created systems that excite us. Insurtech hits those brand new highs. Smart from miles ahead, brand new plug-in high to embed. Gone from the days of trading gold to a world of fintech that's a joy to behold. Crunch the data, we take the tone out, give your clients a way better deal. Take that show you cost a lot, compliance that is time to the tide. The fastest way. Finnovate. Finnovate. It's Finnovate. It's Finnovate. It's round and round. A matter of time to pass what's it's but so let now you're here. Marketeers, creative systems that excite us. Can't take it, those brand new highs. Smart from miles ahead, brand new time to invest. Gone from the days of trade and gold to what fintech has try to behold. Today, we take the time out, give your clients a way better deal. Take them show you cost a lot, compliance that is standard time. Fastest way. Finnovate.
Great. Okay, thank you so much. We tried to do a couple of photos of key companies supporting us, and CBQ has been supporting us for years. Thank you very much for this, and I think bigger event and bigger support from you. So please join me, and we would like to appreciate this with a small award celebration. Thank you. Thank you so much. Pleasure. You want a special announcement? Ruba, will you join me, please, on stage for the awards?
Masoon team, can I have you here, please? Rajul, Sham, please join me quickly now. Masoon team, everyone, come. Come. Nurhan, Salwa, everyone, please join me here. Thank you. On behalf of Masoon, thank you, Lars, for giving us this opportunity. It's really, really great to be with such a great team. Thank you so much. Thank you. Thank you very much. Thank you.
I think Amin is
Hello, hello. So I just wanted to tell people that are still eating and networking, please come over. We will restart now. There's always more tech problems than I hope we have. But please come over. We will see, hopefully, a Google video. But more importantly, a life hack. How are you getting hacked? Will happen in the next 2 or 3 minutes. Please join us. Thank you. Google works, Google.
Hello. Good evening, everyone. Thanks a lot for your time today. It's a pleasure to. Oh, sorry. You want to do the introduction?
Good. Okay, guys. This is a final reminder. Please come over to the stage. The life hack restarts. Okay, you know me. I'm rude sometimes. Okay, having said this, we have a dense and tense but really interesting afternoon with each other. We will start with the life hack. So I was been dreaming of this for a year, I have to say, but I only told Amin a month ago and said, yes, Lars, I will do this. And why is that? Because obviously Amin is heading a company that we have invested in, but before running this company, he did something. He has been a good hacker, let's put it this way. Yeah, and there's even a Forbes image of him somewhere, I believe, right? So he will show us how you can easily get hacked with things that you use every day. And we want to use this to move on to a cyber insurance panel. And after the cyber insurance panel, we have really 2 or 3 amazing panels that are coming up. So please join us here if we get the things rolling. Now the floor is yours.
Good, thank you. Thanks a lot, Lars. It's a pleasure to be with you today. We'll be introducing a live hacking session by my dear colleague, Mohammed. My role in this session, just to introduce Mohammed, then please stay where you are. We have another very exciting panel coming right after this to discuss the life hack and the cyber topic and its impact on insurance in general. So without further ado, Mohammed is a cybersecurity entrepreneur in the domain since 2016, recognized for being one of the very first early pioneers of ethical hacking in the region. Since then, has been featured on the cover of Forbes. In 2022, he launched a cybersecurity company and a product called CypherLeak, which is really focused on small and medium enterprises. It's an automated risk remediation platform right now with more than 1,000 customers. So all the best, Mohammed. Over to you.
Hi, good afternoon, everyone. I hope you can hear me clearly. So I wanted to make this as realistic as possible and also as simple as possible. You know, what's the lowest bar we can do to show you how easy it is to hack people? And maybe that will make you change some of your behaviors and cybersecurity hygiene. Now, when I was looking at the case, I thought, what's the most common thing that we do that's not really safe in this region? And show of hands, or maybe without show of hands, most of you, I assume, use VPNs to make Instagram calls, WhatsApp calls, to access websites, because we have so many restrictions, right? I see some people nodding. So I thought, let us create a fake VPN website, send it to an employee, have them try to download it and see if we can access their machine and their laptop, all right? Okay, so the first thing I'll do is I just created this website. I called it freevpntoday.com. It looks quite realistic. It's a, by the way, let me explain the setup first. These are 2 screens, okay? That screen that you see is the hacker screen. This screen here on my left is the victim screen. So let me just. Okay, great. So this is the fake VPN website. You can see that it has all the hallmarks of an actual website that explains the benefits of a VPN that's going to allow you to make all these calls. And I'm going to send this to an employee in a bank called GPT Bank, all right? So just going to send him this nice email saying, hi, this is a free VPN. It allows you to make free calls. It allows you to browse with the internet without limitations. And I'm going to send that. Okay, now we will going to switch to Ahmed's laptop, who's sitting in a bank somewhere. He's frustrated because he can't make WhatsApp calls. So he's really been looking for a good free VPN to use. Okay, so I clicked on the link that he received by email. He's really excited. He gets a free VPN. He's redirected to the fake website. The website is not flagged by Google or anything, right? It's a good looking website. It has HTTPS. No reason for it to be suspicious. So I'm just going to go ahead and download the VPN. Now notice here, download free, and the password is admin123. And I'll explain why I put it in a zip file. Okay, notice that I downloaded the file, right? I opened it, that wasn't flagged. And all of these things that I'm doing today, they're mostly open source stuff, which means people with limited knowledge can go and do this by themselves. You don't need to be an advanced hacker. The email was drafted by ChatGPT. That's how I did it. The website, I built it literally with Claude AI. So I gave it just a prompt to make a good looking website for VPN. So everything is accessible for anyone with limited knowledge. Okay, so I downloaded the file. I'm going to execute it now. In the meantime, what I did is I prepared what we called a C2, which is a command and control center. It's basically a server that I'm going to use to listen in and see if the laptop makes contact with me so I can download files and access the camera and so on. So let me just set up that environment. You just have to bear with me here for a few seconds. It looks like those kind of movies where you see a hacker type in on a terminal. So this is basically it happening in real life. Okay, so now I accessed my server that I set up. I put there all my necessary tools to carry this hack. I'm just going to do a couple more lines, and then we take it from there. I didn't want to do this beforehand so that you guys can follow with me through the process, all right? So I hope I'm not boring you. Now I'm loading an exploit, which is something that you can find on the internet. It's a tool to exploit the malicious file that I have sent to the victim. So I'm preparing basically my weapons right now. Okay, so what I did now is I set up basically how I'm going to be listening in for that device to communicate with me. And it's listening now. It's waiting for the device to make contact. So I'm going to go back to that laptop. Here, notice I got a warning message because normally when you download tools or applications from untrusted sources, you get like a warning message. We tend to download a lot of these things. So generally, this is nothing to be too suspicious of, just because I didn't download it from Windows Store or from App Store or so on. OK, so now I run it, and I'm waiting for my machine to listen in. And you can see that I received traffic. So that machine is pinging me saying, hey, that malicious file has been run on that device. So now I can talk to that laptop. And let us see what we can do now remotely. Shots from the webcam, from their webcam. And everything I take, or all the files, like the recordings, the pictures, the audio I'm going to record, I'm going to put it in a website that I'll show you. OK, it's starting up the camera. Notice that on the victim's laptop, nothing is suspicious happening, right? There is no camera that's opening up. It's basically as if you're using your laptop normally. And it's telling me that it's got a frame. So let's check what picture it took. This is what I'm saving my files. So let's see. It basically took a photo from here on here. So let's turn it to the audience to make sure that we can see what's going on here. Now I'm going to run a camera stream. All right, let's see. Okay, it gave me an HTML file. Okay, so to make sure, because we have internet that's running, if someone can pass by in front of the laptop just to see if we're actually getting an updated feed. So see, if the internet was strong, we would be able to stream the full camera, but it's just taking screenshots. Again, nothing suspicious is happening on the victim's laptop, all right? We can go beyond this. We can record basically anything through their mic. So let's see. And after recording this, we'll go to the next step, which is, can we access the files of the victim, maybe delete some of the files, maybe download some of those files. So we'll try that as well. OK, it seems like we got a bit of a bug, so we'll have to restart it in order to. And this is the beauty of demos, is that there's always a part of the demo that will not work, right? So basically, I'm just going to redo the process of connecting again so I can enable the mic. Next thing. Okay. So, well, just because of the interest of time, we're not going to go through the process again. But as you could see, I basically managed to get access to the remote device, capture the screen through, use the camera, and also we're able to, as I said, access files and mic. But that was just a quick, small presentation. I hope next time we'll have a longer time so we can go through the entire process. But thank you.
Thanks a lot, Mohammed, for a very nice and exciting presentation. Now it's time for the panel where we will discuss this and we'll discuss the impact of cyber on the insurance world and what this means for all of us. So I would like to invite Mr. Naveen Kumar and Mr. Pramod Rai to the stage, and I will be your moderator for the day. Please. Okay, so maybe in the beginning, we'd like to have a quick introduction. I think we have already introduced Amin from the previous session, and thanks a lot, Amin, for your wonderful presentation. Mr. Naveen, we have him with us today. Mr. Naveen Kumar is an underwriting manager in QIC, a technical expert in general insurance, especially property insurance, casualty insurance, FinPro, and specialty products. In total, more than 40 years of experience. So thanks a lot for being with us today. We also have Mr. Pramod Rai. Mr. Pramod has many years of experience in building multi-agentic infrastructure for the protection and the compliance of your clients. He works with global clients across the world, mainly in the Asia Pacific region, also in the States, and have lots of customers in India and Singapore. So thanks a lot for being with us today. So I think it's we're living in a world where everything is now connected. Everything is becoming very relying on digital solutions and platforms. And we're all going to be, at one point, either hacked or maybe already hacked, but we don't know. And how this impacts the insurance worlds and the claims and the financial infrastructure behind it. So I have some questions to the panel about this. Number one, maybe we start with Mr. Naveen. So when you are working in QIC, what do you want to see and what do you don't want to see in any company who's going to or asking you for insuring them against cyber attacks?
Thank you, Omar. So, so basically, as an underwriter, we see some basic security measures as a minimum requirement from the insureds. The first thing is access management. So what are the controls they have for remote access? Multi-factor authentication is one of the measures. And perimeter security. And then we can say like security patch updates is one of the important thing. Yeah, whether they have a regular security patch updates and what about the password hygiene?
So you look at the basic security controls that they have, and the better security controls they have, this gives you more confidence that they are in a good position and you will accept them as a client to be insured.
Yeah, so these are the basic minimum requirements. So other than that, see, actually when cyber insurance was the first thing when it was started, we used to get more information. Now it has been, because of the development in the technology and other things, the requirements has come down. Now there's a simple 1 or 2 page proposal form is more than enough to get a basic cyber insurance.
Okay. And if a company is certified by ISO or NIA standard in Qatar, would that be something positive you would like to see in your potential clients?
Yes, of course, if they are compliant with, suppose if they are PCA compliant, payment card industry compliant, they have to comply with the payment card industry standards. Then if they are compliant with any other local regulatory requirements, so that is also a very important thing.
Thanks a lot. Now, maybe question for you, Mr. Pramod. I noticed from your bio that you have experience in agentic infrastructure. Can you maybe please explain to us what is agentic infrastructure?
Sure, happy to. I think a lot of us speak about AI agents and agentic infra. For us at Cyber Sierra, we have this reference architecture that we speak about. So think about your large language models, whether it is ChatGPT, Gemini, or a custom large language model. That's what we call your base model. And then you have your system prompt. We make modifications to your system prompt to put in place the right set of guardrails where your security and privacy concerns are addressed for the enterprise. Then we also have a knowledge graph in place. That's an ontology knowledge graph, where every time you run your scans, we build a view of your assets, which could be your applications, devices, and people, as well as the relationships between these. We expose a user interface where you can write a query, much like how in ChatGPT, you can write a query inside it. Now, the combination of these allows multiple AI agents to work within your enterprise environment to do tasks like search, execution, retrieval, code generation, even attack vector generation, to your point of what you were doing earlier. So these things can now be done at a scale that is far larger than before. That's multi-agentic infrastructure.
So agentic AI can be used now to have a holistic view of your environment, and maybe you can use it to actually tell you the weaknesses in your environment and what are the attack vectors that can happen in your environment. So like having an attacker thinking on your behalf, trying to help you and give you hints what can go wrong.
Yes, in fact, the biggest difference that you see now is cybersecurity has been about amplifying signals in the past 40 years, right? You use humans to address those signals, or you use another tool to do something about the signals. But with agentic AI, you can look at all your logs. You can look at all your misconfigurations. You can look at everything in your stack. So yes, you would work with it. What we say is we deploy AI agents into human teams, where the AI agents do all of this work, which is repetitive, time-consuming, manual, and then you have humans to go and make a sense of what to do with the reports that are being generated.
So you use the AI to do the heavy lifting and make your people focus on the what really matters at the end of the day.
Yes.
So thanks a lot for that. Very insightful. Maybe Mr. Mohammed, thanks a lot for the demo again. And now I think we have proven and shown to us how easy and it will be even more easier with the AI support to make attacks possible. So how can we make cyber insurance more accessible to small and medium enterprises?
It's funny because I had to go through the process myself. One of our customers required us to have a cyber insurance coverage before we work with them. This was like a public company in the US. And I literally went to, I think, 3 or 4 brokers and insurances in the Middle East. The minimum quote I received at that time was $25,000. $25,000 for a cyber insurance coverage. I'm a startup. I have like 6, 7 people. I'm not going to pay $25,000 for an insurance. So that showed just how unaffordable cyber insurance was in this region. I looked elsewhere. You have in the European markets, in the US markets, where policy premiums are at 2,000 euros a year, 3,000 euros a year. So that's quite a discrepancy. So how are we expected to support these digital transformation and revolution when insuring against the risk of the digital kind of fallout is not available for SMEs? So that's where we came as Cypher League, because we understood that the biggest or the hardest part was the underwriting process. How do you assess risk? How do you understand that these smaller companies are doing their tasks basically in preventing themselves so you can make them insurable? So that's kind of where we agree with our friends here, is that like we decided what are the parameters that are basic security needed. We created a platform that automatically looks for these things, scores these SMEs, and then allow insurances to say, okay, these guys are doing their job. They're not as big of a risk, so we're going to do that. So we took the underwriting from filling pages of questionnaires over weeks to a 1-minute assessment that's automated through our platform.
So from your experience working in different regions, you believe that the premiums and the entry level required from insurance coverage perspective in the region are maybe 5 times, 6 times what is you're seeing in other parts of the world. It might be because of the maturity. It might be because of the standards that are actually enforced over there. But that brings you back to Mr. Anandakumar, because you're in the underwriting domain. You're a representation of the team that actually puts how much is the insurance policy going to cost. So with that feedback, would you like to see the regulator stating how the premium should be calculated and how the invoice, the insurance policy value should be calculated, or you prefer each company to come up with its own calculations?
Well, see, when you talk about a regulator, regulators or the law enforcement agency, let's say, government, their main interest is to protect the larger public. So that's how this motor third-party liability
Not to make
insurance,
money.
health insurance, because they are made compulsory by the regulators, basically because they want to protect larger interest. So if you look at the premium of cyber insurance globally, it is about 15 to 16 billion dollars, which is less than 1% of, let's say, other lines. So in order for the regulators to arrive or provide any solution for this, they should have a sufficient data to back up. And also they should get larger feedback from the public and insurance companies per se, and also like certain other companies like AMOS, Ministry of Commerce and Industry. There are certain other stakeholders are there. Everyone need to get involved. Okay. And there are certain industries which handles large volume of PA, personal information.
Medical, banks.
Yes. So those industries, maybe they can look at starting a small level of that party liability cover kind of thing. So private companies are more like regulators to cover their own interests. See, cyber insurance, there are two covers. One is first party cover and third party cover. So basically regulators may come up with providing a compulsory third party kind of thing. So which helps to increase awareness among the general public.
Of course. So we might very soon see a world where just like we have to have medical insurance and we must have a car insurance, we might see a world where we must have a cyber insurance for certain companies and certain sectors that have personal private information, for example. No, thanks a lot for that. Maybe back to Mr. Pramod, question. So we're seeing a lot of new technologies, a lot of hype as well. From your technical experience, how can we distinguish between what's hype and what's reality? And how is that really AI will change all of this and it will, make the whole world go upside down in the field of cyber and insurance?
The short answer is yes. And to cut through all of the hype, I think it's most important to just very quickly apply some metrics. So this would be like, is accuracy beyond human? Is time safe beyond human? Is it reliable? Is it scalable? Once you have these metrics in place, it's very clear. Anybody who is talking about agentic infra will have to show, like, these are my agents, and this is a task that's being automated. Let's look at the numbers, right? Otherwise, we can spend a lot of time just saying big things, but the magic lies in the mundane. Magic lies in the actual work itself. So very quickly, take the tech, put it through a test. It could even be a half an hour test. It doesn't have to be a 1 month or a 3 month POC. Within half an hour, you'll get your results.
Thanks a lot for that. My last question to Mr. Mohammed here. So how do you think cyber insurance can actually play a positive role in the digital transformation we're seeing in the Middle East, or specifically in Qatar? Will cyber insurance be a factor that makes things go faster and with more confidence and more trust?
Before I answer that question, let me put the context that will pave the way to my answer. As my friend said here, everything is hackable, right? You could have the latest software, the best defenses, you'll still be hacked one way or another if someone really puts in an effort. So with that in mind, we have a lot of governments and public entities that do not want to take as big of a risk with digitization because of the downside of getting hacked. A small example, maybe not so small, just 2 weeks ago in Morocco, our national insurance basically register and salaries processing register was hacked. Every Moroccan's salary data was published. Every PII was published. And the government took a step back saying, well, maybe we shouldn't be so fast with digitization. So if you're able to find a way to take away that risk of potentially getting hacked down the line and transferring that risk to someone else through insurance, a lot of these entities will be a lot at ease taking these steps for faster digitization. It's just about like a risk factor that they need to offload. And this is where cyber insurance is going to play a key role.
That's a fantastic insight, and I think it goes very well with the United Nations latest report and the World Economic Forum. The number one thing for digital transformation is the word trust. If we can't, and if we fail to infuse trust in technology, no one will use it. So cyber insurance is definitely an element of trust. So thanks a lot, everyone on the panel for this. I will now open the floor for one or two questions from our esteemed guests and attendees. Anyone, any questions for the panel?
Can you pass the mic to Pallav? Pallav is sitting over there. He has a question for us. I thought you had a question.
Okay. Thank you, everyone. Thanks a lot for your time. I hope you enjoyed the panel. Have a great day. Thank you.
Thank you. Thank you.
Thank you so much. Guys, I know we are running late and everything, but I would love to have one photo with you. And I mean, thank you so much for showing us. I think it was important. I hope it was important for the rest of the people how easily it can be hacked. Thank you, guys. Okay. Okay. Thank you. Whew. We still have a little bit to go. So I want to sweeten you in the afternoon. I believe our team has brought in a couple of T-shirts. Blue ones, obviously. So if you don't like blue, then maybe it's not for you. But we have a couple of Mina Insurtech T-shirts that we would give everybody that stays until the end, which is not that long. It's in 1 hour from here. We have amazing panels coming up, so it won't be boring. So stay with us. And in the end, we have everybody in the room. Should we have enough? Yeah, I believe. Everybody in the room, you want, you get a T-shirt from us. So Mina Insurtech. It's the once-in-a-lifetime opportunity. You don't get them in the shops. So stay with us. Okay, it's a deep pleasure to have the next panel with us. And I think you have seen me a little bit. I care, I'm old, so I care a little bit of doing more than just business. And this is a deep inner of me that I wanted to have this partner, this panel right now about protecting farmers, powering growth. Insurtech can do a lot, and I think we have interesting companies in. Unfortunately, we don't have Tasvia from Insurtech in, which is one of those startups that do a lot, but we have amazing speakers. So please come on stage. You know, I've reduced your time, so you cannot talk as much as you wanted, but welcome. Thank you. Andrea, shine. You shine always. Yeah. Andrej. Okay. Thank you.
Good afternoon, everyone. Thank you for being here. My name is Sachin Jaitley. I'm a venture capitalist from New York. A part of my investment thesis is affectionately called ABCD, right? Every good investment thesis needs a good acronym. Ours is ABCD, and it stands for artificial intelligence, blockchain, chips, and data. We've invested in over about 100 portfolio companies, and as a part of our investment in AI, we have focused on AI's impact on different industries, in particular in the agricultural sector, which we'll be talking about today. And within AI for Insurtech in agriculture, there's a lot of unpredictability that can come. There's unpredictability in weather. There's unpredictability in pests. There's unpredictability in market volatility. And AI can offer some of the solutions as it pertains to underwriting these policies, right? AI can look back at historical weather patterns, as example, and figure out how to underwrite those policies for future parts of different regions. And so we'll be talking a little bit about the opportunities and the challenges as it pertains to AI and Insurtech for agriculture, which is the backbone of many societies around the world. And I'm very happy to be alongside my three panelists here who are going to go in depth on these different areas. So we're going to be conscious of time. I know we've been a little bit delayed, and we're going to be try to be efficient with our time. So with that, we're just going to dive right into these different questions. Perhaps if we could just set the stage and identify the problems that are involved with agriculture insurance today. And Andrea, if you don't mind, perhaps we can start with you.
Can you hear me? Well, okay. So, well, that's a key problem for us. I come representing the World Food Program, and you might know that we are the UN largest humanitarian organization, and food security is key. So for us, agriculture insurance is a critical instrument that can like promote the resilience of the agriculture sector. Key problems that we have in terms of like hindering access to insurance are like the supply, demand, policy, regulation. Probably for the conversation of today, I wanted to focus a little bit on the supply side because unfortunately in the local markets where we work, generally local insurers do not have like the skills and the capacity to develop like robust agriculture insurance products. And this is where all this work on Insurtech could really change a little bit like the needle, let's say. Also, something that is very important is that even if we bring the solutions to local markets, they might be a lack of interest at the strategic level. They might not, the business case won't be necessarily very clear. So that's a very important obstacle. Maybe just to finish, because we know that we have limited time, demand is a critical issue as well. So generally farmers do not have like awareness about insurance. It's very difficult to position insurance in the package of like tools that generally are used for risk management, and also affordability and accessibility. So Insurtech can be also critical to address those problems.
JP, I'm going to come back to you for the next question, but if you don't mind, Margarita, if you could identify some of the problems involved in Insurtech today with agriculture.
Thank you very much, Sachin. My name is Margarita Bialas. I look after our agri-finance work for the International Finance Corporation in Africa. We are the largest development finance institution in the private sector, and our core mandate is to invest, but to also build capacity. And when we look at agri-finance and specifically insurance instruments are for us a way to de-risk those entities that we invest in, so financial institutions and others. And what we are seeing specifically on the African continent is that there is a limited availability of suitable kinds of insurance instruments. Let me maybe put it that way. It's not that there are no insurance companies, but matching the right product to the right need at the right time is something I think that where we're seeing lacks, and where we proactively engaging with the industry on how can we fix that.
Great. And JP, so the reason I wanted you to answer this next question is because I think you're working on some very interesting things, right? And all these panelists are coming with very unique and different perspectives as it relates to Insurtech in agriculture. So JP, perhaps you can go a little bit deep in terms of what you're building and what you're seeing in terms of solutions as it relates to how, you know, Insurtech is enhancing agricultural insurance.
Yeah, thank you. So my name is JP. I'm a co-founder of MyUbuntu, which is an Insurtech focused on smallholder farmers in Africa, and we offer parametric insurance products. We are mainly focusing on weather-based parametric insurance. So over here, what we have is a congruence of technologies coming together. So we leverage satellite data, remote sensing to gather data and then develop insurance products for farmers. We also have other companies on the group which include payments. So what we're seeing here is the possibility of finally looking into the inclusivity of farmers into the whole financial services sector by providing mobile wallet accounts, but more importantly, also utilizing this data to actually give credit scores and then open a new window whereby farmers can access credit programs. So what we're seeing is all these technologies, right? So from satellite imagery to then big data, artificial intelligence, and machine learning coming together to really support a new wave of transformation in the agricultural sector on the continent, because these technologies can support a leapfrogging process. Now, in our case, we're also implementing a layer of blockchain to ensure that there is an added layer of transparency, trust, and also accountability. Because ultimately, insurance is a whole ecosystem whereby you don't only have the insurer or the insured, but you also have global players like reinsurers. So many a times, an audit trail that smart contracts give can support that transparency and trust. And maybe linking to your first question, I think the biggest issues are most probably a triad of issues. Affordability. So how do we make insurance products, the right insurance products, accessible to farmers from a financial point of view? And over there, we need to see how we can embed them within the value chain, right? So it can be through by working with off-takers, processors, exporters, awareness, because ultimately in Africa, insurance is not something that farmers are used to or are brought up with, or the culture of insurance prevails. So there's a lot of awareness that needs to be done, and ultimately trust, right? So how do you make sure that the farmers who are living on a very small budget can actually pay for an insurance product which is alien to them, right? So the challenges are many, but I think we need to remember one thing, that the smallholder farmers in Africa don't contribute anything to climate change, but are the ones that are suffering the full consequences of extreme weather events.
I also liked, that's a great point, and I also like the tie-in with blockchain technologies, which is near and dear to my heart, and the overlay of that. I know we have some different opinions here, which is good, and we should talk about those. But Andrea, if you could kind of pull the thread a little bit further in terms of what you're seeing with success stories around how AI is really helping these farmers.
Yes, well, I'm going to tell you something. We started with WFP working in index insurance since 2009. And all the developments in technology that we have seen in terms of remote sensing, satellite data, it has like enabled us to develop like more reliable index insurance products. So for instance, to give you an idea, last year in 2024, WFP managed to provide protection to 3.1 million beneficiaries around the globe. Most of the products that have been like promoted are index insurance products, and AI has been like critical for the modeling of these products. We work with like a lot of technical service providers that are expert on this topic, like Ibiza, Blue Marble, Pula, Microinsurance Catastrophe Risk Organization in different countries, where we leverage on all these developments. So I think that the success is like precisely seeing how this insurance penetration is being addressed, but still there is a lot to do.
Hello? Yeah, sorry. Margarita, if you could also touch on the supply chain of the data that's involved in all of this. Perhaps you can touch on some of the challenges and opportunities that relates to that.
Yeah, I'm sorry, I'm going to veer off a little bit of track, because I think it's important to understand that when we look at agriculture, insurance, etc., that we're looking at ecosystems, right? And JP was alluding to that, say we need to also integrate the off-takers and so on and so forth. So when we think about agriculture and how we can de-risk our investments and our clients' investments, we look at the entire ecosystem. So from how do we KYC map the farmer? What role does technology play in that piece? And that includes satellite imagery, geolocation, etc., which is done by dedicated technology companies, right, who are super specialized. We think about the input providers. So what do farmers need to be successful, to have higher income, higher yields? How does fertilizer seed get there? How do you use technology to distribute that? How do you improve yields and reduce post-harvest losses? And how do you organize the sale? So, and that within one specific, like rice, maize, cocoa, whatever value chain. And technology is critical in creating these linkages between all of these different players. And I think in Africa specifically, the rails on which all of this rides were set by mobile money in 2006, so 20 years ago, right? And that all of these interactions need payments, so they run on mobile money. All of that are data points that you can evaluate with regards to what's the financial strength of the farmer, because how much input does the farmer actually buy? How much do they sell? That in turn feeds into models that somebody like JP uses for developing insurance. We feed that into risk assessment models that banks have. Traditionally, they were called scorecards, then it was data analytics. Now we have AI, which makes just the data analytics more reliable, faster, better. So data, I think if we really want to push the needle on doing more, data is one of the critical elements, right? And then there is a big conversation that we had pre-panel. Should it be a public good or is it a private thing?
No, it's excellent point. And JP, perhaps you could just talk about this a little deeper in terms of maybe your company or your ecosystem that you're in. How is data, the supply chain of data, as Margarita was just explaining, how is that impacting you on a day-to-day basis?
Yeah, in our case, what we did and what we are doing as a company is because we really believe that data is will power everything, right? So even if we're looking at precision agriculture and all of that, so we are present throughout the value chain. So we have a digital platform that aggregates smallholder farmers, allows them to access inputs, aggregate off-takers, and also lead to processes. We then have a mobile money ecosystem and then the insurance. Why? Because we want to ensure that we have data throughout the ecosystem, because ultimately it's the blood of the enterprise. But we've also been involved in a number of international working groups whereby the concept of utilizing common data as a public good, and this came up because the EU, which likes to regulate most probably everything under the sun, is now enforcing EUDR, which is the export of agricultural produce from Africa into Europe, right? So one of the elements of EUDR is actually geotagging and making sure that you have traceability along the supply chain. So there is this discussion on how can we aggregate each other's data to really leverage the full ecosystem, because the geotagging that I need for parametric insurance is also the geotagging that EUDR certification needs, right? So rather than everyone going into the same stream, can there be a central or pool data whereby companies can pool, leverage, and access a global or a regional data set? There again, a lot of issues come up. Why? Because we pay for data. So the companies that actually sell this data have a commercial interest at heart. The governments might not have the full capacity to really build the data set. So it's quite a thorny debate.
Sure.
But there again, it's going to be critical because all these technologies depend on data.
Absolutely. And just kind of, Andrea, if you could also talk whether it's pertaining to data and the challenges with data, but also elevating to the partnerships that need to be put in place in the ecosystem. And I think you come from a very interesting perspective from your organization in terms of developing those partnerships at a global scale. So perhaps you can speak to that.
Indeed, I think that all these topics like data availability, how to integrate insurance in this package of like services within value chains need to be addressed through public-private partnerships. And this entails involving the governments, entails involving international organizations like us. I mean, like you will be maybe asking yourself why WFP works in insurance, but precisely because we think that agriculture insurance can be critical on that, and our role is to enable these markets, bringing as well international financial institutions like IFC, like the World Bank, Asian Development Bank, and like all the regional banks are very actively involved in this topic. So it's very critical to integrate it. And of course, the private sector. I mean, we need like the private sector to be working together. We're seeing like interesting approaches like the Insurance Development Forum that is like creating like public goods that are very helpful for the development of the market. And we have as well like the Insurance Resilience that, for instance, brings like different like partners into the dialogue. So that's critical. Otherwise, I think that it will be very difficult to advance this complex topic of agriculture insurance.
Sure. Great. Let's look forward a little bit in terms of where you see, I'm going to start with Margarita, in terms of how you forecast, no pun intended, AI in the future impacting Insurtech in agriculture.
Yeah. The look at the crystal ball, I guess.
Yes,
This is, right?
crystal ball question.
And I mean, we were talking amongst us earlier, and I said, well, AI. Well, the first time I discussed AI was probably a good 9 years ago, and then it was like a completely new thing, and nobody was quite sure where it was going. And in my view, we are here now, right? It is here. It's not going to be evolving in the future. I think the way AI is going to be evolving, and it's more importantly, its application is going to be in line with what computer technology can do, what energy supplies are going to be available. AI is just a tool for data analytics. It's data analytics on steroids. It allows us to look at many, many more different data points in a much, much shorter space of time and form far more connections, as you were talking about partnerships and ecosystems, right? So it's going to be about getting lots of different pieces of information, sorting through what's relevant, what's not, and come to a decent result. And I think that is where AI will need to improve to actually give us something that is not just fast and there, but that is super useful. So to me, it's more about fine-tuning systems and upgrading. I mean, quantum computing is sort of the next level, right? Upgrading the number of data points, but I think there also comes a point in time when more information is not necessarily more useful.
Sure.
Right?
Great.
So
And
that's my.
no, it's wonderful, and I'm getting the look from Lars. So we're gonna ask one more question, and perhaps I'll just ask you two. You know, what if you had to leave the audience with a headline that you want them to know about how AI is impacting Insurtech in agriculture? What would that headline be?
Yeah, my headline will start by like highlighting that 80% of the food that you eat comes like from smallholder farmers, like for instance, for sub-Saharan Africa or Asia. Most of them do not have access to insurance, but they need it in order to build resilient food systems. For instance, in sub-Saharan Africa, the insurance gap is, I mean, like the protection gap is only 1%. So we really need, and I will pick you what you just said, Insurtech on steroids, like all this work on steroids in order to tackle this gap, because otherwise we will have like this food crisis will keep like exacerbating.
Wonderful. And JP, any closing remarks in that same regard?
Yeah. No, I think it's a collective responsibility so that no farmer starves because of a weather event. I think that needs to be the guiding mission. We're working to get millions insured, all players involved. And I think it's not a question of just the market or the opportunity. It's actually the purpose around that, right? Because ultimately we owe it as humanity to each other.
Well said. Well said. Agriculture is the backbone of our society, and it's also where we see the next 100 million, 200 million people coming into the world of AI and hopefully blockchain, if I may say. So thank you. I also want to just give a special thank you to Lars for organizing all of this, including this panel. Very much appreciated.
Thank you so much. May I ask you for one photo, please? Let's take this as the first step of many rounds and more businesses and more Insurtechs globally to make this happen, okay? Okay. Thank you so much. You see, it's really dear to my heart. So I do it now every single time. So what you get potentially, if you stay 1 panel and a half, is this. It's a limited edition. You don't get it everywhere else. Just here, just now. Okay, so please stay with us. Really amazing panel coming up. We have a panel now which Stefan will moderate. Looking into, and I think the title is a little bit strange, maybe you don't understand what it means, from merchants to mobile agents. What we really want to do is going in the direction of the last panel. How can AI help us to reach more people? So this is rather not the match-rated markets. It's rather the emerging markets where we want to understand and doing those things. So I think we have an amazing panel, amazing people together. So I hope you will learn together with us something. And welcome, Stefan, and please go ahead. Again, I shut it down a little bit of your time, but you will manage. Thanks.
Thank you, Lars. Thank you very much, and happy to be here. Welcome from my side. My name is Stefan Schurman. I'm helping to develop a Swiss-based non-life insurer. We're also investing into startups. We're doing traditional M&A and doing partnerships. I basically used to be an insurance analyst covering for 20 years the big insurance groups like Zurich Insurance or Generali all over the world. And really happy to be here. And we have a very interesting panel. I think one is missing. We have, unfortunately, Ankit couldn't do it from India due to the current situation. But we have a very nice panel, Timmy, Roy, and also, who is he? Where is he? Ishak is always on the stage, so yeah, very good. Let me do a short introduction of these three very interesting, I think, companies. First of all, we have Ishak. You saw him already. He's basically the biggest Insurtech in Pakistan. Was founded in 2020. He's the CEO and founder of the company. As you have heard yesterday, and congrats again, they are launching now outside of Pakistan. They go into the Saudi market. So the Kingdom of Saudi Arabia granted the second license for an MGA, and that's where they're heading to. And it's really, I think, exciting times for them. Maybe also as an information, they're currently raising capital. So if anyone's interested, as far as I know, there's still some way to go for them. Then we have in the middle Roy. He's the CFO and co-founder of Kenya-based Lami. They have been created in 2018. They have more than 40 people. There's a very tech-related, user-friendly agency platform for agents and agencies. And I think they're really trying to help to close the insurance gap in the country. And we'll talk more about that quite soon. They raised more than almost 6 million of capital so far and doing fairly well. Then finally, we have maybe the youngest Insurtech, but the oldest startup on stage is Timmy from Jakarta, Indonesia. He founded the company in 2013. He's president today. They have more than 400 people. It's the biggest crowdfunding and donation platform in Southeast Asia. And just a year ago, they acquired the Sharia-compliant insurer, and now also are launching on the insurance side the products. So it's very welcome to have this fantastic panel here. I think it's really a great part of the future of insurance, and I think we have a great discussion, even if time will be short. Let me just, before going into the Q&A, maybe give you some history of distribution as we are talking about from merchants to mobile agents. So where does distribution stand? I mean, in ancient times, there was no distribution. There was just guilds and clans insuring each other for the risk they had. Then in the late 17th century, there were merchants, marine merchants going to a coffee house in London, which is called Lloyd's today. So they started to trade risks. That was also the beginning of basically what we call captive or tied agents in the 18th, 19th century. Then maybe 20th century, independent agents came along, brokers started to grow, and we have today, I think, very big global brokers, as you know, the Aons and the Marsh, who play an important role in that field. Then also in the late 20th century was bank assurance on the life side coming along, mostly Europe, Latin America, and Asia. And this is also playing on the quite a big role on the savings and life market. And only in the 21st century, alternative distribution channels helped by tech came along. And that's the topic today. So we had the emergence of online platforms, aggregators buying online insurance. We have basically embedded insurance, as we heard earlier today. So included into a travel product, into a ticket you buy from an event, enabled by technology. And we also have recently ventures like MGAs, managing general agents, which are insurance companies, but not really, more like between a broker and insurance company, mostly done by Insurtechs. And I think that's really the topic today. And from that point, I'd like to launch the first questions. We see the shift from traditional going to more digital-enabled solutions, maybe starting with Ishak. How do you see client behavior going that way, and maybe also in Pakistan, where you stand today in that shift?
Can you repeat the question?
Sorry?
Can you repeat the question? Sorry.
Yes, the shift now from traditional agents to the new distribution models, the behavior client of consumers. How do you see that, and how is that happening in Pakistan?
Hello. Um, Insurance, I think there are two kind of behaviors of customers that I've seen. I think that's always going to stay the same for me because the innate consumer behavior is either a pull or a push. So in insurance, if the products, for example, the third party motor insurance is a compulsory product, we will still see that it's a pull demand that people, because the government is mandating people to buy the insurance or health insurance for employees for factories or for shops, is mandatory in Qatar, it's mandatory in Saudi, it's mandatory in many countries. So people will go and look for this insurance because the government is making it compulsory to buy. So when people are going to look for insurance, they will go online, they will buy directly from the businesses. They will see, therefore, a lot of aggregators and insurers will directly serve the customers. Where there is a voluntary product demand, because, you know, as humans, we think when we wake up in the morning, we think about food. So therefore, you know, Talabat exists, a lot of Uber Eats exist. When we wake up in the morning, we feel like going somewhere. So, you know, Kareem exists, Uber exists. We like to talk to our friends. So a lot of startups around, but no one wakes up and feels like today I'm going to buy insurance for my family, you know, today I'm going to buy life insurance. These are risks that we don't want to think about. We don't want to think about death, our own death. We don't want to think about our own hospitalization. So there always needs to be a human who will come and tell you that there's a risk in your life. You know, you might die and you have young children. You will grow older, think about it. What will you do? You don't have any savings, or someone has to remind you. It's like a bad, like, you know, it's like a mother telling you that these are risks that you don't want to think about. So I think agents are always going to exist for such products. We just need to empower those agents with AI, with technology, with easier distribution, with more collection methods and stuff. So therefore we come into play and we want to bring technology and empower those agents to sell those insurances.
Yeah, sounds great. Maybe in Kenya, do you see the same happening? You're more on the non-life side. They sell more life products. Do you see the same trend happening, or how important is the agent still?
Yeah, I would. Sorry. I very much agree with what Ishak has said. So in Kenya, I think an interesting stat is that 60% of the premiums in the market go through an agent. So the next 20% is brokerages, which effectively is also generally an agent working there. So we tried multiple distribution models. We tried embedding insurance into day-to-day other technology platforms or into garages, etc. But those were not insurance agents, so they were not able to actually generate the sale because they don't understand insurance. So we 2 years ago really thought hard and said, okay, how can we use technology to actually focus back on the existing market, which is agents? So we started empowering the agents, the same as Ishak has said, and we saw phenomenal growth since then. So we onboarded in the last 18 months about 1,600 agents actively selling. So we give them the tools, we give them all the product information, we give them all the options, we do the whole process, and what they do is what they're best at, which is selling. So they go into the streets, into the villages, into the cities, and they convince and educate people, because education is a big missing component for insurance in at least in East Africa and many parts of emerging markets. People don't wake up. So I fully agree to buy insurance. So somebody has to be that last mile connection point. And, that's not going to change overnight. So therefore, we really focused solely on building and using technology to make them basically super agents, to give them everything they need to increase insurance penetration.
So you're working on the insurance awareness and culture and basically trying to close this insurance gap. That's great. Yeah.
Yeah, exactly. And the vision is to increase the penetration.
Yeah.
So if you have a very easy way of giving them motor, which they need, then you can easily give the same customer that is already onboarded a home insurance with like one click, one payment, you now insured your home.
Yeah.
That way you can increase the penetration, we think, at least.
Then maybe going to Indonesia. I mean, you have a platform which is basically outside insurance or close to, and now you chose to go into insurance as well. Maybe can you explain a bit why and how the market works in your country?
It sounds confusing, right? Why donation platform become insurance? So, yeah, let me give you a specific use cases and user journey. Because we started as a crowdfunding platform, a donation-based crowdfunding platform. If you know GoFundMe in the US, we're exactly GoFundMe in Indonesia and Malaysia. We facilitate social crowdfunding mainly for medical causes, paying hospital bills, medical bills. So imagine our donors came to our platform, helping, for example, someone who got cancer. And then we put a checkbox saying that, would you like to add $1, but not just to help people who are sick, but if you are sick, you also get help from other donors. So it happened 3 years ago. We have 7 million donors in our platforms, and 10% of them subscribing to the membership. So we got 700,000 users organic without any marketing. So this is part of alternative insurance distributions, because what I'm just telling you is actually in insurance products. When people are donating into a pool, a social pool, that not only helping other people, but also help themselves. So we did that 3 years ago, but unfortunately we got closed down by regulators because they said that we're doing insurance without license. We respect the authorities, definitely. We listen to them. And then, alhamdulillah, we got the opportunity to acquire a license 2 years ago. So now we revive that model into a fully licensed Sharia life and health insurance company in Indonesia. So that's pretty much the story.
Amazing. Yeah. Thank you. Maybe in terms of alternative channels, I mean, you are sort of the future of insurance. So you're pushing into new ways. I mean, how do you see all these alternative channels playing in your home countries? I mean, are you on the forefront? Are there other providers? Where does it go? I mean, is online important? Is AI driven important? Is your product important, or how do you see the market going forward?
So We are in Pakistan. We're the largest Insurtech in Pakistan. We are the first MGA in Saudi Arabia. So we have multiple portals, we have multiple technologies, we have multiple SDKs, AIs, but the only thing that we don't have is a direct to consumer application. So we're always staying behind. Our entire technology is not consumer facing. Yes, the consumer can come and claim with us through a simple app or an automated bot, WhatsApp or website, email and stuff, but our entire distribution is not directly consumer app based. So we have a full suite of technology which we give to the brokers, so the broker can take different quotations, they can take the consent, they can get multiple products pricing, they can remind the consumer about their renewals, they can see the dashboard, they can withdraw instant commission. There are multiple features that we're giving to the agents, then the banks, then the brokers. And on the other hand, there is also APIs that which we give to the e-commerce player. For example, if you go to a store and you buy a laptop, what about the agent who's standing at the behind the counter, turns the computer and says, if you want to add $5 and get a 3-year insurance for your laptop, that's embedded insurance. Again, not directly going to the consumer, but going through the agents. And that's an SDK or an API. So we go through either partners apps through an SDK, through an AI, or a mini app within their app, or have given app to the agents, but not directly to the consumers. And that's the vision that we're trying to follow. And we could be wrong. Maybe I hope it changes and people buy insurance directly, but I don't see that happening in the next 10, 15 years. And we also have to see, right, the countries which have the highest penetration of insurance. So Japan has 9 to 10% insurance penetration. 10% of their GDP is insurance, and most of the insurance is still sold through humans. So we can leapfrog, yes, but they have all the digital, strength available to them. They have all the money. The people have the awareness. Still, they rely on the insurance agent to do it for them.
Yes, that's great, fantastic. I think Roy, you agree, huh? I think that's the same in Kenya.
To some extent, I'm probably a boring panel because we fully agree with what we're doing. But I think we see ourselves a bit as a gateway. So you have a payments gateway. So we don't sell B2C either, and we built in a platform that the goal is to have all insurance products in the market in our system, and then intermediaries can use that, whether it's agents or whether it's, we are also approached now with online platforms. So can they use effectively the same system that is our centralized, let's say, platform to sell insurance? So they don't need to build an entire system. They just need to do the lead gen, the marketing, etc. So we have some already using it. We have, because we came from a background of APIs, etc., we could plug it into a dealer, into their front end. We can plug it in anywhere effectively. And I think that's, a gateway, basically providing access to all the insurance companies. It's almost like an infrastructure play. So yeah, but we don't sell directly to consumers ourselves.
Very good. Maybe, I mean, you're all basically Insurtechs, and there's two words in that. It's insurance and it's tech. I mean, just a question to all three of you. I mean, are you considering yourself more as a tech company or more as really an insurance provider? I mean, maybe again, starting with Ishak. I mean, how do you sell yourself to your investors, to your environment?
We are an insurance company, and because I think like in the age of where there are global AI models like ChatGPT and multiple Chinese companies have come, any company I feel who's trying to be an AI wrapper will be steamrolled in the future. So I think we need to build businesses and real brands which is powered by AI. And by powered by AI, we use this as a jargon. Obviously, AI is there. We all use ChatGPT every single day. I mean, I use it 30 times a day. But does AI need to be part of the user journey for the agent journey? Not necessarily. I mean, the AI can start of how many times every employee in the office is using the platform. That's productivity. So need to use AI in productivity and increasing efficiency. from people using normal chat GPT like 30 times a day. In our office, anyone who says we want to hire, any manager who says we want to hire a new employee, we ask them to justify. Why can't you use AI? If they want to hire a video editor, I say, you can just make a video out of an AI model. So using that, why are you not using that? To analyze the data, if you can get ChatGPT API and give them access to your own database, you can just ask the AI model to create graphs for you. So you may not see AI in the user interface, but there's a lot of AI in small things in the office, in small things in the processes, and how we think. I think it's AI is the way we think. Rather than doing it yourself, try and find an efficient way using AI in the office, but you may not see in the front end.
Okay, yeah. Roy, you're more a tech company or more an insurance provider?
Yeah, so in this point, we don't do the same. So we don't underwrite. So as in, we don't take the risk. We do use the products and the binders, and we program the products. So we effectively place the cover and underwrite it, but on behalf of the insurance companies. But we are more of a tech company in the sense that we provide the tech to empower someone to sell insurance. It's all tech driven. We do see a lot of use cases for AI. AI to explain products, to help an agent understand whether a claim is valid, whether the claim is under the cover, what is included, excluded, so you can train agents with AI way faster. Because if you sell 500 different types of products, how can an agent know? So if you have AI to basically train them and give them answers quickly, we can use AI to create these products, digitize them very quickly, rather than having to manually work on the documents we get from an underwriter. We can process claims for underwriters, and we can even help them analyze data with the AI. So we can help them with underwriting, and we do actually. We provide insights, and we can advise on which products work, what excesses, what doesn't work, what people don't want to pay for. So yeah, we're more of a technology company, I would say, in that sense.
Okay, makes sense. Yeah. And Timmy, how would you see yourself on this side?
That's an interesting question. I think just like humans, sometimes you question your identities, right? And then you have an existential crisis, and then you think like, who am I? What kind of person am I? What label should I put on myself, right? Something like that. For Kitabisa, it's quite funny. We actually started as a social movement, not even as a company, not even a tech. I don't understand what is startup back then. It's like 12 years ago. But 2015, we got seed funding. That's how we learned how to scale. Our mission is simple: connecting kindness. And then when we found technology, we want to connect kindness at scale. Back then, we used to joke, can we connect kindness every second? So during COVID, it happens. Every second, there's one donation in our platform. So we really see technology as a catalyst towards the kindness mission. And when the experiment happens, the insurance pool happened, we rethinking about our identity, the existential crisis again, right? And then we saw ourselves not just a crowdfunding platform, not just a technology crowdfunding platform, but we're an ecosystem to help and protect each other. So it's not just a one-way kind of like direction, it's two-way. We're a community of people that helping and protecting each other. I don't know how to put that label into is it tech or insurance. I'll say it's a mix of both. Yeah.
Okay. So then I think maybe already come to the last question. I mean, we're obviously here to understand the future of insurance. I mean, we heard a lot about agentic AI and all the processes that might, run in the future without human interaction, or at least with much less human interaction. From a distribution point of view, maybe all three of you, how do you see a distribution going forward? Assuming 10 years down the road, agentic AI is playing a really big role, is distribution still dependent on humans, or can it be without that? And I start again with Ishak. Or Roy, yeah.
Sure. Okay, we'll change roles. No, I think that I really don't think in our markets and many markets around us that the agent or some human is going to be gone fully. But I think that the main objective of using AI is bridging the gap between an underwriter sitting in an office trying to understand risk on the retail side with the consumer there's a big gap. There's many layers. There's a lot of misunderstanding. There's mistrust. There's no indication. And AI can really bridge that gap to make it a lot more natural. So an agent using the technology tools that we all built to bridge that gap will help bring the insurance company a lot closer to the consumer. And I think definitely in Kenya, insurance companies are very far away from understanding the consumer. Because if you look at it, they only sell a very tiny percent directly to consumers. So they're actually very remote, and AI can bridge that gap in my view. But I don't think it's going to replace agents fully.
Okay. Isaac, do you agree?
I do actually, because he's agreed so much, so I need to agree as well. So we don't really know, right? 10 years down the line, I mean, like the technology is growing so fast. So far, I feel like AI is used as a complementary product to humans. It has so many hallucinations. Still, last night I was trying to find a ticket, or I was trying to find visa requirement of some country. It was not giving me the right answers. Yes, AI can be as a first knowledge hub, but if I'm doing
It was not me.
Hello. So I even forgot where I was, to be honest. So if AI is being used as a first knowledge hub, and I feel like if people are making decisions for their children, for their financial future, if they're making larger transactions, they're getting life insurance, saving insurance for 15 years, they would want to talk to an agent, because insurance is also complicated, right? Even if we are getting 10 life and savings quotation from 10 different companies, there are so many different terms and conditions. What's your surrender charges? When can you surrender? There are so many insurance jargons being used by insurance companies. A normal consumer, still, like my friend actually this morning, she sent me 2 quotations from Banca Assurance, and she said, can you please help me make a decisions? And both the products were pathetic. I said, it's a fraud, don't buy it. And she was considering, I mean, she could have used AI and asked ChatGPT. ChatGPT would most probably would have agreed with her. So I think if you're making very serious decisions, you're buying houses, you're buying life insurance, you're buying savings plan for your children, I think you would want a human validation, and that's how we made. I mean, can you have a AI therapist, right? You want a human to listen to you. Yes, you ask AI a lot of questions about like relationship issues and feelings and stuff, but you still need a human to validate. You still want a human to see you and confirm what you're doing is right.
Okay, very good. And maybe closing off with Timmy, you see that the same way, or? you have
Yeah, definitely agree. But I have limited experience towards the whole insurance. I will focus on the life part, and which in my case, subject that hygiene is solved, like the speed, process, reliability, pricing. I think what we envision is engagement is matters the most when it comes to life insurance, because for the longest time, at least in Indonesia, it seems like a very transactional and cold kind of like sales-based products. But at core, life insurance is a very collective spirits behind it. And if we try to experiment creating a more transparent way, which makes people who are joining the insurance feel like they're member of community and they can see who get helps and how much. And that transparency create engagement. I hope, and I mean, we're still early. Whatever I say is just we did some experiments, some is proven, some is still wrong. So we're still exploring, but we believe the value of it is the engagement part, which brings transparency and eventually create trust. And that trust element is very important.
Great. So thank you very much. I think that's good news. So I think humans will still be involved in at least distribution in the future. And with that, thank you very much. Join me in applauding that fantastic panel. Thank you.
Thank you.
Thank you so much. Okay, we now have a change in the agenda. Just to be clear, my dear QLM friends. We had to move a panel from the other stage, so we now move on. On the last question, we talked about life insurance, and this is what we want to talk in the next 20 minutes, 25 minutes. And then we move to the QLM life, because this again is life and health. So be with us, we will be with you on QLM, but right now I would like to welcome Piyush and the fantastic panel around life insurance.
Thank you very, very much, Lars. And very good afternoon, ladies and gentlemen. As Lars mentioned, the topic that we will be discussing right now for this panel is life insurance, and specifically the savings aspects associated with life insurance. Before I introduce the panelists, my name is Piyush. I'm a partner with Carney. We are a global management consulting firm. And I'll set the context and then introduce the panelists. So life insurance, specifically protection and savings products in the MENA market are hitherto have been underpenetrated. And there are multiple reasons for that. There are state-sponsored pension schemes, social insurance schemes in many of the countries. So the locals do not need or have not needed life insurance. There is, in general, lower awareness and lower maturity of products in the region. But the region, as we speak, is going through a complete paradigm shift. The social insurance boards and the pension boards in many of the countries are recognizing the accumulating liabilities and therefore the need to drive private sector participation in protection and savings domain. Life insurance companies are doubling down with innovative, interesting products. Bank assurance, of course, has been a traditional channel to push these products, but increasingly we're also seeing other channels, including online channels, for proliferation of protection and savings. This is what, ladies and gentlemen, we'll talk about. What are some of the challenges with respect to life insurance, specifically savings-linked life insurance, and what future can we expect to see for protection and savings in the region? Let me welcome my panelists. Two of them are here and two I can see in the crowd. Let me start with Priya. Priya Krishnamurthy is a founder at La Aeonia, and she's been pushing life insurance in the region. She's got 20 plus years of experience setting up and operationalizing new branches, designing, delivering, and implementing processes, conducting programs with many life insurance companies. And she's worked with Guy Carpenter, Lloyd's, and HDFC Life before. Welcome, Priya. Zainab is on the stage as well. She's a partner at Plus Venture Capital, and her focus has been on investments in insurance, specifically life insurance. And she's worked with 500 startups and Deloitte before. Welcome, Zainab. Rahul, who I see is in the crowd. Rahul has been the CEO of HDFC International Life and Reinsurance Company. He's been with HDFC for the last more than 20 years. And he's led the business through significant expansion, innovation, and market positioning, particularly in the UAE and the GIFT City, which is the financial free zone in India. And then Mohammed, who's right here as well, is the CEO of Haya Insurance. Mohammed and Haya have been driving innovation in life insurance across the MENA region. And prior to Haya, Mohammed worked with AXA, Swiss Re, and Munich Re. Welcome, everyone. We'll start with Zainab yourself. As I mentioned, life insurance, compared to some of the other insurance products, which are mandatory in nature, has not seen, higher penetration levels till now. What do you think are some of the drivers behind this?
Yeah, sure. So I think one of the main drivers behind this, if we look at it on a cultural and a behavior perspective, right? So let's look at the barriers between people and life insurance products. There is the lack of awareness happening in the market, because today, if there's a misconception, right? Because if you think of life insurance, you're going to think, is this halal? Is this haram? Is this Sharia compliant? What am I getting out of this? Um, and there's a lot of questions that come to mind. And specifically in the MENA region, a lot of people feel that they have that support from the family, community. So they tend to think that, why would I need that life insurance, right? Because they're not educated, they're not aware of what's happening, they don't know the benefits that come out of it. So because of that lack of awareness and the way the topic itself is, so like, for example, if I get a call today from someone trying to sell me a life insurance policy, the first thing that will come into my mind is death, right? So then that fear is built up in me, and then it's very difficult to continue the conversation. So it's a sensitive topic. That's what I'm trying to say here. So it's about the way it's being communicated, especially in the MENA region, how the approach is, the strategy, and how people perceive all of this. So the narrative really needs to change. That's what.
So I fully agree with you. So what Zainab talked about are some of the demand drivers for the under penetration levels for life insurance. Priya, I'll move to you next. From a supply side, from a product standpoint, from the life insurance companies, what gaps, and you've worked across 14 different countries, specifically on life insurance. So what gaps when it comes to products you see in the region? And how do you compare the customer expectations in the region for these products to be consumed here vis-a-vis other parts of the world?
I will actually link it and bring it to the point that Zainab raised, and a very valid point from a cultural perspective. But the ground reality stays the same. Every human being wants financial security. That does not change. Globally, there is a need for financial security, whether it is old age or whether it is a youth planning for the next steps in life. So the financial security summary line stays. Now, the socio-economic structure of a country and how the regulatory framework pushes that and how the insurance company binds these two together are the missing gaps, because of which it plays on to the cultural inferences that Zainab raised. And honestly, life insurance does not mean death. Life insurance means life. And that is something which has to change. So when you talk about life insurance, you do not start by saying, hey, you might die one day. No, you will live better in your old age. So it's life insurance and not the insurance.
Fully agree. It's all about life and everything around it. With that as the narrative, Rahul, I'll move to you next. Everything about life and things around it. What are some of the lessons we can learn from how insurance companies, have doubled down on life and everything around it in other parts of the world, especially in the context of a large expat segment and growing population? How do you see that panning out here in the region?
So there are plenty of areas that one can look at in terms of opportunities to learn from various developed markets. Now, I think what you see in terms of what insurance companies have done on building in-house investment capabilities is something that can really be brought to the region here. Traditionally you see third-party funds and treasury houses being utilized, but if you really want to deliver good quality long-term solutions which are on the investment and saving side, you really need some capability in-house. And companies that are sure of developing and building a good stable saving book, which by the way is really potent if you want to add embedded value to the insurer's book, that can only be done if there is meaningful savings and investment solutions being delivered. Now, this can be, in form of corpus building, it could be in form of retirement solutions, it could be in form of annuities, a whole lot. But I think this is something that one can really look at. The other thing is that especially what you see in EU and some other parts of the world, the portability, the way cross-border portability works is something I think it can really work in the region because of the transient expat population. And I won't take too much time, but just the third point that I feel really works out in a lot of markets is getting the simplicity angle right. And given that the new age customer is really keen to do savings these days, and by the way, you no longer see customers who don't want to search for insurance or life insurance. You see a lot of people who are already aware, they know about personal finance, they go and search. The discovery and exploratory stage is now no longer what it used to be. People actively go on the line on net, on social media. They understand what life insurance is. They know what kind of savings can be inbuilt, and a lot of searches are being done now. If there is capability to ensure that there is enough simplicity around this, there is a whole lot that this region can gain on. And I must also say, it's not that the region is not doing some of these things. I think there are exemplary cases of local insurers doing really good.
Absolutely. I'll piggyback on what you just mentioned. There are some interesting examples, and with that, I'll move to Muhammad because he does have a very interesting example right here of an insurance company that caters to the new age customer, Rahul, that you were talking about in a very innovative manner. And the exposure that you already have, of course, with your beginning in UAE, but also Saudi Arabia and many other parts of the region. What are some of the learnings from these countries that have seen in the region, that have seen growing protection and savings market, that others in the region, the regulators and insurance companies, can learn from, Mohammed?
Hey, Assalamu alaikum first to everyone. This is a very good question because, it has always been the question, so why is life insurance the poor child of insurance in the region? I really think there is the lack of awareness and so on, but you will have the same in more mature markets. If you go to Europe, you ask people about life insurance and so on, 95% of it is sold because of tax reasons. Tax reasons you don't have here. So there's no incentive really from a pure fiscal perspective for people to purchase life insurance. What you do see as well is that because of the fabric of the insurance companies in the region, most of insurance companies are composites, and non-life has always been the big thing. So it was always like we have licenses for non-life, we have a license for life, but we don't utilize life unless if we have to for some special deals and so on. So life was always set aside. Actually, you will not see a lot of specialized life insurance company in the region. And I think it's one of the reasons, because when you're not specialized, you don't have the customer experience which goes with it. You don't have the mentality in your team which goes with it. You don't have the products which actually respond to the needs of your customers. If I give you an example, for many years, all life insurance companies in the region were actually imported by reinsurers, by multinationals. So there were basically products which respond to the needs of a population in the UK, in Western Europe, and so on. And you try to push it to demographics locally, where people have totally different needs. They have different expectations from what they want to purchase. They are not looking for tax relief. They are looking for wealth planning. They are looking for what happens to the inheritance, how can they save their family's future, and so on. And this was never the angle which was being taken off. And on your question, is very interesting because today I see a convergence between the product development and the regulation. So we see regulations are becoming more and more, I would say, defensive. So we are trying to localize more and more. So to make sure that products actually belong to the country, issued in the country, distribute in the country, and manage within the country. And that's also what we see with people. Many of the expats that we have in the region come with a plan of 1, 2, 3 years. And I'm sure it's the case for many of you in the room, being expats. After 10 years, you're still around. And most likely in 10 years, you'll still be around. So you have this thing about the localization now of the offerings. And at the same time, actually, the people as well on the other side understand that their life is here.
Certainly. And you touched upon some very interesting aspects there with contextualization, localization. Let's actually push the discussion towards contextualization, localization in the context of product development. So, and you and Haya have been pioneers with some very interesting life insurance products. What are some of the learnings that you want to impart to some of the others here with respect to product development and delivery of these products in a digitized manner?
So just for my background as well, I have to mention it, and I have to work for my corporation. I'm an actuary. And for me, of course, the development of products has always been actually the key in the insurance industry. I think actually that developing a product is much easier than we think. You really have to want it. You have to do things in a manner which is organized, but the technicality at the end of the day is not that much. I mean, if you know how your customers are behaving, if you know all your statutory reserving, how do you have to do your actual modeling and so on, it's not that complicated. What you really need to have in mind is put yourself in the shoes of a customers, what the digital can make easy for them. We are lucky to live in territories where digital is everywhere. If I compare the old Europe to the UAE or Qatar, they are lagging behind in many aspects of the everyday's life, be it the administration, the other financial services, the retail, and so on. You go to Dubai, you go to Qatar, everything is digital, quick, easy, simple, and so on. The one industry which doesn't seem to have been blessed by this digitalization is still insurance. And actually, there is a learning curve which is mostly internal. And I have to say it because customers actually, they do embrace the change. Internally, you need to have the workforce as well, which actually believe in that, which is ready to change. I'm always saying, you know, it's only a question of mentality. People have to go in one direction to understand the benefits, but you always have a lot of resistance, you know, because when you speak about digital to people who have 10, 20 years of experience doing the same thing, the first reaction is always to push back. No, you know, it's not doable, it's not feasible, it's not blah, 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 and so on. And this is the kind of things as well where you have to be very clear with the team. We just don't do these kind of things. We have a mentality change, mentality switch. We want to do things in a new manner.
Certainly. Rahul, I'll move to you next. Given the national agenda that many governments have focused on savings, what role do you see? And, you know, of course, you've done some wonderful work with HDFC Life focused on driving savings for non-residing Indians, right? So what role do you see life insurance protection and savings products play with respect to driving savings agenda at the individual customer level?
So Piyush, you know, we run two businesses. You know, from DIFC, we do reinsurance, and, you know, very recently we've opened an insurance arm in GIFT City in India. And in some sense, we are able to hear what customers are wanting locally through insurers here and also directly to us. And in both cases, non-resident Indians obviously is voluminous in terms of the points that we're hearing. Now, some of the aspects that are coming through very, very clearly is that people obviously now got used to, and expats who are here in Middle East have got used to tax advantage products. So obviously nobody wants a product which will have some tax obligation at some point of time. That's a massive, massive advantage for insurers in the region. Massive advantage, right? And today you don't have the kind of issues which used to happen earlier and concerns that customers used to have, that okay, now I'm in another country, how do I pay premiums? Do I continue? I'm in touch with the insurer or not? All this is now possible, really digitally. But at the heart of it, if your products are cost effective, the products that are being made here are cost effective, they're transparent enough, and as I said, there are some investment value adds which are being provided, and let me just name a couple of them. Passive investing as part of ULIPs. Our panel is about ULIPs, and just about creating auto allocation methodologies or creating passive investing options is something that can very easily address some of these points. Now, how many of us have seen whole of life kind of products in the region? My guess is a lot of us. And simple mechanisms in which you can do systematic withdrawals for 20, 30 years, and that being given at really, really reduced cost, can fulfill retirement related obligations that a person would have. Now, the person is here, or they go back to India, or they, whichever other country they come from, these kind of offerings will have huge amount of stickiness in our view. And that's what we are encouraging insurers also in the region to look at, because these are decadal opportunities that the insurers can cash in on. The ability to do passive investment management, the ability to deliver a product which is online. People, as I said, today are searching for multiple options. And if you have a tax advantage product which is flexible enough to the requirements of an expat, and is able to give you reasonable returns, our guess is a large part of the wallet share would move to products like this.
Absolutely. We're running out of time. So a couple more questions, quick answers. Priya, will start the first question with you. Takaful is very important in the region. What lessons can we learn for protection savings, Takaful products, from the likes of Malaysia, Indonesia, and others?
Yeah. So if we spoke of Europe and the other parts of the world, but if you draw a direct parallel between how Malaysia was in the mid 2000s, that is 2010, 2011, to how Saudi is, and the population of GCC, where there's a young population, Saudi having an average median age of roughly 30 years old, this is the tipping point for all of GCC. Now, if you actually look at the way Malaysia was, again, the same situation, young population, the regulatory framework working on making more Sharia compliant procedures, which takes care of the cultural situation that Zainab mentioned, and the insurance companies tying all this together, giving more Sharia compliant takaful ULIPs. So Malaysia took to that like fish takes to water. And from a 13 to 15% insurance penetration in the 1990s, Malaysia jumped to a 45% insurance penetration in 2011. That's the time that we were there as IT companies installing life insurance systems. So Malaysia had that trajectory. So this region does have the trajectory, but long-term savings coupled with how the digital framework is going to change in the region has to be taken into consideration by insurers.
Certainly. Last question, I'm looking at Lars. Last question, Zainab, to you. How do you see the future of life insurance protection and savings evolve in the region?
I'll keep it short just because of time. There is a future, but again, going back to the point of that, the fact that there is lack of awareness, by educating and having that financial literacy aspect in play, there could be a big future and a big market, especially in the MENA region. And the fact that they take advantage, especially you guys from this field, taking advantage of the young tech-savvy population as well. And changing the narrative in general, like Priya said earlier, changing the mentality of how you approach. It's not death, it's life, right? So just shifting that narrative, giving that comfort, making it more of a goal or target based rather than just putting it all in one place.
Absolutely. So just to conclude now, three things that we want from what we discussed with the panel as takeaways for insurance companies in the region. Number one, protection and savings is not just about mortality. It's all about life savings, which lead you to better life. Number two, new age products for an increasingly digital savvy and younger population in the region is absolutely paramount. And number three, contextualization of the products. Products that work in other markets for tax shields and other purposes may not work here. So contextualization from a Takaful standpoint and customer needs standpoint is absolutely imperative. But the future of protection savings, ladies and gentlemen, in the region is very bright. Thank you.
Thank you so much for this insightful panel. I think it was the right place for you here, right? Absolutely. We need more of this. Thank you. Can we do a photo together with me?
Thank you very much.
Next year, more Okay, cool. Thank you so much. Yosh, what an ending of a panel, right? Consulting like, it was very good. Thank you. Good. Guys, we have 2 more sessions, each something like 10 minutes. So I think it's worth it to stay. You have to see this. So next up, you've seen yesterday, show and tell. Actually, we have a couple of companies showing what they have done, and I think everybody can learn from it. So next one I'm really proud of because it's part of our own team. And we're sharing the building to each other, QLM and us and Innovation Floor. So I know that they're doing. They're really, really good at it. So please come on stage, Vi and Jayad. Let us hear what you're doing together. Thanks. 10 minutes, huh?
Good afternoon, everybody. I mean, we'll make it 10 minutes. We'll do our best to make our friend Lars happy. I think the best decision, as mentioned yesterday by Mr. Fahad, that the best strategic decision that has been made in QLM is to transform into AI. We started a sort of pilot phase with our partners, Builder AI, which is the mobile app. He will highlight the features and what we have done. Then I will tell you what's the future of what we will do with Builder AI. Please, Vahi.
Thank you, Jayad. Yeah, I think maybe it's always, I know we have a limited time. I think it's important always to think about where all this started and, somehow what sparkled the starting, of the collaboration. And somehow what you can see on the slides here are probably, in fact, the 4 key pieces that have been the catalyst of why changing, why bringing something new in the marketplace. And they might be, in fact, very common to many environments. But for sure, when you think about the weight of the legacy, most of the time, this is one topic that comes in many conversations. How much, let's say, we can scale from the legacy that we have? How much, let's say, agility we can bring from the system that we have? Should we transform and change everything that we have, or can we do step by step or phases by phases? And of course, we are in this topic of AI, but we know also that the AI, for the sake of AI, is not going to bring any solutions. I think very quickly the mindset of AI, bringing some business outcomes was the #1 focus of QLM, in the conversation. And of course, something that you want to be, ready for a long run. So, Jayad, I think that was the key piece that, we have seen in the beginning. Now, if you think about what has been developed, it has been very much developed on sometimes what we can call the weak signals, the signals that, most of the time you don't listen to. But the weak signals come from your employees. Sometimes they come from your customers, and both of them. And most of the failures are because of the lack of ability to take this information and to translate them into a solution. And so when you look at the challenges that were discussed with QLM from the very beginning, you can see a very interesting, piece of stages. First of all, most of the issues were associated to the fragmentation of the information, right? And this is again very much taxing the customer experience, frustrating actually the customer experience in the very beginning. Most of the time, very much, the treatment were manual, and therefore, because they were manual, they were taking a lot of time and, with many mistakes. So you can read most of the thing. The key solution that came up, from the conversations you had, and I think, you have been very much involved in many of these advisory, was very much to find out, a united platform that really have a seamless integration left to right in terms of, let's say, the customer experience, but even more to the employee experience, the ability to cross-sell and upsell, recommend some, let's say, potential new features or new environment. That was a critical piece of agility. The other one piece was how we can remove all this manual treatment and the ability to bring this OCR and being able to read the ID and to immediately connect all the pieces of the information from an ID perspective was a key breakthrough in the way this solution came up. The other one piece is that you never do something in the today world in the complete isolation. And so what happened here was the absolutely integration with the the overall healthcare environment. When it is an Apple environment or Google environment, how much all these devices that people use every day are also connected into the experience that you have using the QLM mobile app in information. So this being said, also the health of everyone is increasingly, important. When you think about obesity or diabetes, in Qatar, it's something that, how this type of application helps the population get more aware of how to, be healthier in the future. And we have that great discussion earlier on in the day. And so these type of tips, in order to better, eat or better, vibe is there also as part of the application. The other one thing is that, to some degree, the notion of how things evolved and, how quickly you need to involve and, all the application and the requirement in the new application was part of the thing. I don't know if you want to add anything on this statement. So I think the key piece in the partnership between QLM and Builder AI has been the co-creation. I think it's from the very beginning where we started to think about what's the assessment of the situation. And then, what's the picture of perfection? Somehow, what are the key assumptions? What do we want to be? What QLM wants to be known as a unique value differentiator, and not only today, but in the future. And so we have done, I think, I don't know how many workshops, in order to come to the point where, yeah, that's exactly what we want. And, sometimes it's like when you build a house, you have two types of families, the families who know what they want and the families who don't know what they want. And so you talk to a builder and you talk to an architect, and the architect, is helping to bring, in fact, the two parts of the, the picture of perfection. And I think that's what we have done, in the context of Builder AI and QLM, trying to find out what is the user experience that we want today, but what is the invention of the user experience of tomorrow, and be ready for that. So, the application, I think you have seen, many of you have seen it. It works not only for, of course, Qataris, but also for, tourists and, visitors, and the ability to have a seamless, let's say, experience across the board. And obviously, we have already new ideas on how to evolve that piece in the future. What I would say that the key learnings from these experiments, have been that, we need to always embrace a zero regret strategy. There's always you can always postpone the decision to tomorrow. And one of the things I think that QLM partnership, realizes is that, the many of the great companies who fail are failing not because they are not doing the right thing. They are failing because they have done the good things for too long. And I think that's the interesting discussion that we had, with QLM, was really how much, if you want to fail, it's better to fail fast, to be able to understand, are we on the right track or are we on the wrong track? And better realize it in a few days as opposed to wait for a few months is a key differentiation. And so the notion of prototyping, when we discuss with QLM and this partnership, help to visualize somehow is it a good idea or is it a good wrong idea, basically, and I think it's an important piece.
I'm sure it is a good idea. Now, this is what we have done so far, future, and I'm talking about near future. It won't take years. It will take 12 to 24 years to mature the system completely. We all know the complexity of the current IT systems, who are mostly administrative rather than a smart tool to help the staff of any insurance company in general, and in particular a health and life insurance company. The amount of claims that we process daily is between 5,000 to 6,000 claims daily. So imagine the human force that we need to process this amount of claims. In addition, such amount of claims will open the door for human errors, which is normal. Now, with our future, I mean, I'll talk about current. Today, let's say on the underwriting side, we receive an RFP from a client asking for a proposal. We will ask him for the Excel sheet of the employees. Then that Excel sheet is uploaded into the current administrative system. Then the underwriter is calculating the appropriate price based on many factors, loss ratio if the policy is a renewal, age, nationality, gender, many things. With AI, it won't be the case. I mean, even the client does not need to contact us directly. He can go online, create a username and password with a simple KYC, just to make sure that it is an existing organization. Then he will design the benefits that he needs for his corporation, and the system would calculate accordingly. Now, up to a certain threshold, we'll keep it fully automated. More than that, it will go to a human underwriter just to verify quickly. Then it will be released to the client through an email. So it's a matter of seconds between request for proposal and receiving the proposal. On claims side as well, today we are receiving reimbursement claims as well as direct billing claims from hospitals and network. This is taking big amount of time and effort to process and to keep our commitment of paying these claims either to hospitals or to members. With the future, it will be again instant. Reimbursement claims will be automatically read by the system, verified against benefits and treatment, then sent to finance for payment. For hospitals, it is an advantage to them because their claim, the system will be connected to the doctor's desktop. So there's no need for the hospital to send these claims to the insurance team to key it into our system. No, it's reading from doctor's desktop to our system, and the claim is instantly approved or rejected. So our finance will have visibility on what should be paid. We will get rid of the, to me, overestimation sometimes by our actuaries to the reserves, and it will improve our bottom line in the future. So this is just a quick idea about what we are planning to do. And again, that would be very near future. It won't take long. Phase 4, once we go into phase 4, we will go even deeper into preventative health. The system would read our customers' data, and based on that, will design a customized individual health plan to make their life better. Product development, again, the system based on the behavior of the data and the members will suggest products to be developed. That's on medical side. On life, it will go on the same stream. So hopefully in 2 years' time, the entire platform of QLM, including operations, finance, HR, compliance, everything will be AI-based.
Amazing.
To the time.
I think this was a perfect ending point. It will all AI and in 2 years. It's a bold move, right? 1, 2, 3, 4 steps and in 2 years. So we don't know how the future look like, but I wish you and us good luck with it.
We know.
Yes. We know. Thank you very much for being here with us. Yeah. Of course. Can we have one photo together? Okay. Yes. Thank you, guys. So, the last short thing, but it's really important, right? What we want to talk now is we obviously have our partner MICT, and they have an initiative. It's called Scale Now. They're helping startups to grow to the next level. With an unbelievable strong support, and we're very happy that you're having with us. Yeah. So Reem, please join me on stage. Yeah. And let us hear what you're doing. Thank you. And this is the last thing. So after this, I'm closing. We're getting T-shirts, and everybody goes home. So Reem, all is on you now. Thank you very much.
Hi, everyone. My name is Reem El Hashmi from the Scale Now team at the Ministry of Communications and Information Technology. And I'm here to introduce to you guys our program, Scale Now. So what Scale Now is it's the first of its kind scale-up program here in Qatar. And it's designed to empower entrepreneurs with the tools and support they need to thrive locally. And sorry, do you have a clicker? Fine. Okay. To thrive locally and expand and scale regionally and globally. Okay, so we do this by focusing on mainly 3 pillars. The first pillar being the capability building and mentorship, where we work with founders to help them build the capabilities they would need to to ensure their transition into scale-ups and their readiness to scale. And these capabilities include strategy, operations, finance, product, and leadership. And our second pillar is the local go-to-market support, where we assist companies with their local go-to-market strategies by connecting them with companies for their pilot opportunities. And this is where the companies benefit the most from direct engagement with market leaders. And our third core pillar is the expansion readiness support, where we facilitate, where once we have built the solid foundation locally, we help them figure out which markets would be the best for them to expand into, and this helps them. So the program starts off. It's a 6 months. It's designed to be a 6-month cycle. It starts off with a very rigorous sourcing and selection process, and then it's at kickoff. We start off with the discovery and assessment phase, where subject matter experts they sit with the startups, with the companies, as their growth stage companies, not startups, and figure out which areas, where their gaps are in the key dimensions, such as strategy, finance, operation, product, and team. And the goal of this assessment is to find their gaps, their scalability potential, and their strengths, and also the priority areas for improvement. Following the discovery and assessment, we have the capability building phase, where we provide the companies with modules, with the modules they would need for the capability building phase. So these, as we've discussed earlier, are the strategy, operations, local go-to-market strategy, the expansion planning. In parallel to this, we have the expansion investment readiness, where we connect our companies with the different corporates for the pilot opportunities, as well as get them ready and introduce them to different investors for to support their funding objectives. So it's designed to be a 6-month program. We're currently in the process of wrapping up the first cycle and hopefully launching our second cycle with the cohort of 15 companies. So for each cycle, we have a very highly vetted selection process to identify which companies are best fit to join our program. They have to follow the following selection criteria, where they have to be mature companies that have already been registered in Qatar. They have to be founders and full-time CEO, fully committed, with a solid team. They have to have an already established product in the market. They should be able to sustain their operations for at least a period of 6 months and primarily focus on expanding in Qatar with plans for regional and global expansion. And it's important to note that Scale Now is sector agnostic and welcomes companies from very diverse, from various industries, but it should align with MCIT's key focus focus areas, including digital solutions, AI-driven innovation, and emerging technologies that contribute to Qatar's digital transformation. So during cycle 1, we've had 6 companies. We had Mazad, Skip Cash that were here in the local startup pavilion. We had MS Systems, ADGS, Bonix, and ClassTap. Throughout the first cycle, we've successfully delivered over 163 hours of tailored mentorship. We've involved over 17 industry experts. We've facilitated around over 3 partner introductions and had great positive feedback from our participants. So we have our program works with global market leaders and global mentors, entrepreneurs in residence, and subject matter experts that either facilitate group workshops or one-on-one mentorship to the companies. But if you have any questions, you guys can find us in our booth, MCIT booth.
Thank you very much, Reem. I think it was a really amazing performance. Yeah, you will think about it, but it was really good. Thank you so much. We want to take opportunity, being here on stage, to thank you and the ministry. Too many mics here. So thank you so much for your support. Really appreciate it. And I really want to do this next year, but in a bigger scale with all of you. And hopefully we have major companies that we can include. So thank you, guys. Having said this, what a journey. It's not 2 days for us. Yeah, it has been months of working. And this year it was really less months. We usually have 3, 4, 5 months working on it, but this year we didn't have. Yeah, we had the Web Summit in between. It is a really important event for Qatar and a really important event for us. So I'm very happy that with the outcome. I believe we got a lot of positive feedback. A couple of people that actually said a couple of things that we need to learn. We always learn, and people in my team know that I'm like this. You have to learn with me. So we have learned. We will do it differently, better, maybe bigger. Let's see for the next year. I thank you all that stayed with us. I thank you for the passion, for the conversations. I have seen investments coming up. I've seen business opportunities coming. And this is why we do this. Meaningful conversation that lead to something. It's not just show. It's about this is what we want to do. So thank you, everybody. Coming to the end, I want to ask, because you have seen me too much. You haven't seen the team behind the curtain. I want the whole team working with me on stage now. And I want to follow with all of you. Please, Nada, you're the first. Ravan, second. Atul, Zia, our amazing PR team, our students, please join us. Yeah, Harmon. And please, yeah, this is what we need to do. Because LAS is nobody without those people that don't sleep, they work endlessly. Okay, please join us. Thank you. Guys, don't be shy. The people are waiting for t-shirts. So I need to get Osama, I need you on. There's no excuse. I have no excuse with you. Unit shows me. Unit you're on. Okay. Anybody missing? Guys, can you arrange us that you have a proper photo with us? Okay. With everybody?
Gone from the days of trading gold to what I've been taken to try to behold. Today we take the time out, give your clients a way better deal. Take that show and cost a lot, compliance that is standard time. The fastest way.
Okay, so I know we did the photos, dear team, but we promised T-shirts to the teams on site here. So I need help, please. I can't do it on my own. So what we did, there's no lottery. So what we will have, I think we have 2 big boxes. Team will get 2 boxes over here. I don't know how that will be done, so I didn't think about it. I just said T-shirts, yeah. So maybe they have a clue how to make it, but I know that we have black T-shirts and we have a couple of blue ones, yeah, and the different sizes. So I would suggest it's really the end of everything. So you just come, you stand up, you come, and whoever wants a T-shirt gets a T-shirt. Okay, I hope it fits. Yeah, so no giving back, just this T-shirt. Okay, and it's the end. You will not hear me talking anymore. So thank you. See you next year.
It's Finnove. It's Finnove. It's the lovers in the road. It's round the world. No matter of time to pass what's it's breath. So now you're here. Walking tears. With the systems that excite us. We'll take it those brand new highs. Small miles ahead, brand new fucking high to invest. Gone from the days of trading gold to what been tech. Let's try to behold. Today we take the time out, give you clients a way better deal. Take that show and cost a lot. Compliance that is standard time. The fastest way. What's gonna change now?